Hi and welcome to the presentation with Diös and Knut Rost, the CEO of Diös. My name is Christian Berner and I'm head of research department. So today we have an exciting day with many presentations and especially real estate we think is truly exciting to listen about. So Knut, the floor is yours, and after the presentation we'll keep on for around 20 minutes. We'll have also a Q&A. So welcome, Knut.
Thank you very much and good morning everyone and welcome to this presentation of Diös Fastigheter. My name is Knut Rost. I'm the CEO of the company and have been here since 2014. I'm going to give you a brief introduction of Diös and our market, followed by comments on the current situation, ongoing trends and the latest result. I will then summarize why you should invest in Diös. If you have any questions, as already mentioned, there will be a Q&A session in the end. You can always reach out to us. Details are on the last page of this presentation or on our website. Let's turn to page 2. We are the market-leading real estate company in all our 10 cities. We have a property value of approximately 24 billion Swedish crowns, 335 properties as end of September, and approximately 1.5 million square meters leasable area. Our main focus is within offices, with comprise 53% of the portfolio. But we also have a good spread of premises in residential, urban services, logistic, education, and healthcare. Excuse me, my computer is a little ahead of me. We have a clear concentration towards CBD location and properties with high yield and attractive features, like the last acquisition Flottabyn in Umeå. Our market-leading position, CBD focus, and a great mix of premises make us perfectly suited to create value. We have a great diversification regarding geography, number of tenants and type of premises. We have all our exposure towards 10 regional cities with growth. We have chosen these cities because they have great universities, a close cooperation between business industry and local authorities. They have ambitions to grow further and to have and maintain a good infrastructure. We have local team in each city, making us very close to the market, which is a key difference compared to many of our competitors. Since the start in 2005, we have a great development, growing income from property management by 10% on average. We now have 3 areas of revenues: property management, project development, and transaction, which gives us a new dimension. Let's go to page 3. It has been a turbulent year, and when COVID-19 hit the market, we got a new reality to manage. We have been successful in navigating in this circumstance, but by living very close to our tenants. Value changes has been positive during 2020 concerning offices and residentials. Yields are lower today than in the beginning of the year, which shows our strong market. Retail values has been negative due to lower expected rental level. There is a trend within offices that has been going on for some time, that location, design and flexibility is key factors for tenants, from both private sector as well as from the public sector. Your office is a meeting place, an important element to recruit and retain employees, and place that should be inspiring and create innovation and growth. Something that I think we all have seen during the pandemic is that the lack of physical meetings affects the creativity. Residentials have a steady demand, and what is increasing is the demand for even more centrally located apartments with more floor area. We talk more and more about a 10-minute city. Everything, school, preschool, grocery store, gym, work, should all be within 10 minutes from your home. That makes us want to put even larger share of disposable income on your rent. While high street retail facing headwind right now, I'm convinced that retail is one of the key elements for the city centers now and in the future. Of course, it will change and needs to adapt new demands. But a lot has already been put into motion, and the pandemic has accelerated the speed of change. The regional cities are winners concerning all these trends and changes in demand. We have only one city center in each city, where we are a major property owner. Due to the size of our cities, we do not have the issues with crowding local transportation like in Stockholm or London. We have many benefits in our cities like well-developed infrastructure, affordable land and housing, great environment, outdoor activities and so forth. Many features that are requested today. As an evidence of the strong market, you saw your net letting for the interim period amounted to 42 million Swedish crowns. Many other Swedish real estate companies presented negative figures. As a result of increased efficiency within the operation and on the energy side, we presented the highest ever surplus ratio, 68%. It shows our investments measures creates a property portfolio of higher quality. Let's turn to page 4. We are not only a well-diversified real estate company looking at the portfolio, but we also have a great diversification in our value creation. We have a target of growing the income from property management by share by 10% per year on average over a 3-year period. We will reach our target by contribution from all 3 sections. First of all, property management. We target lower vacancies for coming years. We have very good tractions in our new leasing. A percentage point in reduced vacancies give approximately 20 million Swedish crowns in additional income. Renegotiation has a great potential. 60% of our lease contracts are up for renegotiation next year, and especially office rents have been on the rise last couple of years. If we go to the second, talking about project developments. We have 6 ongoing projects and 4 to come, each with an investment volume exceeding 100 million Swedish crowns and a total capex of 2.2 billion. The first to be finalized are the residential in Össur, where new tenants are moving in as we speak. It gives a cash flow of approximately 7 million on a yearly basis. The majority of the cash flow from those projects will come in 2022. We are putting more focus into how to activate our building rights. We have approximately 170,000 square meters building rights unused or in early stages, and we are exploring possibilities to create value by divesting or by starting construction. All those building rights are in the city center of our 10 cities. Transactions. Increased activity within transaction will help us reach our growth target. By acquire right-yielding properties within offices, residentials, and with government-related tenants, we can maintain our yield gap in the portfolio. The focus will not only be in the CBD location, but will also focus on finding locations that are attractive for the tenants. By divesting properties with limited potential or outside our main expertise, we free resources. Our goal is, of course, to be net buyers for the years to come. Let's turn to page 5. As you can see, we have low tenant concentration risk. Our 10 largest tenants account for approximately 16% of total rents. 78% of the rental income from our 10 largest tenants comes from public-related tenants. 31% of our total rental income comes from tax-financed operations or companies. The average lease duration in the end of Q3 was approximately 4 years. We are, as I said before, well diversified with relatively low exposure to exposed sectors. But there is a great uncertainty in how long the spread of infection will continue and what the long-term economic effects will be. Page 6. Our loan-to-value ratio at the end of the period was 55.2%. The difference is due to increased lending to finance our ongoing developments. The interest coverage ratio is among the strongest in the sector, amounts to 6 times. It clearly shows the strong cash flow from operations and a low interest rate. Our net debt EBITDA is stable over time and amounts to 11.5 times. This is clearly below the average for listed Swedish real estate companies and again shows our strong cash flow. We have a clear ambition to prolong both the long duration and fixed rate terms. Due to very attractive conditions, we foresee that this can be executed without affecting the average interest rate so much. The timing is right. Page 7. There's a clear trend that investment volume has increased in recent years. We become a more complete real estate company as we also add new productions and construction to future earnings and cash flow. We currently have about 100,000 square meters under production with an investment volume of about 2.2 billion. The positive cash flow effect will mainly come during 2022 and 2023, which will also have a positive impact on other key operating figures. Page 8. On this slide you can see 6 of our major ongoing new productions and constructions. Worth noting is that 50% is pre-let to public tenants, marked with a pink symbol. None of these projects have any elements of speculations. They are all 100% pre-let. The residentials in Östersund are about to finalize as we speak. It will add 7 million to our operating surplus. The big lift, as I said before, will be 2022 and 2023, where developments adding 80 million to our surplus ratio as they will be completed. So, to page 9. To summarize and conclude why you should invest in Diös. We are in a unique position. Being the market leader in CBD location with our local teams, we take advantage of the underlying growth in our cities and create growth by ourselves. We own and manage properties with an average yield of close to 6%. With our low interest rate, we have one of the largest yield gap in the sector. We have a great diversification among our tenants. 31% of the rental income comes from public-related tenants. 8% from residential, making the revenue streams very stable. We have now 3 streams of revenues: property management, project development, and transaction, creating stability and also many synergies and possibilities. We target to be net buyers of properties coming years. Last but not least, we have our project portfolio that will not only create economical value for us in the coming years, it will also help the cities to grow and make them even more attractive. Thank you all for listening for this short presentation, and now we have time for questions, I think.
Yes, thank you very much, Knut. Very interesting presentation. I have a few questions for you, and I think we could start with if you look at your loan-to-value situation, you have had a higher ratio in the past. Regarding that level, is that a comfort level for you, or is it so that you open up for higher levels, and what level should that be in that case? If you're looking for acquisitions in order to maybe increase your leverage somewhat? Is it 55, 60, 65, or where do you find your level, comfortable?
We will be comfortable around 55 as we are. As we have said that we have an ambition that we will not exceed 55 and probably be around that figure. So we think 55 is good enough, and we have about 7-8 years ago, we had a percentage about 70% loan to value, and we have worked that down to 55, and we are pretty comfortable around between 50 and 55. So we think that 55 is good.
And the current corona situation, which of course hampered the growth this year for Sweden, and also of course the northern part where you have the most exposure, do you see that for you as a strong real estate company open up for opportunities? There is less competition now than it was in the beginning of 2020?
Well, close to all the listed company are somewhat in our cities, so the competition is rather strong. That we can see is that very, very clear for us is that our regional cities, as well as regional cities in all Sweden, have a very strong profile that suits the future. So to speak, we don't have this crowded commuting situation. We have a density of people in our cities that seems to be a good profile now and in the future. So we find ourselves in a good position for the future and the near future.
Okay, and we talked about the office. You have around 54%, but as you said, the counterpart is mostly public. Of course, and you have a long contract for them. But what do you see? Is it maybe too early to say how that will, due to the corona situation? Do you see any changes regarding the discussion with the public counterpart on your contracts? They differ, of course, from the more commercial side with companies. Can you give some flavor on that one?
No, not really. We see them as tenants in the office sector, and both the public tenants and the private business sector approximately look the same. The things we can see is that we don't see any shorter lease contract. We still write contracts between 5 and 10 years. We have we have the Swedish pension authority that a new tenant in Luleå, where we're going to build a new construction for them. We see a high rent. We see a 6 years lease contract. So that's one proof of the strong market. And we also see where we in Sundsvall have a new lease contract with Tele2, a private business, who wanted to have a premises that was a B location for retail, and for them it's a really A++ location for their office and the service they are providing. So we see a really strong market both for public tenants and the private sector.
And when you mentioned Tele2 and the conversion you did, 3,800 square meters, is that something you will see to continue also, that there are more conversion from retail to more office space? Is this a structural trend you see that you will work on more?
Yes, it's very clear that the B and C location for retail in the cities are going to be converted into something else. It could be healthcare. We have you will see in a few weeks that we have a new lease contract concerning healthcare, and we have the typical symbolic Tele2 lease contract where we see a good developing lease figures for B location for retail that's going to be A++ for offices. So I think this is a very specific and very focused trend for the coming years. Yes.
And perhaps then the final question. I think investors look at Diös, see you as a company with stable counterparts. You have an exposure to the 10 cities, as you mentioned. Is it something that will be the focus forward also, or could be some new steps that we don't see coming currently, or will it still be the same?
I always get that question, and everyone asks me, you are so good in the developing city, why are you not going south like Västerås, Karlstad, Örebro, Jönköping, Växjö, and so forth? And maybe we can see that in the future, but not just now, because I think, I'm convinced that you have to be focused and you have to be very skilled on the markets you are working in. You see other companies that go into to Europe and the Nordic countries, but we see so many so prosperous times in our 10 cities. So we stay focused on these 10 cities for now.
Okay, thank you, Knut. I think that was all from me. Thank you for your presentation, and yeah, thank you very much.
Thank you very much. Bye bye, everyone.
Bye.
Micken, så, och vill ha, kan vi rulla något där, eller?
Jag ska göra så här, jag stänger det här.
I just kind of handed the paper over to this guy, and he said, just come.
glas vatten härifrån. Tack. Välkomna tillbaka till ABG Sundal Collier Investor Days. Viktor Kryger heter jag är fastighetsanalytiker här på ABG. Och nu tänkte jag lämna över till 20 minuters presentation av Trianon med efterföljande Q&A, 5 minuters frågestund. Då har vi Ann-Louise och Nina på Trianon.
Marie-Louise och Nina.
Tack.
Då kör vi.
My name is Nina Gilliam. I'm head of communications and IR at Trianon.
And my name is Marie-Louise Hedbys and I'm the CFO and Deputy CEO of Trianon.
Good morning. We will take you through a brief introduction to Trianon with a few words on our performance the last quarter as well as the past year's performance, some insights in our strategy and our sustainable work. Next page. Trianon's business concept. Trianon is a real estate company that owns, manages, develops and builds properties in Malmö and its surrounding municipalities. Through closeness and a strong customer orientation, we strive to contribute to a sustainable urban development. Trianon was acquired already in 2006 by our CEO, Olof Andersson, and at that time, Trianon consisted of only a few properties in Skåne. Back then, the property value was 200 million SEK, and today the property value is 9.4 billion SEK. We are 67 employees, and since 2017 we are listed on Nasdaq First North Premier Growth Markets, And we are now planning for our next big step to enter Nasdaq Stockholm main market. Next page. Malmö is growing year by year, and Malmö is Trianon's main market. The Össur region has more than 4 million inhabitants, Malmö 340,000. It's a well-functioning infrastructure here with Öresund Bridge, for example. Almost half of the population is younger than 35 years. And Malmö has 182 of 189 nationalities. It's a university city with a high level of education, and it's an ongoing housing shortage. There were actually 80,000 persons in the housing queue at Boplats Syd, southern Sweden's municipal housing agency. And Malmö is continuing to grow. The city is actually planning to become 500,000 inhabitants in 2047. Next page. Trianon today is operating with its main focus in Malmö. However, this year we acquired our first rental properties in Skurup and Burlöv. That's municipalities outside but very near to Malmö. In our property portfolio, we have 75 residential properties and community service, and only 25 retail and offices. Our goal is to reach 80% residential and community service, and we are actually on our way. As you can see on the map, the properties are mainly located in the south, with Hermodsdal and Lindängen, and then in the city center, and Limhamn, Slottsstaden, and Oxie. The property value, as I said before, is 9.4 billion SEK. We have 84 properties, almost 4,000 apartments, and we finished 144 new constructed apartments this year. And we have actually 700 possible constructions in front of us during 1 year now. Next page.
Some significant events during last quarter, the third quarter. We raised some capital during the quarter. We made a new issue of 1 million shares and increased the equity with 115 million before transaction costs. We also made a tap issue of our sustainable hybrid bond of 100 million, and that we did in connection with one of our acquisitions that we did this year in September. And the framework is now fully utilized of 500 million. And these two transactions gives us the possibility to continue to expand, both with our project portfolio, where we can start 700 apartments next year, and also to combine both green and social investments in our areas. We also made an agreement with a company to sell 50% of a project that we have in Limhamn of a property value of 75 million SEK. We are going to build a tenant-owned apartments, approximately 150 tenant-owned apartments in Malmö's best location in Limhamn. Next page. We also inaugurated a new solar cell park together with E.ON in Skåne, and from this park we are going to buy solar-produced electricity, and that is one step closer to convert to renewable and sustainable source for energy production. And we made a commitment here to buy electricity for 10 years. And we have continued our renting with our net letting, and that is positive despite having a COVID quarter. And our net letting amounted to almost 3 million this quarter, and accumulated this year 7 million. And in the third quarter, we had really a strong demand for residential properties in this region as well. And this led to a market yield shift in the residential segment. And therefore, we recorded changes in the value of investment properties to a positive of 217 million, but the yield is still booked at 4.5% in our property portfolio. Next page, please. All of our figures this quarter and also last quarter, we had very good figures on all levels actually. So we delivered a growth in rental income with 21%, and the net operating income increased with more than 21%, 27% this quarter, and also the profit from property management increased with 26%. And this is very positive because then we know that we have a good cost control in the organization as well. So the profit from property management amounted to 68 million. The net profit for the period was 230 million, and this equals 5.93 Swedish krona per share. Next page, please. As Nina told you, we have a property value now of 9.4 billion Swedish crowns, and the increase with 27% is mostly due to the acquisition that we're going to tell you a little bit about later, and also the value changes in the residential properties. And we have a net asset value of 3.6 billion, and that means per share 95.62 if we're excluding the hybrid capital that is booked as equity. We had a loan-to-value ratio of 55.4% and an equity asset ratio just below 35%. Next page, please. We have an average loan maturity that is just below 1 year. And we actually, during the spring, we made an offer to buy back one of our senior unsecured bond in the market of 350 million. And we had bank financing in place to meet the unsecured bond. We received only in the offer to buy back 22 million, so we're actually now keeping it to maturity, but we're glad that we were able to have bank financing in place during the second quarter. That was to meet the maturity of our bond in February next year. And the average interest rate of 2.2% is going to be lower after February next year, when we're going to replace this unsecured bond with bank financing instead. Next page. Our financial targets. We met all of our financial targets both for 2019 and 2020 in the third quarter, except for the last one, where we are still working with increasing the share of residential and community services properties in our portfolio. But we set these goals 1.5 years ago, that we're going to increase the profit from property management with more than 12%. And after the third quarter, we increased it with 26%. Our return on equity, we would like to have more than 12%. And in the third quarter, it was amounted to 29%. Our loan-to-value ratio, we have a target to be below 60%, and there we have a margin. So we were at 55% both in 2019, and we have the same ratio now after the third quarter. And the interest coverage ratio, we're also exceeding our goal. We would like to be above 1.5 times, and we are now the double at 3. So the only target that we're still working with is the share of residential and community service property, where we have 75%. But everything in our strategy is continuing to expand by either buying or building residential properties. So we're working on that ratio. Next page, please. And this slide is showing the current earnings capacity. We are increasing the rental value all the time, so we have a rental value now of 644 million. As you can see, we still have discounts and vacancies that are mainly related to our Entré property. of 34 million. And we have the possibility here, if we are successful with filling our vacancies, to increase the current earnings capacity per share from 6.23 to 7.14. So this is a main focus area for us. Next page, please.
In 2019, Trianon issued the first sustainable hybrid bond in the Nordic market. We issued 400 million SEK to be used within our sustainable bond framework with both social and environmental investments. Among the social objectives are creating jobs and internships, create affordable rental apartments, create safe environments where people want to live and stay. It's an all-over objective of increasing well-being in socio-economically weak areas. Environmental objectives are such as in order to reduce the overall climate footprint, we're improving energy efficiencies and invests in renewable energy such as solar cells, as we told you before. And all activities are connected to the UN's SDGs with the focus as you can see here. Next page.
Our segments, our residential segment are valued to a little bit above 6 billion, and it's got a yield of 4.3%. We have almost 4,000 apartments and 13% of them are newly built, but we have a great potential here. We have 65% of our apartments that has the possibility to renovate, and our goal is now to renovate about 200 apartments per year. And our business model, it's quite simple. We have an average investment per apartment of 300,000 Swedish crowns, and after the renovation it's valuated to 500,000 per apartment, so an increase of value of 200,000. And as you can see, if we have 65% potential, we have about 2,500 apartments still to renovate. Next page. Our retail segment is valued to 1.8 billion and with a yield of 5.5%. Here you can see on the occupancy rate that we have an occupancy rate of 88%. So we have some vacancies here and they're mostly related to Entré. But we are not so worried about this segment anyway, because we have a large share of tenants that are grocery stores, pharmacies, we have Systembolaget, and we also have community service here. We have in Entré also entertainment, we have sports centers, and of course restaurants has been struggling now during this year, but we have a large share of other tenants in the retail segment. And we also have Rosengård Centrum is one of our retail properties, and also we have a lot of properties in Limhamn that are fully letted and are performing very well. Next page. Our community service properties, here we have a property value of about 870 million, and they're booked to a yield of 4.8%. And here we have tenants as City of Malmö, we have libraries, we have the immigration service, we have healthcare, and this is a segment where we actually want to increase our share. So next page. And the smallest of our segments is offices, and we're sitting in front of a picture actually of one of our nicest office buildings in Malmö. And we haven't bought any offices since 2010, and we will not do so unless it's possible to convert them to apartments. But we have a very high occupancy rate here and very central located properties close to the central station. Next page. I think we'll do next page as well. because I wanted to tell you a little bit. We have been very active in the market during the first 9 months. We have bought 600 apartments for about 1 billion Swedish crowns so far this year. And they're located in Malmö, in central Malmö, Limhamn. And we also made our first acquisition outside of Malmö, where we bought 300 apartments in Skurup from the Skurup municipality. And we also made one acquisition in Burlöv, the first one in Burlöv. These locations are very close to Malmö and on commuting distance. Next page. The product portfolio is one of our most important focus to grow. We will construct 700 apartments within 12 months. Next page. We are proud to build our second library in Malmö. Next time it will be the Rosengård Library, which is the most visited district library in Malmö. In the pipeline, there's also a plan to build apartments and community service on a surface of 100,000 square meters in Rosengård Centrum. Next page. Further with apartments, we have the total 700 apartments and quite centrally located. We have apartments to build in Hyllie, Sorgenfri and Segerpark. And these we will build with investment support from the state in order to create apartments with affordable rents. Next page. Outside Malmö, Burlöv municipality. Here we received allocation of land from Burlöv to build a new rental house with community service, with sport activities. There are 150 apartments here. It's very close to Malmö, with only 5 minutes away by train. Next page. We will reconstruct parts of the Entré house in eastern Malmö to reduce vacancies. One of the properties with a surface of 10,000 square meters will focus on tenants in the community service. Next page. The Silos of Limhamn, it's a well-known landmark. This is property we earlier told you about, where we have an agreement to build 150 apartments with a spectacular view on Össur Bridge. Next page. And our focus areas ahead. We are going to continue to reduce our vacancies. We have already signed 30 agreements during this year, and that's more than last year. And our net letting is positive, and this is the main focus area for us to continue. We have a very active strategy regarding acquisitions. We evaluate everything on the market in our focus areas.
Marie-Louise and Nina, I'm sorry, I just have to cut you off there.
Yeah, okay.
But thank you and congratulations to continuously strong development of your property portfolio and business. And I think you've repeatedly shown that you've met your goals and really developed a stable property portfolio. This is in Malmö though, so now you've actually expanded outside to Burlöv and Skurup that you were touching on. With that, could you walk us through your acquisition strategy and what you're mostly looking at when acquiring new objects?
Yes, as we said, we are very active. We have a very active acquisition strategy. We focus on residential properties and evaluate everything that is for sale on the market. And of course, it's good if the municipalities are attractive, they are growing, with locations near a train station, for example.
Okay, so train station, attractive locations.
Yeah.
Good. And can you say anything about the average rents in Skurup as well as in Burlöv?
Of course, when you're buying outside of Malmö, they're a little bit lower than the average rent that we have in Malmö. In Skurup, for example, we have a good potential in that portfolio to renovate. So there are possibilities, renovation possibilities in Skurup, but they are lower than in Malmö in average.
So just about 1,000 krona square meter?
Yeah.
Yeah. All right. Thank you. And I mean, you've developed really strongly on the, your share has performed well in accordance to the good results of the company. Could you list 3 factors that you think talk in favor of Trianon going forward the next year?
Yes, I think that we didn't really touch this project portfolio more than briefly, but I think that that's really important for us because we have the possibility to start 700 apartments during next year, 2021. And that's, we get a better return if we're building and then we receive about 5% than buying and with the yields that are so low in the Malmö market, that are between maybe 2.5% to 3.5%. So I think that creating long-term value, we're going to continue to do, to build.
And do you see any objects now outside of Malmö that could be taken in the coming year?
Yeah, yes, we had a positive decision in Svedala that maybe you saw, that the municipality there wants to sell 200 apartments plus building rights to Trianon. So that is something that we're going to continue to work with next year.
All right. Marie-Louise Hedby and Nina Gilliam, tack så mycket för att ni lyssnat in. Thank you for the audience for listening into the presentation as well.
Okay, thank you very much. Regards from Malmö.
Welcome back to the ABG Investor Days. My name is Johan Brown, a retail analyst here at ABG. We now have the pleasure to welcome Fiskars and CFO Sari Pojonen to the stage. The floor is yours, Sari.
Thank you, and good morning and welcome also on my behalf. If we could go to the next page in the presentation, please. And Fiskars has a very strong brand portfolio. The brands that you see on the screen right now, they represent just some of our brands, some of the key brands that we work with. But we all in all have more than 3,000 years of brand experience in the company. And the brands that you see here, they represent most of them what we call as key international brands, but I will get back to those in a bit in later part of the presentation. On the next page, you will see our purpose of making the everyday extraordinary. That well also tells about the product categories we play with. It also tells about how we are present in the consumers' lives on a daily basis. Our products are something that the consumer can afford on first of all purchasing for their daily use, and also utilizing them from morning to evening in their everyday lives. This is important to bear in mind when you think overall about the Fiskars business, as we are no longer present in product categories that could be considered as being more like investments. We used to, for instance, have a boats business, but that was divested a few years ago. Boats tend to be, at least for the normal consumers, an investment commodity and not something you would be, first of all, being able to acquire frequently, or secondly, utilizing it frequently, despite perhaps during a certain part of the year. And therefore also this is important for us as a general guideline when looking into what type of businesses we want to be in. So it's all about making presence in the consumers' lives on a daily basis, but not being at a too luxury position. So most of our brands can be considered either affordable luxury, or then they are something where the price points are even more flexible. Looking into the net sales development, if we move on to the next page in the material, this is the split in 2019. In terms of brands, you see the split here. So Fiskars brand is the biggest one for us. And then the other key international brands, which are the next 5 ones mentioned on the slide, they represent 7 to 9% each of the total. So all in all, roughly 75% of our total sales are generated by what we call key international brands. In terms of geographies, you see here the split. It's been fairly stable in the past couple of years, so that Europe is close to 50% of our total. The Americas portion, depending a little bit on the currency rate, is in the ballpark of 40, and then the share of Asia Pacific has been growing in the past years, and we are now, or we were at 13% total in 2019. And the Asia Pacific for us covers also Australia, so Japan, Australia, and more recently China, which is one of our key strategic priorities, into which I will come in a bit. Then if we take a closer look at business area Vita, on the next page please, the key categories there are the tableware, drinkware, and interior. And for business area Vita, as you can see from the graphics on the page here, Q4, so the last quarter always is the most critical in this business. It's about the gifting season, it's about generating a lot of the sales, and also the profitability is geared towards the Q4, as you can see from the graphs. Here we have also mentioned the key brands for this business area. Iittala, Royal Copenhagen, Waterford and Wedgwood are among those. And would be good to mention also that in terms of own retail, which we defined as being both own e-commerce as well as physical retail, own retail covers roughly 1/3 of the business area Vita. So we have close to 400 different physical retail locations globally, depending a lot on the market structure and how each of the markets are typically structured. And then obviously we are present with e-commerce, with own e-commerce in tens of countries with many of the brands that we operate. And maybe related to this year, one could say that what we have generally seen and what I think everyone has seen in the world, that due to the pandemic situation, it hasn't really changed the trend in terms of digital, but I believe it has hugely accelerated the trend how we see the world shaping up. So e-commerce and digital in general is becoming much more important than what it used to be in the past. And of our business areas, Vita is the one business area which is directly mostly involved in that. Obviously, the other two business areas have a lot of digital business as well, but we tend to operate with a little bit of a different business model. If we move on to the next page, where we have business area Terra, the key categories here are gardening, outdoor and watering. And you also see the key brands. Fiskars is present globally. Gerber and Gilmore are more on the Americas market, and US being there the biggest one. In terms of gardening, we have done a lot to improve the portfolio in the recent years. And gardening used to be a business where most of the sales were generated in the spring, and then the season was practically over. Yes, the spring season is still very important, but we have also taken a look at the portfolio, that how can we prolong the gardening season so that it wouldn't be a question of the spring only. And we have nowadays in the portfolio, for instance, products where one can say that you will be either harvesting the season in your garden, and then you also in a way close the gardening season. So that has given us new opportunities in the portfolio, and to make sure that we also see the gardening sales not really flattening during the year, but there is more offering available also after the spring. Watering has been in our portfolio for a few years now. It is a category which is heavily dependent on the weather, whether we want it or not, but that is just a fact of life, and it's reality for us. Last year in 2019, if you compare, for instance, the Q3 data on this slide, last year Q3 was heavily impacted by the weather being wet in the US, which meant that the watering category in 2019 was suffering in terms of sales. On the other hand, this year the weather has been more beneficial to us, and that is also partly one reason why the sales development versus the previous year has been positive, as you can see from the slide. Then if we move on to the next page, which is business area Crea, their scissors and creating tools are part of the categories we play with, and we also have cooking. Cooking is mostly present at the moment in the European markets, but scissors and creating tools are more global for us. Here the key brand is Fiskars. We have other brands as well, but predominantly the Crea business is about Fiskars. And as you can see, compared to the two other business areas, Crea sales are more flat in terms of the seasonality. However, within the quarters, there are always important seasons in certain markets. One of them, which I could mention, is the back to school season in the US, where the system is a bit different from compared to what we have been used to in Europe. So in the US, the parents are taking care of purchasing to the pupils when they go back to school. They do receive a lot of the equipment from the family side, and not necessarily from the offered by the school as we potentially are used to the situation in Europe. Then if we flip on to the next page, you can see here the quarterly development over the last 3 years. I already mentioned that for Vita business, the last quarter is always the most decisive one, and that is reflected in the numbers as well here, especially then in terms of profitability. This year, however, I think we can be very happy with the development during Q2 and Q3. There have been certain challenges related to the pandemic, as I guess every company has been facing this year. But on the other hand, we have taken quite quick measures already during the first quarter, or started to take them during the first quarter, when we noticed in our Asian business that this is something which will remain and will impact us, and is not something that will go away very shortly. So we have been implementing a lot of temporary savings this year. There are also permanent savings affecting the situation. We have two transformation type of programs ongoing. Vita transformation, which was started in 2018 and is expected to last until the end of 2021. And more recently, roughly a year ago in December 19, we launched a restructuring program, which is also ongoing and expected to end by 2021. But some of the results are already visible in our numbers. Then if we move on to the next page on the cash flow development, typically our cash flow is generated during the last quarter, most of it, and that is related to the seasonality of the business. However, this year, due to the pandemic, we have seen somewhat a different pattern in the cash flow, especially related to working capital development, mostly related to our own actions that we have been implementing during the year. But this is mostly a question of timing differences, and thus expected to be evening out as we move along. Then if we take a look at on the next page, where you see our balance sheet structure, or rather the net debt and equity ratio and net gearing development for the past couple of years and the most recent quarters, we have a very solid balance sheet. As you can see from the numbers, there are some changes which took place in the beginning of 2019 related certain accounting practices, and that is a little bit affecting the comparability of the numbers. But as you can see, for instance, comparing Q3 2019 and Q3 this year, which are fully comparable to each other, so the development has been positive in that respect. Then if we move on to the next slide, here we have listed our strategic priorities. These have been in place since spring 2018. We have a little bit fine-tuned some of the wording, but the essence of the priorities remains the same. Growing business, we have mentioned one of our key priorities on this slide here. It's the development of digital capabilities. As I mentioned already earlier during this call, digital acceleration is a key fact around us right now, and we have already for quite some time been working on improving our digital capabilities. That will continue. And from the consumer's point of view, obviously the consumer shouldn't be noticing necessarily what we are doing behind the scenes, and each of the brands, it's utmost important that from the consumer's point of view, we are presenting our brands as respecting the brand essence and the brand heritage, and offering the brand experience in full to the consumer. And that is something we want to cherish and nurture when presenting our brands to the consumer. And each of the brands have their own personality, so to speak, but whatever we do behind the scenes, the more efficient, the better we can be in our processes, the better the experience will be for the consumer as well. So that's an area where we have been focusing heavily in the past few years, and it definitely is high on our agenda going forward as well. About growing business, I would also like to mention a couple of regional priorities that we have. China is a priority for us, and for instance in our Q3 report we were commenting that we have been able to generate good growth there. The baseline obviously is or has been still fairly small compared to the overall size of the business, but we are very happy to see the potential in China. We are there working mostly now with the Wedgwood brand. We have been opening a few physical locations, but China, all in all, as we all know, it's a lot about being able to succeed with e-commerce. So China is a key geographic priority for us. The other geographic priority that I would like to highlight here is DACH region in Central Europe. So there we also have been able to expand our distribution. It's something that's been going on for a while. We first did some rationalizations on how we operate with our business model in central parts of Europe, and now we have more presence there in several countries, Germany obviously being the most important one in this respect. And as we have explained throughout Q2 and Q3 this year, that success is one of the factors that has positively impacted our net sales this year. This type of branding business, it's always about people and being able to inspire the people, being our own organization, being our consumers, being our customers globally. That is one of our priorities as well. And employee experience, for instance, and employee well-being in times like this when people are mostly working remotely. We have been all heavily impacted by the pandemic situation in all of the markets where we operate. From the people's point of view as well, it's extremely critical that we focus well on this one too. Exciting consumers, it's been one of our priorities and remains to be one of our priorities as well. Being able to launch new business models, being able to introduce something different to the market, that is very critical for us. And I'm happy to, for instance, note that one of our most recent business models, vintage business, which we started in Finland a while ago, we have now been broadening the offering to for instance, to Sweden and to some other brands. And this is an example where we have been able to bring something new to the market. We have also been piloting with subscription type of models. And also from the consumer's point of view, sustainability is becoming more and more important. And for us in Fiskars, it's actually a very natural part of our own DNA. And we have been working on that one for quite a long time. But we have also this year launched new sustainability targets as well. And that is very important for one could say, especially for the younger generation of consumers, and something which is part of our key message to the audience today. Sustainability can be many different type of things. It can be new business models. It can be better use of materials or more efficient use of materials. It can be improvements in our supply chain footprint. But it's also about bringing in novelties to the market. So for instance, this year we have been bringing to the market certain products where we have been using either fully recycled materials or most of the materials are recycled, and being better on that front is one of our priorities going forward as well. The last strategic priority here, improving performance, very important for all of the companies, but as said, we have 2 transformation programs going on right now, and those obviously are related to the performance improvement as well. Then if we move on to the next slide and take a look at our outlook for this year and long-term financial targets, we brought back our outlook for 2020 in mid-October. As many other companies, during the pandemic, we didn't have an outlook for this year, but now the outlook is that we are expecting our comparable EBITDA to increase from the previous year, so from 2019. In terms of the long-term financial targets, these we brought into the discussion in 2017. That was actually more than 100 years after Fiskars started as a listed company, so one could say it was about time to talk about these long-term financial targets as well. And as said, this date back to 2017, except for the profitability target, which we revisited in November 2 years ago. Our EBITDA margin target is to reach 12%. The previous target was to exceed 10%. So we have a growth target, which is a combination of organic growth and selected targeted acquisition. So it's not an annual target, it's an over time target. Generally thinking about the 5% target here, the categories that we work with globally, depending a little bit on the category, depending on the region, the annual growth tends to be low single-digit target. So therefore, this 5% is expected to be a combination of organic growth and targeted acquisitions. The capital structure, net gearing is well below 100, as you were able to see on the material, and then we also have a target for the dividend distribution. And if we move on to the next page, there you see how the dividend has developed in the past years. There's obviously one key change here. So in 2019, we distributed the Wärtsilä shares as dividend, and thereafter the baseline has changed due to the fact that we no longer ourselves received dividends from Wärtsilä. So this is Fiskars in a nutshell, and happy to answer a few questions should there be.
Thank you very much, Sari. So let's go into a few questions. And first of all, you talked a bit about the sort of Central Europe expansion within Terra. Can you tell us a bit more about the competitive landscape here and how that differs from the US, where you've been able to keep your market shares very high?
Yes, so our expansion or expanding the distribution in Central Europe, it's about two things. First of all, we have introduced the watering category to Europe during the past couple of years. Watering was present in our business already in the Northern American region, but now we have the watering products available in Europe as well, in the Nordics, and also now more recently in the Central Europe. So changing the offering, making it more broader has been one way to increase the distribution. And then all in all, we have been better in being able to get more shelf space, have more products available to the consumer in those countries as well. So it's a combination of plenty of things, and these type of things never happen overnight. It has taken a lot of work from the team, but now we are seeing the results as well.
Thank you. So moving on a bit into the Vita segment, and I know you've talked about this a bit during the presentation as well. But the sort of end markets here has been rough for a few years, and that's of course true for the whole market. Can you tell us a bit more about the actions and the transformation programs that are connected to it in order to sort of turn this trend?
Yes, so indeed we launched the Vita transformation, or it was at that point called the Living Transformation Program a couple of years ago. We have done already a lot of actions. The program is still ongoing. As you know, we have revisited, first of all, internally the organization, how we work. We have taken steps in our supply chain, for instance, in Indonesia and Slovenia. But then even I would say more importantly, it's about making sure that you are present in the right places and in the right channels. On purpose, we have, for instance, been exiting some channels, especially in the US, where we see that they are not necessarily the ones where we want to be present with our brands. Bringing new types of business models into it, and further, especially then developing our own capabilities and competencies on the digital front. They are very key. There are also actions like, for instance, in Japan, where we took over one of our brands from a partner. So in a way, consolidating more brands into our own hands in some of the markets. We have also been broadening the brand offering. For instance, in Australia, we have brought to the market a few other brands which were not present in Australia earlier. And these are just some of the examples that what we have been doing and are still doing.
Wonderful. So moving on to the Terrancrea business, which have seen very impressive numbers during the year. How do you think the pandemic has affected the long-term demand for your offering there?
That is very difficult to say, and I don't think anybody yet has the answer. And there certainly is, to some extent, something which is related to the pandemic and to this year. We have seen that the trade has seen that, some of our competitors have seen that as well. On the other hand, it will be very interesting going forward to see that whether there is something, one could say, more than pandemic here. We have already seen also on the crafting side, for instance, for quite some time, that there is a growing trend that people want to do something with their hands. That is related to the gardening products as well. So it will be something extremely interesting going forward to see how this is shaping up. Still a few years ago, there were discussions about, for instance, that is gardening getting a smaller share of people's times. On the other hand, we see, for instance, in Asia, where people don't necessarily have big front or backyards, as we might see in some other markets, urban gardening is very interesting for many of our consumer groups. People are paying attention to even their smaller gardens, and there are plenty of opportunities to improve on that front as well.
Wonderful, thank you very much. With that, our time is up. We thank you, Sari, for your presentation and everybody for listening in. Thank you very much.
Thank you.
Jag kan stänga ner.
here.
Welcome back to the ABG Investor Days. My name is Johan Brown, a retail analyst here at ABG. We now have the pleasure to welcome Nilörngruppen and CEO Christer Magnusson. The floor is yours, Christer.
Thank you very much. You can start already with the next slide. I will do a presentation on Nilörn, not going so into detail with the numbers, but more give you a view of what we are doing and what we're heading forward to. So Nilörn, our vision is to be the best label and branding company worldwide, and that is our aim. That's what we are working hard for, and not saying that we will be the biggest branding and labeling company, but the best. And I hope you will get a better view of that once the presentation is over. Our slogan is, since many years back, adding value to your brand, and I think that is really saying what we are doing within the group. Next, please. A little bit, just very short about the historical overview. Most of you maybe already know about this, but Nilörn was setting up in 1970s and then setting up a lot of production and then made a lot of acquisitions during the 90s and so on. And there was so focus on production. It was production, and we were about selling what we produced. And what has happened in the beginning of 2010 and also even end of 2000 is closing down all the production in Europe, turning that into sales companies and setting up more sourcing offices around in Asia. It is, as we are supplying into our clients, vendors, they who produce the garment, and they are producing the garment out in Asia mostly, and that's where we need to be, and the competition therefore producing in Europe was not possible. So what is the transformer of Nilörn during the last 10 years to really convert Nilörn into a sales-driven company instead of a production company. And I think that gives us a much better flexibility when it comes to producer. We now really produce and source what the clients need, and in those countries where we need these labels. So, and also the mentality and the employees within the group is really converted into a sales-driven company. I think that is the key we have seen, and also the really turnaround that we saw in the beginning 10 years ago. And also the growth that we are seeing here is also coming from us being much more flexibility, focusing on the client. So it's totally different mentality. Next, please. Looking at the product, label is the core business for sure. And then we have in the labels all sorts of labels, and we now also have RFID, which we were early adopter on that. We started already like 10 years ago within that, but that is really something that's coming up, and we see a big breakthrough the last 2 years. So that is also an area where we put a lot of efforts in at the moment. The advantage with RFID is, I will come back to a little bit later, it's really the traceability, and you can easily handle the stock and the logistics part of it. Another area that we also now focusing on, QR code. QR code is nothing new. What is more new with that is that that is used for sequential traceability. So clients that use the QR code now and have that unique QR code on each garment is that we can get the traceability for where the goods are produced, and they can give they can communicate with the clients all the way through. And that is an area where we see coming much more now with the sustainability. And then, of course, packaging is an area that we have been working on. It's not a big area within Nilörn. We see that coming more and more now, especially in e-commerce and also accessories. Next, please. Coming back a little bit about the RFID. Just to give you an idea what we are aiming for here, we have the labels. Labels is like a label, but inside is an antenna where you can read numbers, and where you have a software that can tell what is the meaning behind that, and then to read this you need to have hardware. The Nilörn, what we are doing now is the labels. We are producing labels and we're printing on the labels and we are encoding the labels, coding the little antenna inside, the little chip inside. So that's what we are focusing on. That means that we are quite flexible, that we can work with different hardware suppliers and we can also work with different software suppliers, and we adapt our system to that, which means flexibility. We have some, like ABGSC, they are really doing everything. They are the biggest competitor, huge company, but the smaller competitors and so on is doing what we do, focusing on the labeling area. Next, please. The manufacturing logistic. We go back to what we are actually today. We have own production as well in a few areas. It's mainly printing where we have own production. We have around both in Europe but also in Asia. Full factory. What we mean by that is the woven factory, printing, and paper factory that we have in Bangladesh and in Portugal. Portugal we have had by tradition. That was one of the companies that we didn't close, one of the production we didn't close earlier. Bangladesh is quite new since a few years back, but that is due to the quite complicated country to be in. We want to fulfill the CSR regulations, and we want to keep a high quality on the labels. So that's why, and also importing goods into Bangladesh is so regulated, and also high custom and duties like 100%. So that's why we need to be in Bangladesh with our own production. That is also one company that we have now seen develop tremendous well within Nilörn. We've seen such a big success with that. So it's a bit frightening. It's a complicated country, but it's been a really big success with the production in Bangladesh. Otherwise, we want to keep the flexibility. Once upon a time, we were discussing if we should buy or acquire something in China, some production, and luckily we didn't do that. We see now volumes moving out from China, and that means that if we would have a big factory there, we would be stuck there. And now we have more flexibility and can move around. We see volumes moving to Vietnam, Bangladesh, India, and so on. So that gives us much more flexibility. And we have a very efficient logistics system, and that is one of our core selling areas. I'll come back to that also. Next slide. Thank you. Next slide. You can, yeah, that's good. Thank you. Thank you. That's good. Yeah. This is what we see in the unique selling points within Nilörn. I usually get that question from analysts and so on. And design is by tradition and Nilörn very good at. That is also where we have had our core. We have a design studio here in Sweden, and we have also designers in the local offices around in Europe. And that is one of our strengths by tradition. Retail information service, I mentioned that earlier, that was our, what we call WOS web order system, which gives also, it's a very easy system, it's very easy, very appreciated by the clients. It gives them a very good overview where they have the stock, because all the stock we have within the group is client unique. It's unique labels for each brand. So for our clients, they can easily see where the stock are, how much they have in stock, and also for their vendors, when they are ordering the goods, it gives them a very easily way of doing that. And then, of course, RFID, we're putting a lot of resource in that now, and that is an area that we see really coming through. And the beauty with the RIS and the RFID is once you get a client in there, it's more complicated for them to change to another supplier. It's more job behind it. So we try to make it very easy for them to be a client of Nilörn within this area, which means for us it's a bit more work in the beginning. We customize and we do the files that we receive from our clients. They can send it in any format to us, and we take care of that. Some other competitors have a strict format that the client should send the file in. But we think that is good, and then we see that as an advantage being a client of Nilörn. And then the web system that is part of the RIS department. Distribution network, that is also something that we built up during the last 10 years. In the beginning we only had Hong Kong, but now we have hubs in Turkey, China, India, Bangladesh, Pakistan. So that is really an area that, looking at our smaller competitors, they don't have that. So to become a client of Nilörn gives us the possibility to open up and supply where the goods are. And sustainability, that is definitely an area where we're focusing a lot on now. The CSR, we have a sustainability manager of the group that's done a really tremendous job. We're now recruiting even more people to all the sites we have within the group to have local employees all over for the CSR, mainly to follow up the suppliers and so on. And we're just now recruiting a buying manager for the group, a central group buying manager for the group to coordinate all this. Next slide. And we have had fantastic growth in the last 10 years, from 300 to 700 million, which is really good. We have been very decentralized, which has also been a good recipe. We now come to the limit where I think to take the next step, we really need to be acted as a group. Then I'm not talking about towards the client. I think we should leave the sales companies really flexible and keep the entrepreneurship and so on out there. So the client really feels that we are not a huge company, but a flexible company. But what we're now focusing on is the back side, the supporting side, all the logistics. We're now, as I mentioned, recruiting a buying manager on the group. We centralizing design, and then I'm talking about marketing tools like social media, Instagram, LinkedIn, homepage, picture bank, where we can now have all the client we can show the client also the labels through pictures that it will be, and some things will be in 3D as well, and so on. So we are taking a big step in that area as well. IT, we implementing a central NAV system within the group, and yeah, so in all area, and especially in purchasing and sustainability, we're now really taking a big grip. We have too many suppliers, to be honest, and we are in all these countries. We have like 300 plus suppliers, which is a lot too much for us to have good control of, and to utilize our buying power. So that we will concentrate this to be even stronger. So we are in the middle of this process. It takes some time, but I think people like this job within the group, and they really see the need of it. So it's a positive thing, despite Corona and everything that happens at the moment. So yeah, I think that's good. Next slide, please. Just a few words about competitors. We have big competitors, we have medium-sized like Nilörn competitors, and we have small competitors. The big one, the Avery, is the huge company. They're not doing labels only to the fashion industry, but also to the pharmaceutical and food industry and so on. And they are the one producing machineries, and also, as I talked about, within RFID, both hardware and software. Trianon is also a Chinese group. They acquired the Danish ATEX. ATEX was or is very similar to Nilörn in the same markets and same size and so on. They were acquired by Trianon, a Chinese production company. And yeah, so not going through all of these. Then we have Rudolf & Haak. It's a Swedish company, half size of Nilörn approx. And looking at Nilörn, we managed to keep a good profitability if you compare us with the competitors. And I think the recipe that we have is we are quite early adapter on the new things, like now we talk about RFID and also QR codes, but also we are really good in design, so we are adding good value and make it easy for the client. Next slide. You can jump, that's good. Just a few words about the Q3. The sales, I mean, when we were in April, I made a research within the MDs in the group of what they thought would happen, and the expectation was like 30% down. So it was like a big shock wave that happens. It turns out that it wasn't that bad actually. In Q3 now, where you can see the turnover went down here. If you calculate the currency effect, that was quite big in Q3. We were down 5%, so much less than we could we feared. Yeah. Okay, next slide. It also accumulated the same thing. Sales was down 8% and operating profit, of course, a little bit doped by the contribution. We received approximately 8 million in contribution from governments, but we also have taken hit from old stock and accounts receivable of approximately 8 million, so that is quite even out. And looking at the net cash, we didn't pay out any dividend this year. So we actually in a net cash position right now with 4 million versus minus 36 debt last year. So cash flow situation is quite good. Next slide. Here is the income statement, not much to mention about that. Just say other operating income here of 13.7 million for the 9 months. Here we have the 8 million in government contribution. You can also see that other external costs and personal cost has gone down slightly. That is also due to the savings we have done so far. Next slide. Here I just want to show you the cash flow. If you're looking at the accumulated number, the two columns to the right, you see here the cash flow from investment activities last year was 44 million. This year is 10 million. We made some big investments last year. It was building in Sweden, building in the UK, and production in Bangladesh. So that helps the cash flow situation this year. Yeah. The balance sheet, here you can see inventory and account trade receivable. Looking at first at the inventory, the Chinese, before Chinese New Year's, we all order a lot of goods because we want to be a good supplier, and you know, all the factories are closed, so we need to order goods before the Chinese New Year's. And at that point, we thought also that the situation will continue. And then after Chinese New Year, we actually realized that it was Corona will hit us in Europe as well. It's not the Asian thing only. But I think we've been quite good at monitoring the inventory and not ordering too much. That is crucial, because if you order too much, there is still risk of provision of that later on. Trade receivables increased slightly, and that is also, as in some countries like in Bangladesh, where the payment terms are incredible, and also like in Italy and so on, where we, yeah. Next slide. I think I touched most of it here. The visibility due to COVID now, we see the Q3 was quite good, but also looking at the visibility into the future is quite short. What happens? How will the retail market react? Will they continue? How will the close down that we are now seeing, how will that affect the Christmas shopping and so on? So that is some uncertainty. We have a strong balance sheet. We're looking forward for coming years that we can take the opportunities that arise, maybe acquisitions and maybe new markets. Yeah, as you maybe know, we appointed Maria Fogelström as the CFO, previous controller working with KPMG and the auditor for Nilörngruppen, being a controller for Nilörngruppen for 1 year, so she knows us quite well, which is good. And I have the opportunity to take over as a permanent CEO, which is I appreciate very much. Next slide. not much to be mentioned here. This is the target we set by the board, and they still are there. We looking for a growth, of course, not in 2020. It will be impossible of 7%, but going forward, and the operating margin of 10%, and the net debt should not exceed 2 times EBITDA. Yeah. Next. Yeah. That was my presentation here, and we are working really hard to get a good structure for the future for the Nilörn, taking the next step now from 700 up to further up north out. And I think we've done a good job, and we are on a good way. But it's hard job, and it's a competitive market, and we are not alone. But we're aiming for it.
Thank you very much for that presentation, Christer. So a few questions from me, starting off with the sort of customer dynamic. How often does a customer change its label supplier?
It's quite rigid on that. It takes quite a long time to get a client. It takes luckily quite a long time to lose a client as well. We have clients that have been client with Nilörn for 20, 30 years, so a very long time. And what we try to do is also getting them into the recent RFID and all that, so they are tied up and then really into the system. But it's also very much up to us to offer them yearly updates on their design and so on, so they really feel that we're giving them adding value. That is the adding value to the brand. So to answer the question, normally client is client, not the 1 year. Very seldom client comes in 1 year. They normally stay for a long time.
Great. So looking at the sort of building blocks for the growth in this business, are there a lot of untapped markets to find growth and new customers in, or is it about growing with new customers or existing customers and sort of pushing on new solutions such as RFID and so on?
It's actually both. We are having focus on adding more service to the existing client, and as you mentioned, the RFID is really an area where we're looking for now. RFID, just mentioned that the margin in RFID so far is a little bit lower than in the other areas, and it's also, I think, we need to get the volumes in here, and then we can step up the margins. But first, we need to get the volumes in there. And also the RFID label, it's like 6 times more expensive versus the normal care label, so it's more expensive. But then other markets that we're looking for is like France. We're not big in France. We're looking for continued growth in Italy. We are started in Spain. We have much more to do in Spain, but have made a start. In Holland, we have not had a real breakthrough either. We are there, but we could do much more. We have a small representation in the US. We are a little bit careful about US, but we will see what happens there. But I think focus mostly will be in Europe now.
Yeah, great. So the expansion into sort of southern Europe and Italy and France and those countries, how does the market look there if you compare it to your other markets?
Yes, it's for us to be successful or not, proven to have the right people on board. We have found the right guy in Italy, which we appreciate very much, and he's doing a great job. And we can see that we are really getting some success there. And even though there was more risk in Italy, as I see it, in terms of, especially now during Corona, clients having issues with the payment terms and so on. So it's more risky versus, so we try now to, with prepayment and so on, to reduce the risk on these areas. But and we see also in Spain, we are now with some really big sharks there, so it could be interesting. It is definitely interesting.
Yeah, so going on to the RFID again, and You mentioned that the market is growing very fast, and I'm just wondering how standard will this solution be? Is it that this will replace all other labels, or how large a share of the market can RFID take?
Not all other labels. What we're talking about here is the care labels, the variable data. So so far the RFID is more a logistic thing. It makes it very easy to count all the goods. You know exactly how much goods you have in stock and where the goods are, because each and every item you have will be unique. I can see a prolongation of this, getting more into the marketing area, where if they put the chip inside the garment, you can also use it for marketing. For example, if you go into a dressing room, you can have a system that feeds what kind of garments that is into the dressing room, and it suggests other garments that fits into that electronically to the person who is in the dressing room and so on. So it can add on much more values. But so far, what we are seeing, it's a logistic thing.
Wonderful. Thank you very much. With that, our time is up. We thank you, Christer, and everybody for listening in. Thank you very much.
Thank you very much. Thank you.
Hello, my name is Fredrik Iverson. I cover the consumer sector with ABG. And with me here today, I have BHG Group, and namely Adam Schatz, CEO, and Jesper Flemme, acting CFO, who will give a approximately 20-minute presentation followed by a short Q&A. So with that, I will leave the floor to Adam.
Thank you, Fredrik. And I will be presenting, right, Fredrik, as we agreed. Is that right?
Yes.
Excellent. So let me share my screen there. Good morning, everyone. Jesper, our CFO, and I will take turns presenting this morning. I'll go through the first section, introducing BHG. I'll then hand it over to Jesper, who'll take us through the financial update before he hands it back over to me to summarize. And then we'll launch into the Q&A session led by Fredrik. So summarizing our position today, we are the largest online consumer retailer in the Nordics. We have a sound business mix, both segment and geography-wise. We focus fully on the home improvement market through our two operating segments, DIY and home furnishing. And within this space, we are the largest online player in Europe. We're particularly big in our Nordic home markets, but also have a rapidly growing presence in a number of Eastern European countries. Our financial track record of consistent strong growth, coupled with profitability and cash flow generation all along the way, bears out the strength of our strategy as well as our business model. On an LTM basis, our net sales amounted to 8.3 billion SEK, and our adjusted EBIT margin stood at 7.2%. As Jesper will show, our growth was accelerating already in the quarters leading up to the pandemic, and growth has since further accelerated on the back of changed consumer behaviors, clearly favoring both the online channel as such, but also leading to consumers dedicating a higher share of wallets to home improvement, that is, our categories specifically. And our business model and position are characterized by a leading product portfolio and best-in-class digital capabilities, which allow us to base key decisions on the heaps of data that flow through our systems, including such decisions as optimizing pricing and driving conversion. Our scale gives us strong purchasing power and has enabled us to have a high and growing share of private label in our sales mix. We're asset light, we have low capex requirements and a neutral net working capital, all of which enable highly scalable growth. A couple of words on our markets, the home improvement space. This is a very large market. The net sales that we've enjoyed over the past 12 months of 8.3 billion SEK should be viewed against the backdrop of a Nordic online market for home improvement, which is worth some 35 billion SEK, and which in turn forms part of a total addressable market in the Nordics worth some 300 billion SEK, which finally, of course, is dwarfed by the almost 20 times larger EU market. And with online penetration still standing below 12%, but increasing steadily, the bulk of the growth in the total addressable market will continue to accrue to the online segment for many years to come. The strategy remains focused on 4 cornerstones, which I'll very briefly touch on. Firstly, a continued expansion of our leading product range, today comprising around 1 million SKUs. Secondly, scale and a high share of own brands in our sales mix, with our private label range accounting for roughly half of sales today. Thirdly, creating the most appealing shopping experience and leading in the digital realm. And finally, offering the market's best professional guidance, service, and support. The first 2 pillars of our ecosystem put the product offering at the base, while the second 2 ensure that we stay customer-centric. And finally, on this slide, we utilize M&A as a core part of our execution toolkit to accelerate our growth trajectory. And then continuing on the topic of acquisitions, since our journey started in 2012, we've completed in excess of 30 acquisitions. And as this timeline shows, we've acquired businesses within both segments. In fact, the home furnishing segment was built around a platform acquisition, as was our entry into the DIY markets of Finland, Denmark, and Norway. Last year, we made 6 acquisitions, and so far this year, we've made 2, those of Hemfint and Slipo. I'll now hand it over to Jesper, who will walk us through the financial update. Over to you, Jesper.
Thank you, Adam. Slide 9. Net sales grew by almost 40% in the third quarter, reaching 2.3 billion SEK. Organic growth amounted to 32.3%. Adjusted EBIT came in at 194 million SEK, corresponding to an adjusted EBIT margin of 8.5%, and cash flow from operating activities was marginally positive despite the exceptionally strong cash flow of the previous quarter, which led to a peak in supplier payments in the third quarter. Year-to-date cash flow stands at 774 million SEK, and our financial position is solid. We have been well placed to capture the demand resulting from a continued high consumer interest in online shopping in general and in home improvement specifically. The do-it-yourself segment has been the clearest beneficiary from the accelerated demand in the wake of the pandemic, with our major country platforms growing well and some of our niche destinations, not least those with a significant proportion of sales coming from our own brands, growing exceptionally. The home furnishing segment has basically followed the path from recent quarter, delivering robust growth and profitability. Slide 10. As Adam has just shown, we have combined organic growth with acquisitions since we got going back in 2012. And when it comes to the organic component, we are now reporting our fourth quarter in a row with growth in excess of the 15% level, which is our communicated target over a business cycle. Again, organic growth in the third quarter amounted to 32%, the home furnishing segment grew by 29%, and the do-it-yourself segment by 35%. We believe that these are above average market growth rates and that we consequently strengthened our market share in both segments. Next slide. Continued favorable market conditions and both segments' strong position contributed to the EBIT margin nearly reaching the all-time high level of the second quarter. Strong top-line growth at 39.7% resulted in strong operating leverage, translating to a gross margin increase of 57% and an EBIT increase exceeding 100%. The gross margin improved by 2.8 percentage points to reach 25.9%, our highest gross margin to date, and the product margin amounted to 37%. Just as in the first 6 months of the year, the gross margin improvement was to some extent driven by continued focus on cost and process efficiencies in purchasing and logistics, as well as a growing share of sales from our own brands. However, in the third quarter, the gross margin improvement was also driven by strong demand, which resulted in fewer campaigns than usual and positive currency effects from the stronger SEK. Moving on to our financial position. The group's net debt amounted to 86.5 million SEK at the end of the quarter. Our strong year-to-date operating performance meant that net debt in relation to LTM adjusted EBITDA ended at 0.1 times, a significant outperformance of the medium-term financial target range. Our financial position is strong. On top of our liquidity at hand, we had unutilized credit facilities at the end of the quarter of 434 million SEK, which means that we can continue to execute both organic and inorganic growth initiatives. Back to you, Adam.
Thank you, Jesper. So some key metrics to round things off, describing our position today at a glance. On the left-hand side, we are a fast-growing business. Our CAGR since 2014 amounts to 40%. And in this period, EBIT has grown well in excess of 100% per annum. Our EBIT margin, as I mentioned, on an LTM basis, stands at 7.2% and is generated by our over 80 customer-facing web properties. And now moving over to the right-hand side, these web properties have been visited well over 200 million times year to date, generating some 2 million orders from customers residing in 19 countries across Northern and Eastern Europe. And our product portfolio is leading in terms of its breadth and its depth. And finally, with strong total and organic growth, as well as expanding margins, we are on the path to hitting our midterm financial targets, including reaching 10 billion SEK in net sales. So with that, I will hand it back over to you, Fredrik, to lead us through the Q&A session.
Thank you, Adam and Jesper, for a good presentation. A couple of questions from my side then. We saw Amazon entering Sweden a few weeks back, and I'm just curious to hear what your take on Amazon is, and in particular maybe what product categories that you might be facing accelerated competition in.
Mm-hmm. Yeah, you're right, of course. Amazon launched on the 28th of October, I believe it was, and by that we mean they launched their .se site. Swedish and Nordic consumers have been able to buy from the German and UK sites actually for well over a decade. But the .se launch was on the 28th of October. And the initial offering that we see is actually very much in line with our expectations, with a very limited overlap with our categories. There is some overlap on some power tools. There is a limited overlap within the bathroom category. But again, overall, it's more or less exactly as we expected in terms of the product portfolio, even though the launch itself was a bit error littered with the poor and funny machine translations of product descriptions, etc. We see these as initial teething problems for Amazon, and I'm sure that they'll continue professionalizing their presence in Sweden. But more generally, also taking into account the launch itself, but looking at the experience from other countries where Amazon has been present for a long time, we are not particularly worried. We have great respect for Amazon, but again, not particularly worried. And one reason that our founders chose to build BHG around our current categories was because of the conviction that these categories are much more shielded from the sort of international competition that was bound to ramp up at some future point in time when we got started in 2012. And online home improvement retail tends to be dominated by specialists also elsewhere. In particular, then, the part of the market that deals with large, complex, bulky items and/or items that are sort of inspirational and require the sort of inspirational browsing to convert customers successfully.
That sounds reassuring. Another question regarding M&A. You mentioned that's obviously a big part of your agenda, and you've done a couple of this so far this year, but maybe not as many as some have expected. So first question on that, why is that? Is that simply due to COVID and a more complicated M&A arena? And secondly, what should we expect looking into the coming 2 years?
Yeah, well, basically, yes. The pandemic has had a very positive impact on growth, especially within DIY, as Jesper walked us through. But the other side of that coin has been that it's put some friction into the M&A efforts of ours, and I think other players in the market as well. I'll just also say that in addition to the 2 acquisitions that we've completed this year, we closed the acquisition of LS-bolagen on the very final days of 2019. And the exact timing of acquisitions is always difficult sort of to predict. But we were a bit worried about M&A activity in Q2. And I think what led to this friction that I referred to was actually a couple of things. One was that it was more difficult just practically to meet. And the meeting, at least initially in person, is pretty important, as I think we all acknowledge. But also with the general increase in demand for e-commerce and e-commerce for home improvement specifically, we were extremely busy. But also the potential partners and parties that we were in discussions with were also extremely busy. in just sort of handling the effect of the spike in demand. And finally, I think there was also an unusually high degree of uncertainty about where valuations would go, which also perhaps led to some delays in the machinery. I would say now that things are pretty much back to normal or reverting back to normal. We have a strong deal flow. We're in a number of discussions at various stages. It's always difficult again to predict when we'll be able to close the next one, but I am really confident that we'll continue to keep a high pace and that we'll continue to benefit from M&A as a complement to organic initiatives.
Excellent. Then we will keep our eyes open. And maybe last question regarding the financial targets. Jesper, you touched upon it, but you're already there when it comes to the margin target, and in terms of the 10 billion SEK in sales, you are approaching it swiftly. So should we expect an update on your financial targets anytime soon?
Well, what we've said internally is that we want really to be within touching distance also of the 10 billion net sales target. We are already ahead of the midterm EBIT margin target. But again, we want to be within touching distance before we update the targets for the next 3 to 5 years. What I can say is that when we do feel that we're sort of feeling that 10 billion very tangibly, we will of course go about the updated target setting process by looking at the combination of the sales growth target and the EBIT margin target. To some extent, there is an inverse relationship between the two. And I can just sort of generally say that the 7% EBIT margin is still a very good level. I think it's an industry-leading level for an e-commerce player. And we definitely will not be setting a margin target that we feel to any extent compromises our ability to continue growing rapidly. But this is another space, Fredrik, to watch, because I think that, again, as I've said, we are approaching that touching distance between us and the 10 billion, and then that is when the target updates will come.
Yes, we're excited to follow your journey towards that 10 billion to start with. So with that, thank you very much, Adam and Jesper, for giving us this presentation. And again, looking forward to follow your journey. Thank you.
Our pleasure. Thank you.
Thank you.
Jörgen, Karl Bokvist här från ABG. Hör du mig tydligt?
Hallå. Jag hör dig hyfsat tydligt, ja.
Hello everyone and welcome to ABG Investor Days. The time has now come for us to host Lagercrantz with CEO Jörgen Wigh. Jörgen, thank you so much for joining us today.
Thank you for having me.
So before we kick off, Jörgen will give a presentation of Lagercrantz, and in the space of time or context of time, I will afterwards ask a few questions. But without further ado, Jörgen, please.
Thank you very much. I'd like to give a 20-minute presentation of Lagercrantz in introduction. I have decided not to sort of go over the sort of recent numbers very much, but rather give you an introduction to the group, and then we have our website www.lagercrantz.com as our homepage, and there you can find more information about the recent numbers. So I'll give you a general presentation. I will focus somewhat to the acquisitions that we made and the sort of acquisition direction and the scope we have for acquisitions, which is very important to us. So that's how I plan to spend my 20 minutes. So let's start with the next slide here. Lagercrantz is then an introduction to the group is that we are a tech group working with business-to-business technologies in expansive niches. In the chosen niches we have decided to be in, we would like to be the market leader in what we're doing. And currently we have some 54 different businesses, and we have organized them in the 4 divisions you can see from here. And they are all trying to achieve or are the market leader in their specific niches. And we have then decided to name them their profit centers, because we also measure and are very sort of keen on following up on the different businesses and through that sort of manage and drive the growth of the different businesses. As you can see, we are from the map over to the right, you can see where we're present, where we have our businesses, and you can see that we are predominantly in the Nordics, but we also have a number of businesses now in the Northern Europe with the UK, the Germany, the Dutch region, and also in Poland. Over to even further to the right, you can also see that we have increasingly along the way been focusing on proprietary products and going for more of exports. So over to the right there, you can see some footholds that we have in different other markets, important export markets for us as a group, where we try to sort of collaborate between the companies and create some hubs and footholds where we can work from. We have one in Chicago, for instance. We have one in a couple in China as well, and you can see where they are over there to the right. We are some 1,500 employees in the group, and we have a turnover of some 400 million euros or 4 billion Swedish crowns, which is the total revenue of the group. And again, acquisitions and M&A is a very important part of how we grow. We plan to make 4 to 6 acquisitions per year, something that we have been in the neighborhood of for quite some years now. And we have been, as a separate company, listed on the Stockholm Stock Exchange since 2001. Before that, we were part of the Bergman and Beving Group, which has roots all the way back to 1906. So we have been working very long with sustainability and a long-term perspective of everything that we do. And that is also part of the DNA of the group. So that is an introduction to Lagercrantz. Let's move to the next slide. Looking a little bit at the numbers, what we did in 2005, the group had gone sideways since the separate listing in 2001, and we were not at all satisfied with what we were achieving back then. And you can see the volumes and you can see the margins were quite low back then. We were used to having margins at some 3% level or so. But since then, we have reorganized and refocused the group to something much more interesting, I think, with much more of value adding, much more of proprietary products, and then also focusing on putting on the decentralization and the management of objectives by objectives way of running things, with a new corporate governance model introduced in the group and implemented by now, and we're very familiar with how we work within the group currently. And you can see also how the profits have evolved since then, and with a steady upwards trend in that. And you can also see that since the scales here are proportionate, the one to the right versus the one to the left, you can also see that margins have increased along the way here. So from 2016 or so, we have constantly had margins of about 10% rather than the 3% we started out with. So a very nice track record back and a turnaround that have been successfully put together within the group. Over even further to the right, you can also see that we have had some effects due to the COVID-19 with a couple of weak quarters, but here in the last quarter we also had some improvements again in profits. So a strong last quarter we had. And before that we had some COVID-19 effects, but not severe, and we have been discussing some range of around 5% or so top line. But since costs have been brought down and cash flows have been focused, we have been managed to keep our profits at a good level even through the pandemic. So that's a little bit of background of how the profits have evolved in the group. We can turn to the next slide. Looking where we're heading with the group, I think we have a very strong business concept within Lagercrantz, and the financial performance proves that. What we'd like to build is a strong portfolio of companies, all doing business-to-business technologies with high value add, working in niches and achieving or developing market-leading positions in their separate niches. So we would like to be a leading supplier of value-adding technologies with market-leading positions in several expansive niches is our vision. And I think that's working very well for us. And through building this very strong portfolio of very specialized and niche-oriented companies, we shall manage to have an annual growth of 15% per year in terms of profits, and we should have a high profitability with a return on equity of not less than 25%. Internally, we have sort of transformed that profitability measurement to what we all work with is the profit over working capital, which should be not less than 45%. And currently we are well above 50% when it comes to the profit over working capital, meaning that we are doing this in a successful manner in general and in many of our companies. So this is also where we're heading. This means that the company and the group has basically doubled its size every 5 years, and we have been doing that and plan to do so also for the future. Something that we are really accustomed to within the group. So that's where we're heading with the group and what we'd like to build. Let's move to the next slide. And in doing so, the focus on value add is of course very, very important to us. And here you can see how the gross margin has evolved. The value add is really the sort of feedback from the customers, that the customers are willing to pay for what we provide for them in terms of value add, in terms of strong products, in terms of how we work with the customers and how we deliver towards the customers. And this is a strong focus within the group. And you can see here how that's evolved since 2005-06 all the way up until now, where we had an all-time high here now in the rolling 12 months here with the 38%. Early on in this time series, we did this quite a lot with sort of setting goals and restructuring and changing things within the business that we already had, and that brought us far up on this scale. But along the way, we have also then decided to also increase the share of proprietary products. So we're also changing the mix of what we're selling, also driving this even further here in the later part of this time series. So that's sort of how to sort of understand this chart. And that brings me to the next slide, which is then the share of proprietary products. Here we are aiming at the 75% proprietaries. You can see how that's evolved also. That's the gray part of this scale. And you can see in 2006 we acquired one of the first companies that we had with proprietary products, which is the Elpress company within the mechatronics, and that brought us to the 13%. But since then, we have constantly been working with increasing the share of proprietary products. As we see that proprietary products have higher gross margins, usually they're stronger companies, and that also means that the opportunities for organic growth are usually better when we talk about companies with more proprietary products along the way. We have decided to keep and still develop the value-adding distribution part, so we still make some acquisitions within value-adding distribution, but then that's also should be seen in connection with the proprietary products, since the value-adding distribution companies is usually sort of sales channels into different new geographies for the proprietary products type companies. So there's also a connection between those two in what we're doing here. But we have set a clear target that we, within a couple of 3 years or so, we should aim at the 75% proprietaries, which we, as you can see here, we're about to sort of, we definitely have the trend for that here in these numbers. And that will push both, as I see it, it will push our gross margins and through that our net margins as well, but it will also provide better opportunities for us to create organic growth, which these companies have better opportunities for really as their position. Let's move to the next slide. Organic growth is also a very key component in how we drive the group. We have during these years and previous years been sort of done quite a lot of pruning, cutting out low margin businesses and doing that. So looking at the pure numbers, we have this has been something of somewhat over our Achilles heel, not delivering on the organic growth. But as we now are getting into more of a phase where we have more proprietary products within the group, and we have phased out basically a lot of the things that we were not happy with, the opportunities for organic growth should be better going forward. And here we have the toolbox, really a long list of things that we would like to do within the group in order to provide better organic growth in our companies. I'd like to highlight a couple of things here. Of course, a lot is around board works and business plans that we put together, but we also have the BIMs, what we call the business improvement modules, where we basically have some modules or key knowledge centers that we can sort of dock on or run as a project or a seminar or something like that in a specific company in order to drive sales, exports, we have one around pricing, we have one around digitalization, we have one around stock turns, we have one around credit days optimization, in order to provide the knowledge and to drive improvements in these dimensions in a specific company. And usually when a company put together their business plan each year, they usually would like to run one or two of these business improvement modules in order to reach their targets or their goals for that specific year, and build the business into better shape for the future. So that's a key thing that we have in the way we work with the companies. We also have the Lagercrantz Growth Fund, which is where we provide funding or financing for out of the ordinary initiatives in order to drive growth in our companies. Also something that's very appreciated by the companies and the organization within Lagercrantz, and a number of other things in order to provide better organic growth. So that's a key theme in building the group for the future as well. We can move to the next slide. A little bit around acquisitions. I will spend a few minutes around that. This is really part of our DNA. We have been around for quite some years and made numbers of acquisitions throughout the years. We have made more than 50 acquisitions since 2006, as you can see from here. So basically, most of what we have in our portfolio in Lagercrantz, we have acquired in the last 15 years. And usually we try to put a push for having 4 to 6 acquisitions per year. One could argue that we should have an even higher number for that, and that is something we are looking into. But we also would like to take good care of the companies that we bring into the group and build something around them, integrate them with putting together business plans and work so that we get them in sort of working for us and growing nice and healthy within Lagercrantz. And therefore, I think a good pace of 4 to 6 is also it's a good number for us, given the size that we have at the moment. And how do we work with this? Well, we have a gross list of companies we would like to bring into the group. We have currently some 300 companies in the database, companies that we would like to potential targets, potential companies we would like to bring into the group, and we sort of run that list and try to come in contact with the companies and have meetings with them and talk about Lagercrantz, and when they are for sale later on, hopefully we are the ones that would like to choose in that situation and come into the group. And you can see, and we do this also along the way. We also build more resources around acquisitions. So we started out with having basically a team in Sweden, but currently we also have a team in Denmark going. We have a team in Finland going. We are setting up a team in Germany as well. So along the way, we are also building capabilities in order to run more than several acquisitions simultaneously in how we build things. So that's also a key thing within Lagercrantz. And I'd like to round off with a couple of companies that we have acquired so that you can all see what we have within the group. So let's move to the next slide. A company we acquired a few years back, it's basically in 2017. It was the Arcon. This is a company in Norrköping, south of Stockholm, 2 hours south of Stockholm, basically. And this is a company making different types of pumps and infrastructure for sprinkler systems. Sprinklers providing water when there's a fire inside houses and warehouses and that type of thing. And Arcon has a very strong market position in Sweden, especially when it comes to providing that type of infrastructure. You can see how the company has evolved before we acquired it up until 2016-17, and since we have acquired it, this company has more than doubled. We have refocused the company, being even better at what they're doing, cutting out some directions that were not really successful for them, but becoming even better at what they're doing. We have increased also the infrastructure within the company with better follow-up routines and stronger also systems within the company, and we have made one add-on acquisition with this company, a smaller add-on acquisition providing these type of tanks that you have for the water. They used to have that on the common water or the water of the municipality earlier, but that is no longer allowed. Therefore, so in many instances, we put up tanks instead in order to provide the water for the sprinkler systems, and that has been a very good add-on for this company as well. So a very good successful story around Arcon. Arcon is our second biggest company. I mentioned earlier that Elpress is our biggest company. Arcon is within the division communication. It's our second biggest company. And that number 2 position has been challenged by also the next company I'd like to, so that's the next slide, please. And that is the Tormek company. Tormek we also acquired in 2017 or somewhere there. And they're making these sharpening tools or sharpening systems with edge tools for sharpening knives, chisels, as well as tools for wood carving, as you can see from there. And this is a pure premium product within this specific niche, and Tormek is doing extremely well at the moment with these products, providing different types of product development, launching new types of sharpening machines, and going for exports. So currently they have great success in the US, but also in Germany and mid-Europe. They're also being very successful. And this is one of the fastest growing companies within Lagercrantz at the moment. And they have also been doubling their profits since we acquired them. So that's also a very good success story of what we have been able to achieve with the company, based on the company itself, of course, and the management team locally that has been doing the job, but also facilitated by Lagercrantz as a new owner of the company. So that's also a good story. Let's move to the next one. A third example is the Frick Tape business. And the Frick Tape business we acquired a little bit more than a year ago. They are a Finnish company with very strong position within providing different type of security system for helidecks or helicopter decks, usually offshore. And you can see from the pictures there what they're providing. It's the nets, and there's also the lighting for the nets. And you can see from all the acquisitions we've been making, and you can look also at their homepage, you can see these type of fact sheets for the companies we have acquired. And you can see down to the right here that most of the time we acquire very high profitable, very nice companies, small but very, very healthy margins and doing very well. And you can see that from all the companies that I've chosen to show here, but also from the number of companies we have acquired. So that's a common theme for how we would like to build the business, by acquiring these niche-oriented companies with very stable and good margins and with good growth opportunities. So this is another example of that. The last acquisition I would like to mention is the next one, which is the Diös Group. Diös Group we just acquired here a month ago, and Diös Group is an add-on. We already have a company, the Swedish Industrial Brushers, or SIB, which is a company in Västerås, and here is an add-on that will bring us not into road sweeping as well, with brushers for that, with a market-leading position in Finland and in Sweden, but also some significant volumes also in the German market. So this would be, we would build somewhat of a cluster with the SIB business and the Diös Group together along the way. So that's another good example of the recent acquisitions we made. Also a very niche-oriented, strong company. Here you can see the EBITDA margins is not entirely where we would like to have them, but that we also have some clear measures been taken now to address that along the way here, so that we can also bring that well above 10% is the margin, is the target here. So that was my last slide, basically. I round off with the financial overview. I mean, Lagercrantz has a very strong concept, I would say. And you can see here a very good trends in most numbers. You can see the net sales growing. You can see the EBITA margin growing, and the EBITA growing as well. And you can see the return on equity. I earlier mentioned that it should be 25%, and that's our goal. And you can see that we've been in the neighborhood of that, even though not fully there all years, but still in the neighborhood of 25%. So it's been a successful story so far, and we plan to keep it that way. That's the background of Lagercrantz.
Thank you, Jörgen. So my first question has to do with the Swedish landscape, because as some who are watching might know, you do share your heritage with some other industrial trading and industrial acquisition-intensive companies from the Bergman and Beving group a while back. So for people just looking into these kinds of companies and business models, how would you say that Lagercrantz differentiates itself among these serial acquirers?
It's always depending on who you compare us with, but I think if you compare us with AdTech and usually Indutrade and also Lifco is some sort of, and we have similarities, but we also have our differences. I think looking into sort of the sectors we're in, that difference a little bit. I also think that we have been more clear on and outspoken around going for proprietary products. So the margin expansion that you see from us is something that is I think that proves that that's the right track for us to go for. So that's one example, and then it's different sectors. The technical areas that we're in is another difference, and I also think we have a little bit of differences when it comes to how we integrate and work with the companies. I think we are all keen on keeping the decentralized mode and have the companies work as very independently. That is a common theme, but it varies how far you let that go. I think the business improvement modules that I mentioned is something that we have, which I'm not sure the other ones have. So that's one key value driver for us, I would say, when developing our companies. So that's a few differences, even though they're not. I also think a fourth one maybe is the size. I think that we are. I like the size we have. That means that we still are somewhat smaller than some of the others, and that means that it's a little bit easier for us to be agile and to approach different type of companies when it comes to M&A. So that's I think that works in our favor. Even though some would disagree maybe, but I think that's a favorable thing for us.
We are running out of time here, so the final one would be you've been the CEO of Lagercrantz for quite some time now. What do you feel that you've been, or what do you think that you've been the most happy with or about since you first joined the company, and what do you feel is left to do going forward?
I think we've had a very strong performance and a very strong turnaround since I started, and I think the strategy change back then was very, very right for us, and to have that to both sort of put that together and then deliver on that has been very sort of satisfying for me. That's really great, and I think there is much more to do. I think going forward, we have more acquisitions to be made, and we are sort of constantly looking over how to work within the group and how to evolve and how to set up things and see some changes along the way as well, and develop the organization along the way. And that's very sort of I am very enthusiastic about continuing. That's for sure.
Well, with that, I think our time is coming to an end here, at least. Jörgen and Lagercrantz, thank you very much for joining us on behalf of ABG.
Thank you very much for having us.
My name is Ophelia Aspemyr, and I'm an analyst within the renewable and industrials team here at ABG. With us today we have Ferronordic and CFO Erik Danemar that will go through a presentation followed by a short Q&A. With that said, please go ahead, Erik.
Thank you very much. I hope you can hear me all well. I'll start by introducing Ferronordic at a glance. Can you turn to the next slide for me? It doesn't seem to turn for me here. Thank you. In brief, who is Ferronordic? We are a service and sales company in the areas of construction equipment and trucks. We are a dealer of VCE, Volvo Construction Equipment, and also certain other brands in Russia and Kazakhstan. I'll get back to some of the other brands that we cover as well. We are aftermarket partner for Volvo trucks and Renault trucks in part of Russia, i.e. we do not sell new trucks in Russia, but in parts of Russia we do aftermarket, so service and parts. We also are a business partner to customers and offer something that we call contracting services. And this is a line of business where we own and operate equipment on behalf of our customers. They pay us typically based on volume, so cubic meters. So this is a different part of our business, a different way of selling our products, one could say. And from January of this year, we are also Volvo and Renault trucks dealers in parts of Germany, about 20% of the German market. The Ferronordic Group started business in 2010, and it now has 95 outlets. And if you look to your right on the top there, you can see some of the development over the business since 2010. So we were 160 people. We're now just short of 1,400. Revenue at that time was about 1.1. Now consolidated with Germany, that is last 12 months, 3Q, 4.4. And again, outlets a big increase there. Who do we serve? To give you a sense of that, please see to your lower rights. This pie diagram here means to illustrate that we think we have a fairly good distribution and diversification of our customers in different segments. So you will see that there is a meaningful, about 1/4 mining, but the biggest part is still general construction and other. We also do forestry, road construction, quarries and aggregates, and a smaller sliver of oil and gas. With that, we can move to the next slide. Very briefly on Russia, which is where we started and still our main market. You're familiar with the biggest country, a strong balance sheet at this point, still a high reliance on natural resources, mainly oil and gas, but also rich in metals and other minerals. And it's actually metal side, including precious, where our customers are maybe more active when it comes to the natural resources part. To your right top, you can see the market in imported units. This shows that, in comparison to 2012 and 13, we're still at relatively low level, and this is one part that we point to in our investment case. We think Russia should be at least closer to 2012, which not only creates an upside potential, but also leaves a number of years itself when it was underinvestment, the machine park, which also produces a certain pent-up demand in Russia. And to add to that, you have the so-called national projects in Russia, which is the pie diagram below. These are not only in infrastructure, but what we show here is the infrastructure part of it. 150 billion that is dedicated. The program has now been stretched out to 2030, but we are now seeing actual implementation of this program, and this is also adding some potential to our market. And to your lower left, you can just see that there are a lot of need for investing in infrastructure in Russia. Russia as a nation, as a country, as an economy has good returns of making those investments. If we move on to the next slide. Speaking of our core strategy, how do we develop and grow as a business? Well, the overarching objective for us is to have leadership in the market for construction equipment and trucks, and to help our customers be leaders in the businesses that they're running. Along that, we are looking constantly at expanding into related business areas. We have built a tremendous network, we believe, of service infrastructure. We have a very well-developed customer network, and this is something that we can leverage by introducing new brands and new services to our customers, and that's something we're constantly looking on as an opportunity to grow. To your lower left, geographic expansion remains a key objective. It is the near abroad, but it's also further afield. Our expansion to Germany in the beginning of this year is an example of that. We are looking at opportunities constantly, but of course also realize that we need to pace ourselves and establish our markets and our presence in the markets that we grow to. Contracting services, I mentioned briefly, is where we do work for the customers. We own machinery, we hire operators, and this is an area that we believe that the industry in the future is partly at least moving towards, and we want to be present there. We also learn a lot about our customers and are in different positions to service them and help them and adding value to them. Aftermarket absorption we put in the center because it's a central part of how we see building our business. What this means is basically that our aftermarket, that is service and parts, the profit from that business should cover the costs, our fixed costs in the business, so that even if we don't sell new machines, if we operate in volatile markets and volatile times, we should still cover our cost base. If we move forward. So just an overview of the brands we service. So Volvo Construction Equipment to your far left is the main counterparty and partner. So you'll see that that's 57% of the year-to-date revenues. We then have the Volvo and Renault trucks in Germany at 22%. And then there are other brands, and these are in Russia and CIS, Russia, Kazakhstan. So you will see we have Desta there, that's Bulldozers, a Polish brand, Rotne, a Swedish brand in forestry, and Mechalak, a UK French brand which does backhoe loaders. Can move on from there, please. This slide just illustrates the network that we have built. To remind you that when we took over, there were only 6 service stations in Russia, and now we've grown that to 84. There are 2 things I'd like to stress here, and one thing is that to sell new machines, you need to have a very credible aftermarket coverage, both when it comes to services, but of course also parts availability. So without having this presence, we could not have the equipment sales that we have. The 2 really feed each other. To have aftermarket, of course, you need a population of machines outstanding, but to make those sales, you really also need to have the presence and availability to service your customers. Next slide, please. Germany, to show you where we are there. So we are in center east parts, 11 workshops at the moment. In Germany, these workshops are more permanent than in Russia. In Russia, we have a more flexible structure. We tend to move with the customers more and have shorter contracts. Driven by customer behavior in trucks, the customers come to you. In VCE, in the construction equipment part that we have in Russia, we tend often to go out to our customer and service at their site as a more efficient option. Next slide, please. Aftermarket, I mentioned in the context of the absorption, we have achieved a very strong growth there. That's driven both by us having a population to serve, but also increasing our penetration in terms of reaching out to customers. And you will see to your right there also the approximate split in terms of revenue both in Russia and CIS and in Germany. You'll see that they're relatively similar, with about 2/3 in new equipment sales, between 1/4 and 30% in terms of aftermarket, and then other revenue. And of course, the aftermarket has higher margins than the new equipment sales does, as would be expected. So it's also important from that point of view to secure profitability and also provide again that absorption rate, which is important for the business. Next slide, please. One of the reasons why we've been able to grow our aftermarket is our developments in connectivity and digitalization. And this is something that we believe we're quite advanced on and quite proud of. All our machines are equipped with so-called telematic systems. These telematics, they send signals about the operations of the machines, not only where they are, but how much they're being used, what load they have, everything that the machine does basically, and how it's being done by the operator. These signals go to a rules engine that we have created. And depending on the combination of the different signals, they're recognized and an algorithm sorts them, and these generates sales leads or signals to both our new machine sales and to our aftermarket people, so the mechanics. It may be as simple as that an oil filter needs to be changed, but it can also be more complex advice about how to utilize the machines most efficiently. Are they run with too heavy load, or for too many hours, or too few hours? Can they reduce their fleet and optimize their fleet that way? And again, this has been a strong contributor to our aftermarket sales, and something that we also see great potential to develop further. Next slide, please. In general, we are working again with the objective to help our customers to achieve leadership in their businesses. And a lot of the work that we're doing, the initiatives we're developing, are driven towards getting closer to our customers. And I've mentioned a few of those things. Contracting services where we do the work of the client is one example of that. There are also rental services, hot rent, cold rent, and then again integrating more closely with clients on their needs to service their machines and develop more of an open platform in how we interact and transact with our customers. We work with partners to provide tailored finance solutions for our customers as well, to make sure that our equipment is as available as possible for them. So constantly strive to get closer to the customers that we're working towards. Next slide, please. Contracting services, a special slide on that. This is again a growing area of our business. In 9 months of this year, it was about 11% of the total revenue, including Germany. So this is in a way a different way to market the machines and the services we provide. And we have two case studies on this slide here. One which is related to a big gold deposit in the far east of Germany, quite a remote area, where again we run a big fleet of machines. You can see that we have employed 173 people in that project, and we have a fleet of 43 units. And these are then on our balance sheet, and we hire the operators, and the customer pays us for the volume that we deliver, whether it's overburden that is moved to open a mine pit or that is delivered to a processing plant. In September, we announced also a new project in Norilsk, in the Krasnoyarsk area of Russia, where we will act more as a general contractor. We will have our own fleet and work as well, but we will also use subcontractors, which has the advantage that we tie up less capital on our balance sheet to the project. But on the other hand, the margins come down then a bit, of course, because we pay away part of the margins to our partners that we work with in these in this project. But it also increases our capacity. We can access capabilities that we have not yet internally in-house, and deliver a broader range of services to customers that use us in these contracting services. So a very exciting area that we again believe will be quite important in the future in delivering value to our customers. Next slide, please. Machine and Component Rebuild Center. We launched, started building last year. We launched it at the end of last year in 2019. So this is an area where we basically recycle old equipment. It's machines that we completely rebuild and issue with a Volvo certified rebuild guarantee from us. We build machines. We can chop up machines if the machines are in such a state that they cannot be rebuilt, then we can use the parts. And then we do component remanufacturing as well. So these are engines and gearboxes. This is also an area that we believe has good potential, and it very much fits into our ecosystem, the total offering that we can bring to our customers. It increases the range of options for them when their machine fleet matures. Should they revamp their engines on the machines? Should they rebuild the machines completely? Or can we just provide them with funding in a way by buying the machines from them and use the part ourselves in third-party sales? So this is again an area that fits in to our ecosystem. Some of the machines also come from our own contracting services fleet, so it fits in to service that part of our business. Next slide, please. Looking at our financial achievements, if you recall my first slide, it showed the Russian market, and that's what you see in the gray line over here. Only here it goes all the way back to 2011. So what you can see here is that still now the market is only at 55% of what it was in 2011, and actually 49% of where it was in 2012. So we believe that the market has a lot of room to grow, and that it also actually needs to catch up with the underinvestment. But even at that, we have actually achieved revenue growth then of 51% versus where we were, and grown our EBIT or operating profit by more than threefold, 325%. What I'd also point to in this slide, that even when the market really collapsed in 2014-15, you can see there that the market came down to 19% of its 2011 level. Then even though our revenue dropped 39% to 61 there, our EBIT, stoperating profit, actually only dropped by 8%. And this goes back to partly the absorption ratio, but also the fact that there are also natural stabilizers. When customers buy less new machines, they tend to do more repair and service works, or they rely more on the used market, where we're also active. Next slide, please. Very briefly on the current situation, our first priority in response to COVID has been the health and safety of our employees, and we have very strict protocols for health and safety in general, but we've obviously strengthened and adapted the situation. People have worked from home, and we have provided the PPE necessary for our staff to be able to integrate and continue to work with customers as needed. We have continued to uphold our customer service. There has been some levels of disruption, but again, we believe that we've been able to make sure that uptime is there for customers, that they can use their equipment. And then we have taken also financial measures in terms of some cost cuts, some caution on our capex, and some immediate capex that we put on hold, and then also made sure that we've strengthened our partnership with our financial partners in banks to make sure that we have financing available. Next slide, please. And to connect to where we are in terms of this year, we had actually a very strong third quarter. In fact, it was the best net result we ever had, which is of course very encouraging, not at least given the backdrop we had in terms of the macroeconomy and the pandemic. So we saw a strong unit sales growth despite the market being down about 12% in Russia. When you look at Russia CIS, we had organic sales growth across all business areas, but given a 23% average in the quarter ruble decline, that masked some of the strong performance that we had. The strong performance was driven by good operating profit growth, which in turn is an effect of the revenue mix, but also the cost controls that I mentioned that we basically introduced at the end of the first quarter and through the second quarter. Unit sales in Germany were flat. The market there remains weak. We saw some signs of improvement at the end of the quarter. And we had continued strong cash flows. We saw that in the second quarter, and we brought net debt lower still. So we ended the quarter at 83 million of net debt, which is a meaningful decline from where we started the year, and 0.2 net debt to EBITDA. And we also saw the AGM approve a dividend payment that was actually after the end of the second quarter. So overall, a 17% revenue increase that includes Germany. So Russia itself was down actually 7% in Swedish krona. It was up 7% in ruble terms. Operating profit a 1% decline, and that was due to a consolidation of a negative result from Germany. And still, we were able, on a consolidated basis, to show a 9.5% operating margin, which we're quite happy with, and a 9% increase in earnings per share. Next slide, please. I think we can actually drive towards the next slide. I see we're quietly short on time. Wanted to mention also how we're performing versus our financial objectives when we look more long term. We set the goals to triple our revenue in Russia and CIS by 2021. We are currently, when we look last 12 months, at 2.2 times. And continue to aim for our goal as we enter into 2021. Obviously, the COVID situation, the pandemic, put some probably brakes on the growth in the market that we saw potential for. But again, we're still very happy with the results that we've achieved this year, with, again, the best net result the company has ever had. And when it comes to operating margin, we have a target of being between 6 and 8%, and last 12 months we're at 8.1. So it's slightly above but that includes then 1 quarter without Germany. So with Germany, we would actually be at 7.3 if we look at last 9 months, so within that range. And then with regards to our financial leverage, we want to remain below 2, and we're currently at the lower end of that range at 0.2. And that, I think, leaves some room for Q&A. So I think we can pass to that.
Okay, sorry to say, but we don't have any time left, so we are not able to have any questions. But thank you for your presentation, Erik. We are very happy to have you here and hope to see more of you ahead.
Thank you.
Hello and welcome. We have now Diös and the CEO of Knut Rost with us. Just to give you a heads up, we also had this recorded in the morning, but there was a bit of disturbance in the volume and noise. So we actually do a new one session here today. So if you really want to learn about Diös, I think this is an excellent opportunity. So I hand over the word to you, Knut, and welcome.
Thank you very much, and good day to everyone. Welcome to this presentation of Diös Fastigheter. My name is Knut Rost. I'm the CEO and have been with the company since 2014. I'm going to give you a brief introduction of Diös and our market, followed by comments on the current situation, ongoing trends, and the latest results. I will then summarize why you should invest in Diös. If you have any questions, there will be a Q&A session in the end, or you can always reach us on mail or phone. Details are on the last page of these presentations or on our website. Turn to page 2. We are the market-leading real estate company in all our 10 cities. We have property value of approximately 24 billion Swedish crowns, 335 properties as end of September, and approximately 1.5 million square meter leasable area. Our main focus is within offices, which comprise 53% of the portfolio, but we also have a good spread of premises in residentials, urban service, logistics, education, and healthcare. We have a clear concentration towards CBD location and properties with high yield and attractive features, like the last acquisition, Flottarbyn in Umeå. Our market-leading position, CBD focus, and great mix of premises make us perfectly suited to create value. We have a great diversification regarding geography, number of tenants, and type of premises. We have all our exposure towards 10 regional cities with growth. We have chosen these cities because they have great universities, a close cooperation between business industry and local authorities. They have ambitions to grow further and to have and maintain a good infrastructure. We have local team in each city, making us very close to the market, which is a key difference compared to many of our competitors. Since the start in 2005, we have had a great development, growing income from property management by 10% on average. We now have 3 areas of revenues: property management, project development, and transactions, which gives a new dimension. Let's go to page 3. It has been a turbulent year, and when COVID-19 hit the market, we got a new reality to manage. We have been successful in navigating in this new circumstance by living very close to our tenants. Value changes have been positive during 2020 concerning offices and residentials. Yields are lower today than in the beginning of the year, which shows our strong market. Retail values has been negative due to lower expected rental level. There is a trend within offices that has been going on for some time, that location, design, flexibility is key factors for tenants, from both private sector as well as from the public sector. Your office is a meeting place, an important element to recruit and retain employees, and a place that should be inspiring and create innovation and growth. Something that I think we all have seen during the pandemic is that the lack of physical meetings affects the creativity. Residential have a steady demand, and what is increasing is the demand for even more centrally located apartments with more floor area. We talk more and more about a 10-minute city. Everything, school, preschool, grocery store, gym, work, should all be within 10 minutes from your home. That makes us want to put even larger share of disposable income on your rent. While high street retail facing headwind right now, I'm convinced that retail is one of the key elements for the city centers now and in the future. Of course, it will change and needs to adapt new demand. But a lot has already been put into motion, and the pandemic has accelerated the speed of change. The regional cities are winners concerning all these trends and changes in demand. We have only one city center in each city where we are a major property owner. Due to the size of our cities, we do not have the issues with crowding local transportation like in Stockholm or London. We have many benefits in our cities like well-developed infrastructure, affordable land and housing, great environment, outdoor activities and so forth. Many features that are requested today. As an evidence of the strong market, you saw our net letting for the interim period amounted to 42 million Swedish crowns. Many other Swedish real estate companies presented negative figures. As a result of increased efficiency within the operation and on the energy side, we presented the highest ever surplus ratio, 68%. It shows our investments and measures creates a property portfolio of higher quality. Let's turn to page 4. We are not only a well-diversified real estate company looking at the portfolio, but we have also great diversification in our value creation. We have a target of growing the income from property management per share by 10% per year on average over a 3-year period. We will reach our target by contribution from all 3 sections. First of all, property management. We target lower vacancies for coming years. We have very good fractions in our new leasing. A percentage point in reduced vacancies give approximately 20 million in additional income. Renegotiation has a great potential. 16% of our lease contracts are up for renegotiation next year, and especially office rents have been on the rise last couple of years. And then we have the project developments. We have 6 ongoing projects and more to come, each with an investment volume exceeding 100 million Swedish crown and a total just now of 2.2 billion. The first to be finalized are the residential in Östersund, where new tenants are moving in as we speak. It gives a cash flow of approximately 7 million on a yearly basis. The majority of the cash flow from these projects will come in 2022. We are putting more focus into how to activate our building rights. We have approximately 170,000 square meters building rights unused or in early stages, and we are exploring possibilities to create value by divesting or by starting constructions. And then we have transactions. Increased activity within transactions will help us reach our growth target. By acquire right-yielding properties within offices, residentials, and with government-related tenants, we can maintain our yield gap in the portfolio. The focus will not only be in the CBD location, but we will also focus on finding locations that are attractive for the tenants. By divesting properties with limited potential or outside our main expertise, we free resources. Our goal is to be net buyers for the years to come. Let's go to page 5. As you can see, we have a low tenant concentration risk. Our 10 largest tenants account for about 16% of total rents. 78% of the rental income from our 10 largest tenants comes from public-related tenants. 31% of our total rental income comes from tax-financed operations. The average lease duration in the end of Q3 was approximately 4 years. We are, as I said before, well diversified with relatively low exposure to exposed sectors, but there is a great uncertainty in how long the spread of infection will continue. and what the long-term economic effects will be. Go to page 6. Our loan-to-value ratio at the end of the period was 55.2%. The difference is due to increased lending to finance our ongoing developments. The interest coverage ratio is among the strongest in the sector, about 6 times. It clearly shows the strong cash flow from operation and the low interest rate. Our net debt EBITDA is stable over time and amounts to 11.5 times. This is clearly below the average for the listed Swedish real estate companies, and again shows our strong cash flow. We have a clear ambition to prolong both the loan duration and the fixed rate terms. Due to very attractive conditions, we foresee that this can be executed without affecting the average interest rate so much. The timing is right. Go to page 7. There is a clear trend that investment volume has increased in recent years. We become a more complete real estate company as we also add new production to future earnings and cash flow. We currently have about 100,000 square meters under production with an investment volume of about 2.2 billion. The positive cash flow effect will mainly come during 2022 and 2023, which always will have a positive impact on other key operating figures. Let's go to page 8. On this slide, you can see 6 of our major ongoing new productions. Worth noting is that 50% is pre-let to public tenants, marked with a pink symbol. None of these projects have any elements of speculation. They are all 100% pre-let. The residentials in Östersund are about to be finalized as we speak. It will add 7 million to our operating surplus. The big lift will be 2022 and 2023, where developments adding 80 million to our surplus ratio will be completed. Let's go to page 9. To summarize and conclude why you should invest in Diös. We are in a unique position. Being the market leader in CBD location with our local teams, we take advantage of the underlying growth in our cities and create growth by ourselves. We own and manage properties with an average yield of close to 6%. With our low interest rate, we have one of the largest yield gap in the sector. We have a great diversification among our tenants. 31% of rental income come from public-related tenants, 8% from residential, making the revenue streams very stable. We have now 3 streams of revenues: property management, project development, and transactions, creating stability and also many synergies and possibilities. We target to be net buyers of property coming years. At last but not least, we have our project portfolio that will not only create economic value for us in the coming years, it will also help the cities to grow and make them even more attractive. Thank you for listening and have a good day.
Thank you, Knut.
Okay.
Yes, I have some questions for you. We can start off, as you said, you're a very stable company. You have your exposure is towards public rentals in general, and you have a loan to value that is around 55%. You've been up to 70 in the past. Is that the level you want to have in the future, or do you see opportunities now to increase that level, perhaps through acquisitions, or can you give a bit of flavor on that?
Yeah, we have a very strong cash flow that gives us possibilities to grow without extending the loan. So I think I'm convinced that we will be around 55% or lower. I think that's a good figure to be around. So we have no thoughts of going higher. No.
Mm. You mentioned something. You have this conversion have done for the Tele2 3,800 square meters, going from retail to office space. Is that you think will continue also forward for you as a company, part of a structural trend?
Yes, I know that's a typical trend that we convert B or C location for retail to A++ location for office. And talking about this Tele2 tenant, it was exactly what happens. So that is a sort of symbolic business we've made with Tele2, and we have more to come. You'll see in a few weeks.
Okay, sounds interesting. I need to ask this, and it has been a very hot topic. Office space, as you said, you have maybe a slightly different exposure because most of your counterparts are public. But can you give your view of what happened this year when it comes to the corona situation, the digitalization, and the feeling you get when you talk to your counterparts, and what kind of impact that could have for you as a company, maybe in the mid to long term?
We have a very strong trend in our 10 cities, and I think it's the same in all regional cities in Sweden. And we can see that we don't have the commuting problem you have in the bigger cities. The density of people makes our regional cities sort of high-profile cities. It's no problem going in and out of your office here, and we see actually a demand for high-profile office in our cities. But you have to work with design. You have to work with what sort of premises you are offering. I mean, it's more like you offer premises for meetings. You can work in a cafe in the future. You can work at home. You can work at the office. But we can see that the creativity and activity in a company is growing much stronger in an office. So we see an increased demand for that.
And then a final question. When you had your presentation here, you talked about the 10 cities, 10 minutes. You have been very much focused on the, would I say, mid to northern part of Sweden. Will that be the core of Diös also for the long run? Is that your edge of being focused on that segment, or could we expect some new moves to other areas in the future?
Yeah, in the future maybe, but not just now. I'm often having this question about new cities. Why aren't you coming to our city? You are good in working with city development. But I say we have so many possibilities, so many opportunities, and so much left to do in our 10 cities. And I believe, I've been in the business for 35 years, you have to know what you are doing. You have to know your market. So we are still in those 10 cities, but in the future, you never know.
No, we never know. Thank you much, Knut, for this presentation, and I wish you a nice day.
Thank you very much. Bye-bye.
You are on mute, Benjamin.
Tak, Niels. Jeg beklager mange gange.
Ja.
So are we...
And I would like to have my presentation in full screen if that...
Control room, did you hear that?
Live.
All right, thank you. So good afternoon, everybody, and thank you. I hope you're all safe and sound, and thank you for being here today. My name is Benjamin Silverstone. I am the equity analyst covering the exciting company GOMspace here at ABG. Today, we have the pleasure of having Niels Boos, the CEO of GOMspace, participating in our Introduce Investor Days. Niels, thank you very much for taking your time to be here, and we are very much looking forward to hearing your presentation on GOMspace. The word is all yours.
Thank you, Benjamin. Thank you for having me. I look forward to give you this presentation. On the first slide, on the front cover, you can see the development from nanosatellites until 12U satellites, nanosatellites of a size of 12U. I will explain more about that as we go along. Please, the second slide. Yeah, you can see we have a strong management team and a very strong board of directors. I have personally been in the technology, defense, and satellite business for 20-25 years. Have a background as an engineer and a business educated in London, and has been with GOMspace since 2014 as the CEO and the chairman since it was started. Our CFO have been with the company since it went out of the business park, and he was with us all the way through the IPO, and have built now a very strong company with very strong business controlling in it, which is a very important part of our continuous development program. Besides that, we have a very strong management team with many years of experience in this kind of business. The board consists of the former CEO of Siemens in Denmark and Baltic countries, and lately we had Jens Måle in the board. He was the CEO of Therma, the biggest defense company in Denmark, and we are very happy that he joined the board as well. Next slide, please. GOMspace was founded in 2017. As you know, we produce nanosatellites and has been now in more than 50 countries and within more than 75 space missions. We were listed on Nasdaq in 2016 and has since then developed with subsidiaries in Sweden, in Uppsala, in Luxembourg, and a sales office in the United States, in Washington. We have about 140 employees. You can see on the chart on the financial development that we have grown quite substantially over the years. We have a little setback that we are more or less recovered from now. And the latest what's called outlook for the year is between 160 and 180 million for this year. And we obviously, with so short time back of the year, are still expecting to reach that. Okay, next slide. The fascination of space or space exploration started about 100 years ago. The first liquid rocket was sent up in 1926. 43 years later, we were standing on the moon. Then we had the space shuttle for a period of time, about 40 years also. And now a new era with the new space economy have started, where a number of rich people are putting money, serious money, into the space business, and they are aiming for Mars. And we can ask ourselves, do we believe within a 40 years span it will be on Mars? I think we just have to look at what have happened in the past. The future looks very, very interesting for us, and we can also see that the countries are back in the space race, and there's now lunar programs, there's deep space mining programs that are very, very interesting for our business. Okay, next slide. Can I have it in full screen? The picture, is that possible? I just showed you, told you about the nanosatellite development. The nanosatellites are getting larger. but at the same time, the technology is miniaturized. And that means that the small satellites in our line of the business, in our segment of the business, is becoming more and more capable, and it's actually possible to compete with the much larger satellites. And that development is happening all the time. Our satellites are working in low Earth orbit, and that gives a number of new advantages, because there's no delay in the signal the closer you get to the Earth, and that's very important in the internet era of time, and it's something that is going to help the low Earth orbit space business quite substantially in the future. Launch to space is also developing very quickly. There's about 50 to 100 new rocket programs on the way in the world. Not all of them are needed, but there are big investments on the way with that. Excuse me. The applications is at the moment very much driven by Internet of Things. Internet of Things is something that is going to change a lot of businesses with equipment into service businesses when they can have contact with their installed base around the world. That is a very, very big driver. I think it's much bigger than many people are actually thinking of it is. Tracking of aircraft, communication, remote sensing and things like that. There's many new applications being developed at the moment that is helping nanosatellites and the prospects of nanosatellites into the future. Next slide, please. We are part of disrupting a business. Just as the mainframe computers were disrupted, the landline telephones were disrupted. What happens in our business is that very big two-story satellites are becoming very small satellites, shoebox satellites is sometimes said. You can see on the lower series of pictures. And what that gives possibilities for is constellations of satellites. Satellites that are covering the whole Earth for only very small or narrow business niches. And that is because the satellites is much less expensive and the economy with that is much more possible than it was previously. Okay, next slide. At GOMspace, we are making nanosatellites for customers who have demand for professional mission critical radio communications and surveillance solutions. It's very important that it's within those areas, and it's in the professional end of that we are focusing. So it's not amateur things, it's not light things, it's still very, very professional things that we are aiming for. And then we're aiming for making technology for others who are providing services and providing data for customers. So we are the technology provider, and also are aiming to maintain the installed base by the constellation management. Next slide, please. You can actually see that here. What we do is we make the components of the satellites and an important subset of the components. We assemble them to platforms. We put payloads on board of them so that they can perform a task. And then we are managing the constellation with our software that we are developing in Luxembourg. And then we can help the customers to obtain frequency allowances, what you call permission to launch the satellite, insurances and things like that. And we are selling that to those four segments that is shown on this picture. Next slide, please. And in the moment, we are working on the current commercial projects. We have a customer in France called Unseen Labs, where we are sending up 2 satellites at the moment. We have a customer in the US called Hawkeye, where we are delivering some parts for the satellites, very important radio parts for the satellites. And then Cleos in Luxembourg, where we are sending up 4 satellites at the moment. They are at the moment proving their business, and hopefully they will continue with constellations afterwards. At the same time, we are also working with other, what we call IOD customers, in-orbit demonstration customers, that in the future will turn into constellations of satellites. During this, next slide, please. During this time of you could say readjustment in the business that have taken place over the last year or two, The commercial companies are looking to exploit to prove their business. The investors are holding a little bit back to see those proofs. The corona situation that we have had, we have been very lucky to have been able to form, or in advance have formed a very strong relationship with the European Space Agency. That is done through Denmark, it's done through Luxembourg, and it's done through Sweden. And we've been lucky that they have started focusing on this area. And we are at the moment working on these three very, very important, very, very advanced projects. The Herantis projects, where we are going into deep space, trying to look at the trajectory of an asteroid and trying to land one of our satellites on the moon of an asteroid in some years. And this is something that in general is developing the capabilities, because the environment out there is very, very harsh. We have just received an order of a GOMX-5, where we're preparing wideband communication very, very deep into space. That is a 12U satellite. You can see it on the picture down to the right, where you can see in a very advanced antenna that is flipping out, very big solar panels that can generate a lot of energy, a lot of solar power to run the equipment. This kind of satellite is very, very accomplished and can compete with much larger satellites for example, that is sent up in low Earth orbit at the moment. Then the Imago project, which is a satellite that is not traveling together with other satellites into deep space. It's actually traveling into deep space by itself with the propulsion units on board to take the whole trip driven by the sun into the space. That is also to look at the deep space mining to see if there's minerals on some of those asteroids in the space. All this is driving our technology to a completely different level, and that has been done at the same time we are having these you could say harder times for everybody in the world, and the readjustment of the nanosatellite or the satellite business as such. Next slide, please. Our competitors. There's nothing new in this. We have three types of competitors. We have the established space companies that are selling much more expensive systems, much more systems that can do much more powerful things, but also, as I said, much more expensive and much more focused on smaller areas than this, and not so much suited for narrower niches. Then there's the vertical integrated companies. There's a tendency that, especially in the US, that some of the companies are not only developing themselves into a service company, but they are actually also building the satellites themselves. And it goes without saying that our aim in the future is to make that not worthwhile for them to do that. And then we have the direct competitors where we are fighting the daily the fight for the customers. We have a little bit different advantages. And I think the game is more or less even in the broad terms. Next slide, please. The future for the nanosatellites or the satellite business looks very, very bright. Currently, the market, according to the satellite industry report, is about $300 billion per year. In 10 years or 30 years, the revenue is expected by some of these sector reports to be 10 times as high. At the same time, the satellites are becoming smaller, the prices are lower. That means the spread of the proliferation of the satellites to more and more countries, more and more players is going on. And as the satellites are becoming smaller, then numbers are expected to grow quite a bit in that. So this is the long-term business in this, and I think many of us, depending on how aged we are, will have grown up grandchildren or grown up children before we reach all that. But this is what we are part of, and this is what the future that we are looking into. Next slide, please. And I think it's known to many of you that we have had some rough times because we had a big customers that could not pull through with the financing, and we had to readjust the company. We have had, you can see the order intake is going up quite a bit, and we have spread our customer base to a much larger, wider customer base. Although ESA is still quite a big one, it's still various different projects in various different countries. But that is something that is giving us a very, very good foundation to build on. Our sales is also going up. You can see the last 12 months is rising quite a bit. Our operating profit is also going up. We are aiming for positive cash flow on operations, and we are getting very, very close to that. What we are doing is we are working on continuing improving ourselves continuously. We have always been reasonably good on working capital, but you can see now we're very positive. We have quite a lot of prepayments that have come in, which helps the cash flow quite well. You can also see the employees have leveled out, and we are in fact hiring again and increasing the amount of staff in the company. Next slide, please. The main takeaways I have from here is that the financial situation is recovered. The cash flow has been positive over the last months, and much better than our internal expectations were. We are focusing strongly on continuous improvements, and we are very proud of our ability to improve the company. We are not there yet, but we feel that we have a very, very good traction, and we are confident that we will get there. The business is consolidating. The space business is consolidating. The startups are working to show results before they can gain their next investment phase, the investments into the company. And the established service players are considering to go into this segment. This is very interesting because the established service players are getting pressured because they need to go into low Earth orbit. They need to react on SpaceX Starlink's program if they are not to be outcompeted. And we need to have strong technology to doing that. And that is exactly what we believe that our collaboration with ESA have given us. So we are looking very much into that. So we have now on our way to have a very strong and very advanced nanosatellites that we can continue on and work with into the future. And this is something that in this period have been backed with government money, but nevertheless something that is very, very important for us to turn into growing business afterwards. And that is our focus. And we are looking brighter than things than we have into the future than we have done over the last year or year and a half or something like that. So this was my presentation. I hope that gave some clarity on where we are as a company now, and I hope you can see that I'm smiling.
Thank you very much, Niels, for this interesting presentation. To start this Q&A session, part of the presentation, I would like to acknowledge that this company is a very technical company, making it a bit difficult for people who are new to the case to fully grasp the interesting aspects of this company. I would therefore like to just inform everybody participating on the line that we do have a publicly available in-depth analysis of GOMspace available on our ABG Introduce platform to accompany this interesting presentation from Niels. But to start the Q&A session properly, Niels, you do mention that there has been this bit turbulent period in the last couple of years, which you have now sort of recovered from, I would say. Predominantly due to this Sky and Space company that were lacking funding internally on their part. We have, however, starting to see some indications that this GOMspace program is sort of on a way to a relaunch. Is this something that you have picked up on or see in any way impacting GOMspace in the future?
No, it's not. We are obviously following the situation, but we know nothing. We don't know anything more than anybody else does on that.
All right. Thank you very much. Just to be clear on that, and to make it a bit more commercial, this Q&A session for the participants, I was wondering if you could help just elaborate a bit more on the competitive landscape and how you see. You mentioned this integration as well and consolidation in the market. If you could elaborate a little bit on that, I think that'll be quite helpful for people to really grasp how this environment is operating. And then if you could follow up with some of your competitive advantages that makes GOMspace stand out. Thank you.
Yeah. The first part was what was that? Sorry.
Sorry, the competitive landscape.
The competitive landscape was, as I see it, we obviously have a number of direct competitors, and we've more or less been in the business together since it started, and we know each other well, and we make business with each other, and are in a way colleagues of that. Obviously, we are also fighting for the orders occasionally, but we are also in a situation where it is an advantage to be in particular countries. We are not winning orders in the UK where UK money is backing companies in the UK. That is not possible for us. We can win projects in particular countries where ESA money is going in our direction and can support a certain order of that kind. So there's a lot of what's it called, barriers also for the competition. We are more in competition with the directly commercial orders with different what's it called, private companies where there's no backing from government money. And on those, we have a direct competition. I believe that the European companies, or those who are more or less European, I believe we are more or less even on that. We have a slightly different strong capabilities. Some are strong on power, some are strong on radio, but it depends a lot. And then I think it's also a matter of how full is the order book when you are. If you're not so full, you're more eager than if you are better off with that. And it has been the buyer's market for some time. That's my feeling that has been the case. But I also think that all the companies, all of us, even though nanosatellites are less expensive to make, there's also an expectation that they are not very expensive. So we are maybe a little bit like the windmill companies were during the time that it was fantastic to be able to do what we're doing, but we need to work to be less expensive. We need to make more efficient companies. We need to be very, very strong on quality, very, very strong on delivery times, very, very strong on prices, and still be able to make good money. Otherwise, our business will not grow as quickly as it can be.
Yeah.
So we don't believe in skimming. We believe in trying to work to be more and more efficient. That's one direction. Another direction is also to be big on consolidation. In general, one should say that consolidating a business that is growing doesn't really make sense, because you can go out and get orders, but it's also a business where you are growing and then you are contracting and then you're growing and contracting. And I feel that we have had some contraction in a year and a half or something like that. that have led to the incentive also to think of mergers and acquisitions in that period. And I think there's different ways to go with that. We have chosen a way of continuous improvement to try to be as efficient as possible.
Thank you very much, Nils. In order to keep the timeline, I think we'll have to finish here. But again, thank you very much for participating today. It was a pleasure listening to your presentation and for the Q&A. I hope you have a good day, and thank you to everybody who called in to listen as well. Bye-bye.
Hello and welcome to this next presentation here at ABG Sundal Collier Investor Days. My name is Simon Granat and I work as an equity analyst at ABG covering IT and tech stocks. With us today we have the pleasure of welcoming Bo Kjellberg, who is the CEO of Infracom. With that said, Bo, please go ahead and present the company.
Okay, thank you. So my name is Bo Kjellberg, and I am the CEO for Infracom Group. And this is the first time we are presenting Infracom at the ABG Investor Day. So I hope you find this presentation interesting and will follow us in the future for the scale-up journey. Next page. Infracom is an IT infrastructure company, and that means that we own and deliver our own solutions within voice, telephony and network and IT. The company was started in '99 by some happy entrepreneurs, and we offer a smart digital solution which include, as I said before, voice, IT and network. Our market is business to business with a full service offer, and we think that our service is best fitted and to accelerate business and companies affairs. So we try to stay away from from the consumers. We are acquisition driven, and that is something we know how to do. We're good at finding companies and eventually include them into our growth concept. And we believe ourselves to be a challenger against the niche companies, but I will talk more about that later on in the presentation. Our stock was listed in 2018 at the Spotlight stock market, roughly 3 years ago. And since then, our revenue have grown with 100%, and we have maintained our EBITDA margin at 24%. We have approximately 20,000 customers, and 99% of the revenue is recurrent contract revenues, so it's a stable cash flow. We are 90 employees in Gothenburg, Stockholm, and Malmö, and the headquarters is in Gothenburg. Next. Infracom has a 20-year history, and during that time we have done a lot of mistakes, but we have learned a lot. We have experienced and gained technology changes, but I think most importantly, we have developed our platforms, which is the foundation for today's success. On the right, you see two pictures. The top one is taken 2005, and it's a little bit development of the company, where we replaced a diesel generator. We are replacing the orange one with the wheels on it, which was from Telia once upon a time, and we replaced it with a more stationary, more permanent solution, the green in the back. And the blue picture was taken in 2019, and at that moment we added one extra diesel generator. So I think this is how we see our development. We constantly secure the environment we work in. So let's go back to the history. So in 1999 we started out as a local internet service provider in Gothenburg, or an ISP. In 2005 we started with hosting and IP telephony, and 2010 we designed and built our first cloud solution in IT and telephony. And then we had 2018, and I said before we were listed as Spotlight, and since then we have done 8 acquisitions, and these are some examples in what branches we want to grow. So we bought Cellip, who is the leader bundling telephony with Microsoft Teams, and Netono, who was focused on workspace as a service, and then BHG and Össur, who both was local internet service providers in Gothenburg and Malmö. And we have HDV, who's also focused on the workspace as a service. Today, in 2020, we have enforced our market strategy to assemble all the subsidiaries under one brand with the complete service offer, and the brand is Infracom Smart Digital Solution. Next. So, Infracom from niche to complete provider. On the illustration on the right, I show the IT infrastructure market with some competitors. And the vertical, if you see the vertical line, is the size of the company or the net sales, and the horizontal is the number of core services that the company provides. So typically, IT infrastructure company begins with one service. So for example, we have Base Farm and Telebox who really focus on one service. But by nature, companies want to add value to the customer or add more services, so they naturally move to the right. And there you can see Infracom, who are providing 3 core services. I don't know if you remember DGC, who was on the market a couple of years ago, who were a full service provider. Since they left, we have claimed their market position, and our goal is to grow from there. So what is the benefit with that market position? Well, we think it's good to offer all the services and at the same time have a single point of contact. And I think we enhance the customer experience to have one contact point for all their services. Also, we are more or less digitalizing all the needs that our customer has, which means that as the customer grow, we can grow with them. And all the platform we have developed ourselves in voice and IT. And finally, we think by bundling the services, we really add a value to the customer, and of course some stickiness to our company. Below we have some example of the customer base, and as you can see, there is small and large companies, and there's customers in all segments, both in health, school, education, and there is most of them are Swedish and some are international. So I think that's the scope we are looking at, that we're selling right now. Next. So what is the benefit with our smart digital solution? Well, I will try to give you an idea how we help the customer. We basically digitalize the customer's workplace or workspace by moving all the data, the customer data, the business data, the application to our cloud. And when we have it up in our cloud, we can deliver it as a service. And this service can be delivered to whatever user, wherever the user are located. So for instance, if it's in the office or on a business trip, or more or less like today, where more and more people working from home due to COVID-19, they can easily log in and get access to all their services and software. Furthermore, we offer a complete unified communication platform with voice, chat, video calls, and mobility. And this is also delivered by our cloud platform. And finally, we can also provision all these services on our own managed data communication network to secure the delivery. If you want to see more about our services and more details, please log into infracom.se. Next. Okay, here we have an interesting customer case. So we have a customer, Harvey, which is a global shipping company. This company wants to move from the locally installed analog PBX or telephone system to the cloud. And what they're looking for is a collaboration platform, one platform to support their needs, which is voice, chat, and video. And this is also meant to be for internal and external communication. And of course, it must be easy to implement this in their global establishment. Harvey has been customer for some years, and they have a full communication installation in Poland. And this summer, they asked us to do to add Italy to the solution, and they wanted a POC. And a POC is a proof of concept, and that's it's common to do that for some customers if they want to try and evaluate the software. So we easily can install it in a department or in a smaller office. But I think a month ago, the Italian government announced that they will do a shutdown. So Harvey wanted to speed up and do an express installation. So when we got the go-ahead, we installed, so in 4 days, we set up and installed a solution in 2 offices and including the customer service in Italy. So what is the unique selling points for us in this area? I really think we are expert in this. We have been working with unified communications functionality that we have and bundling it with Microsoft Teams. And we have done a lot of installations over the years. And I really think we can fulfill our customers' needs and expectation in this area. So I think we are a leader in this area. We also have a unique concept where we can do a fast and agile remote installation, which means that we don't actually have to be at the physical location. So we can do more or less all setup and installation remote. The customer keep the local phone numbers and we manage the phone calls. So in this case, it was very important for Harvey to be able to send the people home and still have an operational customer service. And that was exactly what we did. I also think that this is a textbook example how we help companies to adapt new technology and to become more like a modern workplace. Next. Growth and profit. You can see the last 8 years, our stable growth and also our profit growth. And for the last 12 months, 2019 at the bottom, we reached 207 million Swedish crowns net sales, which is a 28% growth, and 43 million Swedish crowns in EBITDA. For the last 9 months, from January to September 2020, we reached 161 million Swedish crowns, and that's 7% growth with the EBITDA margin on 24%. So it's a little bit more than the last 12-month period. Our market cap is around 500 million Swedish crowns. Next. Company objectives. The sales growth, both including organic and acquisition, we want it to be between 15 and 20%. At this point, we are a little bit below, so we are at 7%. The profit EBITDA margin, we want it to be between 15 and 20%, and there we're a little bit higher on 24. And the financial stability should not be lower than 30%, and today it's 57%. For us, it's very important to have an entrepreneur spirit within the company to make the company alive and vital. And I think that is something we work with almost every day in all meetings and all interaction we always have with our colleagues. Also, we started in Sweden, and I think it's important to be strong and take a lot of market shares in Sweden, and that's what we're working on right now. But I think also the next natural step for us is to investigate new markets outside our borders. The technology change, the challenge, it's that we always challenge, I think, on the market because we see the technology changing all the time. If you look back a year, I didn't see the video calls to come this fast. So we are constantly innovating new functionality and value for the customers for today and also for the future. Next. Oh, the presentation went pretty fast here. In this fast presentation, you have seen our market position, the possibility of our services, and also our stable financial growth. And I think this, of course, must reflect the goals for the coming years. So in 2021, we want to find larger companies to sell to, and also with a larger content you can say also a larger commitment. And as I said before, we want to be on our customers' digital journey. As the customer grow, as it get new needs and everything, we want to be there and offer our services to make them competitive. We also want to increase focus on international markets. And of course, we want to find larger companies to acquire. In 2021, we're also going to convert our financial reporting to IFRS. And actively, as I said before, innovate, bring new stuff to the offering, and attract more customers. And finally, we always have to work with our synergy, with our process, the structures, to stay agile and on the toe for the future. So next. Oh, thank you. Was it fast enough?
Thank you, Bo. It was a very good and comprehensive presentation. I don't think it was fast enough. So let's continue with a couple of questions. As I understand it, you are gradually expanding outside Sweden, and you are trying to also gain traction in Europe. What is the status around this area? Do you want to do it organically, or would you like to do it through M&A?
Right now, we're doing it organically, and we're doing it by more and more companies wants to integrate Teams with their telephony solution. And we see there's a lot of requests from pretty large companies in Europe. And we also have established a platform in UK and have some resellers down there. So I think right now we are just testing our products and services on the market, but M&A, I think that's going to be a goal for maybe 2021.
Regarding your financial targets, it looks now, if we look at the first 9 months here in 2020, that you are well above on the EBITDA margin target, but slightly below on the sales target. In order to reach this goal going forward in 2021 or so, how much of this sales growth would have to come from acquisition, and how much would have to come from organically?
We don't. How do you say? We don't tell where the growth come from at this point, but we see that sales need to go up, and we also need to continue to acquire companies to reach these goals.
Fair enough. As you acquire companies, would you like to give us some details on how you make it happen? Where do you find the companies? Who gives you leads? And where are the multiples generally at? And as a final question on that, are you primarily targeting smaller or larger companies as of today?
Actually, I think we have looked at the companies. We have founded the companies ourselves, most of the companies, and we're looking at sister companies to what we have today, and also in some areas where we want to grow. And I think that the process is that I contact them and start the dialogue, and then we trying to find a path to the actual purchase, so you can say. And then if you look at the multiple, which we try to do it as fair as possible, so both are not super happy but okay with it. And I think for the future, as we grow, we have to look higher up in the chain, and we have to find larger companies and refocus on that. I think it's tough. That's going to be a tough job for us, I think.
As a follow-up question on M&A, as you acquire companies, what is the main objectives that you look for? Is it the technology, the people, the sales? I know that everyone wants it all, but if you had to pick just a couple of things.
I think we have the best platform there is right now, and so when we look at acquisitions, we look at companies that don't have the super focus on the platform, or instead have the focus on customers. So when we come in there, we can add platforms, knowledge, and how to do smart business. because that's what our platform is doing for us.
I guess as a final question, and perhaps you might not think it's the most fun topic to speak around, but let's address it. COVID-19 has been here with us for a couple of quarters now. How has the pandemic affected your operations primarily?
I think that customers are more restricted to go further with different projects and so on, and we have a wide customer base, so of course we see some hotels and travel agencies and so on having a tough time out there, but overall, just for the regular business, we are managing okay. But well, people are working from home. Maybe it's not too easy to reach and talk future business with. So we see there is a slower business overall.
Understandable. Thank you both for attending at our event here and also answering my questions. So with that said, I'll leave the word over for you for any final remarks.
I think what must be crystal clear here is that our platform is the reason we are gaining the market and showing such a nice EBITDA. So I think we have done all this work for many years, and now we are try to harvest as much as we can out of these platforms.
Interesting. Thank you.
Thank you.
Good afternoon and welcome everyone to ABG Sundal Collier's Introduce Investor Days. My name is Jesper Birch Jensen and I work as an equity research analyst here at ABG. And with us today we have the CEO of INVISIO, Lars Højgaard Hansen, who's going to tell us a little bit about the company and their plans for the future. So with that said, please go ahead, Lars.
Thank you very much and welcome to INVISIO. For those of you that might not know us, we are the global leader within advanced hearing protection and communications equipment for people that work in very noisy environments. We are headquartered in Copenhagen, but listed on stock exchange in Stockholm, Nasdaq Midcap. As I said, we are focusing on people that work in very noisy environments. Our customers are found within military and defense professions. We have recently also started focusing more diligently on law enforcement and police, first responders, sometimes firefighting, and in also a few cases into heavy industry. So we try to protect people's hearing and we try to help them make sure they can communicate effectively in high noise environments. And if we move to the next slide, please. We have concluded our third financial quarter this year, and the headline for the quarter was strong order intake and continued investments internally in our organization. Now, we are in an industry where order intake and also revenue can fluctuate between quarters and even between years, because many of our projects are publicly funded through government agencies and so forth. So therefore we do see fluctuations in order intake and revenue. But this quarter was quite strong, actually the second strongest in the history of the company. So let's look at the financial. Next slide, please. In the third quarter, we increased our revenue with about 9%, 14% if we include the currency fluctuations. And for the first 9 months of the year, we are up about 15% in revenue towards last year. Our gross margin also fluctuates between quarters and years. We have a combination of own developed products, but we also sometimes sell partner products. The majority of what we sell is directly to customers, and when we sell our own developed products, which is also more than 90%, then our gross margins are normally between 60 and 65%. But we are in growing numbers also acting as a system integrator, where our customers expect us to be able to deliver anything they want that fits into the communication system we are delivering. So therefore we are obliged to also sometimes supply them with other third-party products that we do not have as high a gross margin on. So therefore we see these fluctuations and a little lower gross margin as we saw in this quarter. And also when we are in certain countries selling through distribution partners, the gross margin is also lower than when we sell direct. But in general, as I said, our aim is to try to get up towards 60 to 65% on a longer scale. And our operating profit for the quarter and for the first 9 months is a little lower than last year, even though our revenue is higher. And the reason for that is that we have decided for substantial investments internally in the company, both in R&D, but also in terms of expansion of our sales reach. We have hired more salespeople during the year. And we've done it in 2 areas. One, to accelerate the introduction of a new product category for communication in vehicle that we call INVISIO Portable Intercom. And 2, to also hopefully accelerate the sales development of our sales to police, law enforcement, and first responders. So we have added a number of salespeople, especially in the US, to address the law enforcement market, and we believe that this is something that will pay off over the coming years. We have so far not been very hard hit by the pandemic. However, we do see that especially larger programs and new larger activities are being postponed and pushed into 21, and sometimes with an unknown starting point. So it is a little more uncertain, but it is often like that in our industry, that we don't know exactly when orders will arrive or when new projects will be started. Luckily, we have now a much broader customer base compared to a few years ago. We are, as I said, selling both to military customers, to law enforcement. We have expanded to more geographies, not only US and Europe, but also now seeing interesting orders emerging from parts of Asia. So, and we have also a much broader product portfolio than we had just a few years ago. So we see a good mix of orders from types of customers, geographies, products, and so forth. And this is why we were able to reach a second best quarter in terms of order intake of 212 million during the quarter. Some of it was also related to end of year activities in the US, where they close the financial year in September and sometimes spend the remaining money in September. So next slide, please. The only larger order that we received during the quarter was from the US Department of Defense, an order worth 44 million. And this is an order related to a frame order agreement that we received back in 2019, and where the customer is a repeat customer and coming back now and ordering more products. And even with this size of order, sometimes it is a little larger, sometimes a little less, depending on how many units, how many users they plan to outfit over a given period of time. And our equipment is most of the time linked also to existing or new radio communications equipment in terms of, we call it radio, but some people call it walkie-talkies, that the customers are buying for their users. So when they get these new radios, then they also need our type of equipment. So the order sizes are sometimes linked to new radio equipment that the customer has been ordering. So this is the single large order that we announced during the quarter, and the rest of the order intake was, as I said, smaller orders. Next slide, please. Now, intercom is a new product category for us that we introduced to the market in the beginning of 2020, just before the pandemic broke out. And despite that, we have been able to get out with some of our key existing customers and demonstrated, and also been able to get a number of smaller first orders. We received several orders in the third quarter and also in the second quarter, so I think that we are above 10 orders now for the intercom with some existing users. One of them was a group in the US that we have been supplying our hearing protection systems to previously, called the 2nd Security Force Assistance Brigade. And it is always good when we get this type of customer in the early phases of an introduction, as they will act as a reference for many other customers. For those of you that are not familiar with our intercom solution, I'll just briefly say that this is a small portable unit the size of an iPad that you can carry in a rucksack. And the idea is that a group of users can set it up within minutes from the rucksack when they are in a small jeep, in a rib boat, in a helicopter like this. They have the ability to put up this intercom system within minutes, and they are able then to communicate between them, but also communicate to the helicopter's pilots or the drivers of the vehicle. So it makes their communication much more efficient. And this is a new capability in the portable form that we have that is that they haven't had before. So we have great expectations to this type of product over the coming years. Next, please. Now, another new introduction of a product that we did in the third quarter was a headset called INVISIO T7, and it is what we call an over-the-ear headset. Since our beginning, INVISIO has been the market leader and the innovator in small in-ear solutions that is then connected to what we call a control unit on the user's chest and then with cables to his communication radios. But we've also seen that many users actually would like to have both an in-ear and an over-the-ear. They have both advantages and disadvantages, and actually for some users they would like to have both. But also for others there is a personal preference, just like in your private life, between having an in-ear or having an over-ear. So we decided to introduce our own over-ear headset. It has some very innovative features that are first to market. First of all, it sets a new standard for submersibility. You can jump out of an aircraft at 10 kilometers height in a parachute and go directly into water and go 10 meters underwater, and the headset will work and function all the way. It has a patented drainage system, so the minute you get out of the water, the headset is fully functional and you can use it and talk and still being hearing protected. It is very flexible. You can change wearing style from over your head, behind your neck, on a helmet within just minutes without use of tools. And it also has a very high hearing protection level, partly due to some new patented so-called 3D cushions that we are using. Now, the cushions on the side of your head are normally flat and straight, but we have invented a new form which is 3D shapes and that better follows the form of your face and therefore gives you more comfort and also a better hearing protection. So we believe that this first product that is relevant for both military and law enforcement users will also develop into a full product category for INVISIO, so over time. And we have, of course, great expectations to this type of headset and that it will continue to contribute to our growth over the next many years. Next, please. In addition to our own developed products, we also sometimes, as I said, work with other suppliers because there is a market demand, and our key customers, when we have a long-term contract or an agreement with a customer, they also expect of us that we are able to provide them with different niche products that can be part of the system. And one example of that is a small company in Denmark called Inga that has made a very light and innovative small audio tube, which is primarily used by safety and security users for surveillance or for just being able to listen to a communication when you have to be very discreet. And we have signed an agreement with them to be able to sell and market their little audio tube into our customers, into our existing contract. So this is a nice little addition to our portfolio, but we do not expect this to have a huge impact on revenue. But again, it's a nice way of showing that we are a one-stop shop for most of our customers, and we also offer them things that we do not necessarily develop ourselves. And the next slide, please. So I think that takes us to the end of the presentation. We have, since 6-7 years, been executing on a simple strategy that is focused on gaining market share in North America and in Western Europe, but also expanding gradually to new geographies like in Asia and the Middle East. And we are following that through diligently. Another part of the strategy is to continue to develop new products, not only new versions of existing products, but also go into new product areas, as we have done now with the intercom system, but also with the INVISIO T7 over-the-ear headset. And last but not least, we have an important part of our strategy being cost control, but also working very efficiently. As I said, our order intake and revenue can fluctuate quite a lot between quarters, and therefore we have since many years perfected our way of operations. We work with a handful of large professional outside manufacturing companies that gives us the necessary volumes and flexibilities that we need for running our business in an efficient way. So we are on a good track. We are seeing good opportunities for growth, and we believe that with the many products we have, with the continued distribution development and organizational development, we should have good conditions to continue to grow our company over the next many years. So that concludes my small introduction to INVISIO and the update on our third quarter. So I'm open to questions.
Thank you, Lars. Just starting out, you mentioned that INVISIO has been relatively spared when it comes to COVID-19 impact in terms of sales and overall. But you also mentioned that during Q3, some customers or larger projects has been delayed. Have you seen that continuing into the months after Q3, and what's your customer feedback there?
Yes, I would say that we are fortunate that we have a number of large programs and contracts. So there, our existing customers will just continue to buy and spend the money that is allocated to those contracts. But when it comes to starting new projects and new activities, it's a little harder in many countries, because it normally requires that you need to get people gathered physically in a location, and this is also one example. For instance, the order we got from the US for 44 million, it could have been larger, but it's also the fact that you need to get people into certain locations for training and education and distribution of the equipment when we deliver. So there are limitations globally right now to how many people can be gathered and how you can run things. So I think that, yes, we will see some delays in certain programs and activities. They will not go away, because all of the modernization that is ongoing within both military but also law enforcement and so on, it is a long-term thing. They are upgrading their radio communications. They do have a high focus on trying to reduce the number of hearing damages that they see and the costs associated with hearing loss and so forth. So the long-term trends are still there, but there will be some ups and downs in the curve sometimes, and this is probably what we see a little bit now in some delays. But again, we are fortunate as the market leader that we have a lot of customers that still provides us with continuous orders.
Okay, and just on the same subject there, do you see these types of delays equally throughout your segments, or is it mainly in the legacy military segment, or is it?
No, it's a little bit everywhere, and I think again it is it is difficult to go and visit customers, as you know. It's hard to travel, and trade shows are cancelled and so forth, and if there's not an urgent requirement, then projects can be delayed a quarter or two, and we've seen that many times before for other reasons. So we are not. It's not unusual for us. We've always said that it's very hard for us to estimate exactly when a new program or an order will appear. We've seen many delays for many reasons over the years. That's just part of our business. So it goes up and down. But when we look at the longer term trend, and we look at the 12 months average rolling development, it still looks really good.
Gotcha, thank you. And just continuing on with Intercom, like you mentioned, you received approximately 10 smaller orders throughout the year. The last one here being for the 2nd Security Force Assistant Brigade of the US Army. And I was just wondering, how do you view demand from similar clients, and how many early movers are out there testing Intercom as of currently?
Yeah, there are quite a few, and I think the interesting part for us, of course, is that this is a product that is very easy to understand. everyone that uses our equipment already easily understand what the intercom solution can do for them, and we have no problem with handing out samples for test and so forth. But there's always also a learning curve in the beginning, both for the customers but also for us in terms of how to demonstrate, how to run tests, and also there's quite a number of cables that needs to be delivered with each system as they will be connecting 5 to 6 users and a number of radios to each unit. So there's some logistical setup, and each customer also need to decide exactly how they want the system to be set up. So the selling process is a little longer than it is for our traditional products. But we are very pleased with the development so far, because we also know that every customer we get to, the first orders we get, is a very good learning for approaching the next layer of customers. So we are pleased with the development so far.
And despite the difficulties, meeting your clients and marketing and such due to COVID-19, do you still expect to see larger orders during the next year in terms of intercom? Or is that...
Yes, I definitely hope so. In 2021, we should be seeing, I think, some of the customers that have been buying the first pilot orders now. They will hopefully be able to get funding and be able to buy more units, and we will continue to roll out within our existing customer base, so that more and more new customers will also start testing. So I think that we are of course in the middle of the fog right now with the pandemic, but once we get into 2021, it will hopefully soon be a little easier in many aspects, and things will improve quite dramatically.
Okay, that was all questions for me. Thank you, Lars, for coming and telling us about your third quarter and also your plans for the future.
You're welcome. My pleasure. Thank you.
hosting this call with the CFO of BankNordik, Från. So, Från, I would like to extend a very warm welcome, and please go ahead with the presentation.
Thank you, Mads, and thank you for having us. As Matt said, my name is Rune Nørgaard. I'm Chief Financial Officer of BankNordik and Chief Credit Officer at BankNordik. In the next 20 to 30 minutes, I will give you a brief introduction to BankNordik, a North Atlantic banking and insurance group. Good. Change the slide. Slide 2. General overview of BankNordik and our activities. We are a Faroese bank founded for more than 100 years ago. We do banking and insurance business on the Faroe Islands. We are a bank, and then we own 2 insurance companies, a life and non-life insurance company. The insurance part is only doing business on the Faroe Islands, but the banking part is doing business in Greenland and in Denmark too. If we're focusing on our home market, also the competitive landscape, we have one main competitor. We hold a little bit more than 40% of the market on the Faroe Islands, respect of corporate and private customers. And we do not have a growth strategy per se in respect of the Faroese market. We are quite happy and satisfied with the market share that we have. So we more or less just grow with the economy, grow with our customers on the Faroe Islands. Moving on to Greenland, the competitive landscape is similar to the Faroese landscape, only one local competitor. We hold a little bit more than 20% of the market in Greenland towards corporate and private customers, and we would like to grow in Greenland up to a market share approximately the same as the one we have on the Faroe Islands. We're well on the way corporate-wise. There's still potential on the private side in Greenland. Moving on to Denmark, we hold a much smaller market share in Denmark, and we have no overcap on our growth, at least not for the foreseeable future. We only focus on private customers in Denmark. It's a little bit more competitive market than the other markets. And in order to control the risk when you are in a competitive market with a growth strategy, we have chosen not to focus on corporate customers in Denmark, but only private customers. We conduct our business through branches, and we have a fairly efficient branch network compared to peers. We operate 5 branches on the Faroe Islands, 1 branch in Greenland, and 10 branches in Denmark. Employees-wise, it's a fairly small business, 360 full-time employees, and that's a number that has been steadily decreasing the last years due to us becoming more and more efficient, and we foresee this number will decrease in the future too. If you move on to the next slide. Slide 3, our equity story, why you should invest in BankNordik. As I explained, we are firmly anchored on the Faroe Islands, have a good grip in our home market. We are operating profitably in 2 growth markets, Greenland and the Danish market. And I have to underline that we do not have a growth strategy just to grow. It has to be profitable. It has been so far, and we aim to stick to that. So it's more or less an organic growth strategy in Greenland and in Denmark. Our approach to the customers, which we think will create the largest, the best values for our investors over time, is to have a strong focus on the customer experience. And when we approach our customers, that we take the responsibility as a financial provider and a financial professional to provide them with the holistic financial advice, meaning not only providing advice on banking, but also on insurance, pensions, investments, and so on. This refocus on the customer experience we have had since 2015, and has been providing us with the underlying requirement for us in order to grow, that we are able to deliver high-end customer experiences. If you look on the risk and the capital side, we have a very private customer heavy banking group, and that's also per se low risk business. So due to our large part of private customers, we operate a fairly risk-averse banking business. And in respect of capital, we are well capitalized, and in respect of core capital, we are in place. We do see some coming MREL requirements that are phased in for the coming 5 years, but I'll get back to that in a moment. Being a relatively large player in the Far East and Greenland market, we of course take our responsibility to make a positive impact on those societies seriously. From 2021, we will focus on reporting on our ESG measures and numbers, as well as keep reporting on our CSR initiatives. All this brought into hard numbers or targets. On the customer side, we aim at increased customer satisfaction, and we measure this by Net Promoter Score. And we also make sure that we take up the customer's time by having them in for a meeting, either physically or digital through web. We will make sure that we take our advisory role as a financial professional seriously, and provide them with this holistic approach, not only talking about one specific product, but making sure that they are well covered, not only banking-wise, but also insurance-wise, investment-wise, and pension-wise. And this covers both corporate and private customers. On the employee side, we also have fairly high targets there on the satisfaction, and also on turnover, fairly low turnover. We aim to have on group basis. Gender-wise, we have a fairly even distributed gender representation in respect of our managers. It's a little bit, it's an overweight to male managers, with a little bit below 60%. But when we look internally and in each department, there can be a department with heavily overweight to female or male employees, and we seek to make a more even distribution also within departments in the coming years. Shareholder-wise, we have reset our financial targets with respect of return on equity. We aim at delivering 8% after tax return on equity going forward or better. In respect of the cost side, we have a fairly we like to improve the cost side and lower our cost income to 65% or better. Looking at the dividend, we have a dividend policy of paying out 20 to 40% of the net result. We stick to that going forward, and to the extent we are allowed to, we will also conduct share buybacks. We know that the investor side is ask for this, and to the extent the authorities allow it, we will also look into this with a positive mindset. Capital-wise, total capital target of 23%, and a core capital target of 19.5%, and we are well above both targets as we speak. Next slide, please. Slide 4. If we look at our financial performance in the last years, we've actually managed to improve our return on equity at the same time that we've been building up core equity. Quite pleased with that, mainly driven of our improved quality of our loan book. We have made a lot of net impairment reversals the last years. Even in 2020, it's been a challenging year for banks on a general note. We have made up to and including the third quarter this year, we had a net reversal of 6 million in impairments. And that is including a management buffer of 50 million that we've impaired, not allocated to any specific customer or segment, but just a precautionary measure due to this COVID-19 situation that we're not fully aware where this would land. But for the moment, we will keep this buffer on our balance sheet. Not the increased profitability of the group is not only driven by reversals of impairments, it's also driven by improved in costs in general. In 2019, the end of 2019, we initiated a cost initiative towards our branch network. We consolidated part of the branch network and reduced the number of employees in our branch network on a general note, not in all three markets. And that led to an improved cost base in respect of our business. But we did also improve our income side by lowering the threshold for negative interest rate for corporate deposits to zero. So all deposits on the corporate sides are hit with a negative interest rate. But we also adjusted the prices in our loyalty program. It also had a positive effect on the income side. And it was actually more positive than we expected entering the year. So our target for this year and this year's net result is a range around 150 million after tax, which we are quite pleased with in 2020. It has been a year with a lot of uncertainty. Moving on to the next slide, page 5. Looking a little into the loan book and the impairments. I explained the management buffer of 50 million that we currently hold on our balance sheet. Hopefully we do not need it. We can reverse it in 2021, but we do not know yet. We will see how things develop. Hopefully, for all reasons, to the positive when the vaccine is distributed within the markets that we operate. Of course, one segment has taken this COVID-19 situation pretty hard. It's the hotel and restaurant businesses. We have a limited exposure to these kind of businesses. In the third quarter, it was only around 170 million. And it was to well-established businesses within that segment. So we do not foresee any issues on that side, at least not as things are looking at the moment. The loan book is also, it has overweight of private customers, and the corporate exposures are well diversified, so no corporate segment is taking up more than 10% of the loan book. Moving on to the next slide, page 6, our capital position. As I said, we are in place with the capital. We see some uplifts in the coming future in respect of capital position. There are some the so-called quick fix rules that were implemented in the Danish market by the half year this year. They've not been implemented for BankNordik yet, as we are for each bank, but it will be implemented implemented, most likely in the last part of next year, and then we can see what we expect a reduction of our risk-weighted exposures with around 300 million. That corresponds to approximately 0.5 percentage points uplift in the capital. So capital-wise, we are quite confident. There is this MREL requirement that for BankNordik we expect it will be in the range 14 to 15%, add on to the requirement to the solvency. We expect to partly cover that with the core capital, but also for the majority part of that requirement, we will fulfill that with issuing T3 notes, which we've seen a decent amount of activity in that area in the Danish market. So we are quite confident that there's a developed market for these kind of debt instruments, also for BankNordik's size. And the prices are also quite favorable, as we see at least in the moment. If you could turn to the next slide, slide 7. As explained, from when we published our annual numbers in the annual report for 2020, we will also public our ESG numbers, and we'll do it within the categories you have on your screen on the right: environmental data, social data, and governance data. And we will continue to have our focus, CSR focus, which are concentrated around these 5 goals, 5 UN goals. We've done that for a couple of years now, and then we'll continue to focus on doing something positive in the societies that we operate within these 5 areas. Turning to the last part of the presentation, I will just return briefly to our markets, just to give you an update on how little or how hard they've been hit by the COVID-19 situation. So we're moving to slide 9. Starting off with the Faroe Islands, it was an economic shock, not a crisis, and the economy quite swiftly recovered. So we saw this kind of V-shaped recovery in the Faroese economy. GDP growth down this year, but mainly driven by a little less activity on the construction side internally on the Faroe Islands, but also driven by lower prices on fish products that are exports from the Faroe Islands. You see that in the export numbers too on this slide. The unemployment rate on the Faroe Islands has been low for many years, and we saw an increase in the early months of the pandemic, but then it dropped again. So we are on very low level unemployment wise. The COVID-19 numbers are also fairly low on the Faroe Islands, only 6.16 confirmed cases per 100,000 capita the last 14 days. It's relatively low compared to our neighboring countries. So no hard hit on the economy. It was a hit, but not hard in respect of COVID-19 on the Faroe Islands. Moving to page 10. Greenland was even less affected by the COVID-19 situation. And the Greenlandic market is actually a quite stable market to do business in. It's a quite stable economy, and it's due to its extremely highly subsidized by the public sector. The public sector is not 100% GDP, but they take out a large part of GDP in Greenland. And it's not funded by Greenlandic taxpayers. The vast part is funded by Danish taxpayers through a yearly transfer of funds from Denmark to Greenland. So banking-wise, quite nice market to do business in, because there's not that many ups and downs economy-wise. And the COVID numbers are even lower for Greenland than for the Faroe Islands. The export is a little drop, and it's also driven by lower fish prices, product prices seen lately. Moving to the last page, 11, the Danish economy. Many of you may be more familiar with that. We've seen a harder hit COVID-19 wise. We have some high numbers here, 208 confirmed cases of the last 14 days per 100,000 capita. I think that number is even higher now. These data are the week old. The export took a dive, as we've seen in the other countries too. GDP-wise, a swift recovery, mainly driven by the early intervention by the Danish government into the various segments of the Danish economy. So we see a fairly positive development, at least compared to what we could expect when we entered the pandemic in March, April. Yeah, I think that quite sums up my quick and brief introduction to BankNordik and where we do business.
Yes, thank you very much, Rune. That was a great presentation, and we just have a couple of minutes for questions here. And I will start with the first one. I mean, you were talking about some improvements you have been doing, and we can see the cost-income ratio is nosediving. Can you be a bit more specific on the actual changes you did within your business?
Yeah, if we start with the income side of the cost-income equation, it is mainly driven of implementing negative deposit rates, not only to corporate customers but also to private customers. They have been improving the net interest income this year quite heavily. Then we adjusted the customer loyalty program, so customers that we didn't really make much money on, were not that profitable. We've made a more profitable service setup for those customers, and that allowed us to consolidate some branches, closing a lot of what's called teller functions in our branches, allowing us to have a more efficient branch setup in all three markets. Cost-wise, it is well, that was the cost part of it. Fewer employees, and we are working quite intensively of automating as many internal processes as we possibly can.
Okay. And then I noted one of your slides. You have in Denmark, you wanted to grow, have profitable growth. Is that realistic in the current Danish banking landscape? And would it make sense for you to either divest your Danish branches or acquire more business in Denmark to get more scale, so to say?
Yeah, well, at least what our experience has been, profitable. If you have to grow profitable, at least we're talking private customers, it has to be organic. We don't see any possible takeovers or anything that would be profitable on at least on the short term when we talk private customers. So we will stick to the organic growth, and we have managed to have growth and taking market share the last year. So it's absolutely possible, and we can't just think we will continue doing that.
Okay. Rune, a very last question. You mentioned, I mean, dividends and buybacks, I guess, next year, if possible. What about the old overhanging dividend from 2019? Could one get that as well next year?
Yeah, we can't see that we owe that one. We wanted to pay out 67 million, I think it was, approximately, of the result for 2019. We were prohibited to do so because of the COVID-19 situation. So we will, if we are allowed, and everything is as we see it now, we will most likely add that to the dividend for 2020.
Thanks a lot, Rune. And in the interest of time, we simply have to draw this presentation to a close now. But thank you very much, Rune, for attending our seminar here. Thanks.
Quite welcome.
Good afternoon and welcome to this afternoon session with Herantis Pharma, a Finnish-based biotech company developing treatments for diseases with a high unmet medical needs, so specifically Parkinson's disease and lymphedema. We're very pleased to have with us Craig Cook, who is the CEO of Herantis Pharma this afternoon. I'll hand you over to Craig now for a brief presentation before we'll close with a bit of a Q&A at the end. Craig, over to you.
Thank you, Adam. Delighted to be here. And thanks to everyone for joining. It's about 20 slides, so I'll go through fairly briskly so that we have time for Q&A at the end. Next slide, Adam. Usual disclaimer, next slide. Okay, so by way of brief introduction and background, I'm not clear how familiar everyone is with Herantis, so I'll just set the scene. So as Adam mentioned, we are a Finnish company based in Helsinki. We are listed on both the First North in Finland as well as in Sweden. And our assets originate from world-class research departments at the University of Helsinki. And moreover, our science and our research has been published in top-tier journals, including Nature Science, Nature Immunology, and JPRAS. So those are really top-tier journals, just testament to how good our research is. From a scientific perspective, our focus is very much on disease modification. So we're looking to slow, stop, or even reverse disease pathology. We have CDNF, which is cerebral dopamine neurotrophic factor for neurodegenerative diseases. And we have lymphactin, which is vascular endothelial growth factor type C which is a gene therapy for lymphatic diseases. As I mentioned, our focus is on modifying the disease pathology. From a disease perspective, our focus with CDNF is Parkinson's disease, and our focus with lymphactin is lymphedema. Now, for both of these therapeutic areas, there has not been a lot of successful innovation for decades. For Parkinson's, for example, the mainstay of therapy today is the same as it was 50 years ago, levodopa. And similarly for lymphedema, there's no medical therapies currently available. So we're looking to bring treatments for these diseases into the 21st century. Next slide, Adam. Our pipeline has two franchises, a neurological franchise and a lymphatic franchise. In the neurological franchise, CDNF is our lead asset that recently completed a phase 1, and now we're moving on to further development with alternative and expanded routes of administration. We also have X-CDNF that is currently in research, and that is due for compound selection early next year, and I'll touch on all of these later in the presentation. And then for our lymphatic franchise, lymphactin for breast cancer-related lymphedema is our lead asset. That is currently completing a phase 2 study. We also have early research in other lymphatic diseases. And the common theme between these two franchises is the regenerative medicine, the disease-modifying science. And success with CDNF or X-CDNF will give us access to a multi-billion euro, multi-billion dollar market. And similarly for lymphactin, in our estimates, will give us access to a market worth at least 600 million euros. Next slide, Adam. Okay, next slide. So spending some time on Parkinson's and CDNF and X-CDNF. Now, the total neurodegenerative disease market is massive. It's going to be 63 billion, estimated in 2026, currently 35 billion. Parkinson's, currently there's 10 million patients worldwide, and the market size for Parkinson's is approaching 6 billion. Our approach is the current therapies are symptomatic and don't really manage the disease per se. Our approach with CDNF is a natural molecule, occurs naturally in the body, and its natural role is to protect neurons in the body. So we're looking to harness that natural mechanism of CDNF and modify Parkinson's and other neurodegenerative diseases. Next slide. It's worthwhile spending some time on the mechanism of action, and I'll go through this fairly in a structured way. It looks complicated, but it's actually fairly straightforward. So the key word here is proteostasis, and proteins are the building blocks of the body. If you mess with proteins, you mess with the body. Simple as that. If you're on a diet or looking for a diet, they'll always say cut out fat or cut out carbohydrates, but they never say cut out proteins, because proteins are so fundamental to the body. And the process or the pathway that ensures proteins are maintained in the body is called proteostasis. And there's three key components to this. The one is the synthesis or the production of proteins in the cells. The second one is the folding, which is proteins need to be folded in a certain three-dimensional structure to exert their effect. And the third one is degradation. So it's like a quality control, because if proteins are faulty or if there's too many proteins, then the degradation can take care of those before they do damage in the cell. Now, in diseases like Parkinson's and other neurodegenerative diseases, proteostasis goes wrong. It goes faulty and it becomes awry. And that's where CDNF steps in. First of all, it acts to ensure that the synthesis and the production and the making of the proteins is maintained and correct. Second of all, it ensures that the folding of those proteins is absolutely spot on. Without that folding, there's going to be damage and the cell will die. And the third aspect is it steps in to ensure that the quality of the proteins are correct and maintained. Now, when proteostasis goes wrong, it also causes collateral damage via inflammation. And CDNF also steps in to that side of the equation by controlling the inflammation around the cell and in the tissues to prevent further damage. So 4 key mechanisms that CDNF acts on this very important proteostasis pathway. Next slide, Adam. So, and proteostasis occurs in an organelle called the endoplasmic reticulum. And this is the orange, light brown, folded organelle that you see in the picture there. And you can appreciate that it's a very big organelle. It's got a huge surface area with all these folds, and it covers the nucleus entirely. So it probably occupies more than half the cell. You multiply this by billions and billions of cells in the body, and you start to understand what an important role proteostasis and the endoplasmic reticulum has. And that's exactly where CDNF acts, on proteostasis in the endoplasmic reticulum. So remember the word proteostasis. I'll come back to it later. Next slide, Adam. So based on the mechanism of action and some compelling preclinical data, we took CDNF into the clinic, into a study that completed recently. It started off with 6 months. Patients were put onto placebo or CDNF. There then was a further 6 months where the placebo patients were also put onto drug, and currently the study is in its follow-up phases. The characteristics of the patients that entered the study were on average about 60 years old, and importantly, they had very advanced disease, at least 10 years since disease onset, the first motor symptoms. And that's important because these are very, very advanced patients where their dopaminergic neurons are no longer present. They are lost. Next slide. We were pleased in early this year in Q3 to announce that the study had met its primary endpoint of safety and tolerability. The adverse effects were mild and transient. There was a similar safety profile in the first 6 months compared to the second 6 months. There was similar safety profile between the groups. And importantly, there were no dose-limiting toxicities related to CDNF. Now, this was not an efficacy study because the patients were so advanced, as I mentioned, other than to say that we saw no worsening of disease in these patients, in a disease that you would expect to worsen over the course of the study. Next slide, Adam. So with that as a solid foundation, the phase 1, we're now building for the future for a successful CDNF program. In the first phase 1, CDNF was administered via a surgical drug-device combination that was inserted into the brain, very complicated, very invasive. We're now moving away from that to back CDNF as a standalone product to a more patient-friendly, regulatory-friendly, physician-friendly route of administration, specifically nose to brain, so intranasal in the nose via a device, and skin injections, so just a subcutaneous skin injection. Now, there's solid scientific merit and rationale for both of these approaches. We have data with CDNF using these administration options, showing that we can cross the blood-brain barrier, number 1, and we can do so in therapeutic levels, number 2. So this is an ongoing, these programs have been ongoing, and we're backing CDNF as a standalone product without having to rely on surgery. So that's the first component of the program moving forward. The second component is we want to accelerate development. So the fact that we no longer have the drug device, the complicated or invasive device in the equation, means that we can accelerate and increase the chances of successful development, approval, and commercialization. And as part of that, it's our hope as well that we will accelerate potential partnering transactions with CDNF. And the third key pillar of the program moving forward is going to be targeting earlier stage patients. So as I mentioned, the patients in the phase 1 were advanced with no dopamine neurons. The dopamine neurons were lost. CDNF functions on remaining dopaminergic neurons that are viable. So while the dopamine neurons are reducing or dying, CDNF can come in there, turn things around and do the job. But once the dopamine neurons are dead or lost, then it's too late. So we're going to be expanding the target population to an earlier stage in the disease. Next slide, Adam. What about xCDNF? So that's CDNF. Let me tell you a bit about xCDNF. So this is a second asset in Parkinson's disease. And what we've done here is we've taken the smallest, most potent fragments of the parent CDNF molecule, and we've engineered that to achieve two things. One is to be able to cross the blood-brain barrier, and two, to retain the potency. So still be able to exert the efficacious effect of CDNF after crossing the blood-brain barrier. And we've engineered the molecule to achieve specifically those two criteria. Next slide, Adam. So here's some data on the potency, and I'll walk you through it. So the plot on the left-hand side on the y-axis is TH, so that's tyrosine hydroxylase cells. So this is basically dopaminergic neurons. These are the neurons that go wrong in Parkinson's. And then along the x-axis is concentration. And what we see, the higher the number of the cells, the better, because we see in control animals here, this was done in rats, in control animals here, who didn't receive therapy, the number of surviving cells is low, of the surviving tyrosine hydroxylase, the surviving dopamine neurons are low. Once we treat them with CDNF and xCDNF, we see the number of surviving cells increase by all orders of magnitude. And this is only with 48 hours of treatment, so a very short, brief treatment. And we see here, in fact, xCDNF could be 10x fold more potent than CDNF. So tick in that box, we need to retain the potency with the fragments. On the right-hand side here, what we're looking at is alpha-synuclein, and that's one of the bad proteins that I mentioned in the degradation, the quality of control, that we need to get rid of. So here it's the opposite. Here in these cells, those levels of alpha-synuclein are very high in the red at the top. Once we treat them with CDNF and xCDNF, we see that those levels in the cells drop precipitously. Again, 48 hours of treatment, and we see these results. So again, the efficacy is established compared to controls, and another tick in the box for potency. Next slide, Adam. What about crossing the blood-brain barrier? So here we see on the left-hand side is, well, on the y-axis is just the amount in plasma, and on the x-axis is time in minutes. And that's the same on the right-hand side. On the left-hand side, we just see the profile in plasma. So as the rat is injected, it goes up and down as you would expect. And then what we see on the right-hand side, this is actually looking at interstitial fluid inside the brain. So this is on the other side of the blood-brain barrier. So xCDNF has crossed the blood-brain barrier, and once it's there, it's stuck around for a very long time. And all the time that it's there, it can do its job and act on the dopaminergic neurons. So very important to see here, number one, that we cross the blood-brain barrier, and number two, we maintain the concentration once we're there. Next slide, Adam. So just to summarize that, there's three key aspects to the program moving forward, where we're combining the ability to cross the blood-brain barrier as well as the potency, and that is summarized in CDNF, the intranasal program, CDNF, the systemic or skin injection program, and xCDNF, which I've just gone through. Next slide, Adam. I said I'd come back to the word proteostasis, and this is why, because we are in great company in the space. It's a very hot topic at the moment. It's an important research area in diseases, specifically neurodegenerative diseases. We have Prothena and Roche, market cap of half $500 million. They entered into a deal for $600 million. We have Humanity, a similar deal with Merck announced earlier this year. We have Calico Labs, which is a Google-backed company that injected $2.5 billion into research in this area. And then we have Denali, who have a market cap of $5 billion. And all of these companies, importantly, all of these companies act on a specific part of proteostasis, whereas for Herantis, we act on the entire pathway, as I've taken you through. So we're in great company with these other companies, the collaborators, and it's certainly an important focus for the biotech industry currently. Next slide, Adam. I think in the interest of time, let's go to lymphactin. Okay, I'll talk about our second disease area, that's lymphedema with lymphactin. Next slide. So lymphedema is the lymphatics, all the lymphatic vessels in the body, their function is to drain fluid and water back from the extremities, the legs and arms, back into the heart, so that fluid and water can be reused. Now, in lymphedema, something goes wrong with the lymphatics. It's either genetic, or there's due to infection, or due to injury, or some other insult, with the result that the lymphatics are dysfunctional and the fluid doesn't drain. And the final outcome is that those limbs where the lymphatics are supposed to drain just become laden with water, heavy with water and fluid, very uncomfortable, very painful for these patients. And another medical term for lymphedema is elephantiasis. And that's because the limbs that are affected by this literally look like an elephant's limbs or arms, because they are so big and heavy and soggy with water, because there's nowhere for the water or fluid to go. Our focus is on breast cancer related lymphedema. So patients come in for breast cancer surgery, and at the same time, they often have the lymph nodes removed in their axilla, in their armpit, which means that these lymphatics in the arm are no longer joined to the lymphatics of the body. So the fluid collects in the arm becomes very heavy, sometimes 5 or 10 kilograms just for an arm, which is very painful, very debilitating for these patients, and there's no therapy for this other than putting a giant blood pressure decompressive cuff. 30% of breast cancer patients who have a mastectomy develop breast cancer-related lymphedema, and our focus with Lymphactin is to re-establish the lymphatic drainage system so that the lymph can drain from the extremities back into the body and relieve the suffering for the patients. Next slide. A quick word on the mechanism of action. So VEGF-C, or vascular endothelial growth factor, works on two main compartments or components of the body. One is the blood vessels. It's a very potent growth promoter of blood vessels. And the other one has been a similarly potent growth promoter of lymphatic vessels. And for us, with VEGF-C and Lymphactin, we are specifically focusing on lymphactins. We know the receptor, we know the interaction, and that is our focus with Lymphactin, purely on the lymphatics. Next slide. This just summarizes, so you can see the top graph, there's no connection between the lymphatics in the arm and lymphatics in the body, and in the bottom graphic, that's what Lymphactin looks to re-establish those connections between the lymphatics in the arm, lymphatics in the body, such that the lymph and the water can drain out of the arm and relieve the suffering of these patients. Next slide. Where are we? Well, we've completed a phase 1 successfully, and we just announced 24-month data on the phase 1. It continues to be safe and well tolerated. And although this was not an efficacy study because there was no control group, we did see volume reduction in approximately 50% of patients. We did see improved lymphatic flow in some patients, as well as improved quality of life in most patients, which is a very, very important indicator for patients as well as for regulators. We're currently in a phase 2 study, and we expect that to read out early next year, and that will give a clear picture of efficacy, because there is a control group that got Lymphactin and others that didn't get Lymphactin. Sorry.
Craig, sorry to cut in. I think in the interest of time, we'll move over to a little bit of a Q&A just to finish off. So,
just the summary slide, that's the next slide. You just leave it there.
Yeah. Okay. We can leave that. We can leave that up. There we go. So my first question is around the CDNF program and the switch to alternative routes of administration. And I was wondering if you could add any detail on kind of the prospects of achieving sufficient blood-brain barrier penetration with these alternative routes of administration, in the light of the fact that obviously intracerebral delivery was pursued initially. Can you give any more details around that?
Yeah, sure. So there's quite an echo. I don't know if that's me or... Can you hear me okay?
We're adjusting the sounds here. Is that better now?
Yes, that's good. That's good. So as I mentioned, the three follow-on tiers of CDNF. Number 1 is intranasal, and with intranasal we already have data that we can cross the blood-brain barrier, number 1, and number 2, we can cross it at therapeutic level. So we already have that data. This has been an ongoing program for a couple of years, And right now, the focus is on the formulation side of it to even increase that even more, with a target roughly 10% to cross the blood-brain barrier and get into the brain. So that is a program, existing program, that we know we can cross the blood-brain barrier. The second one is the subcutaneous route. Again, it's a preclinical program focused on acute neurodegenerative disease where the blood-brain barrier is actually a bit compromised. And there, again, we know that we can cross the blood-brain barrier in meaningful amounts in order to be able to do the job. And the third key program is the XCDNF, the small one, where we know that we've engineered those particles small enough to cross the blood-brain barrier in therapeutic levels. So we've established all of that we can do it. Now it's a question of optimizing it and making sure that we can get it to levels that can do the job in the brain. Does that answer your question?
Yeah, no, that's great. Thank you very much. On that same note, with the shift to alternative means of administration, intranasally and subcutaneously, can you give any details around when we might expect to hear more about the development path forward for CDNF specifically, timelines and such?
Sure. So clearly we're working through the different programs, but in summary, or to give a broad framework, next year will be spent on the preclinical development of the new formulation routes, as well as for XCDNF. Thereafter, the following year will be spent on IND enabling in order to get into the clinic. So once we've done the IND enabling, we'd expect to get back into the clinic thereafter.
Okay, great. And we've, as you mentioned in the presentation, obviously seen the long-term follow-up data from the Lymphactin phase 1 study. We've got the phase 2 readout early next year in the first quarter. I was wondering if you can give any more details on what the development path will look like post those results, assuming obviously that they read out positively. What can we expect in terms of subsequent studies and the design of those studies and so?
Yes, I think with the Lymphactin, it's quite well mapped out. Pending data, as you say, assuming that the data is positive, then the next logical step would be to do a phase 3, a pivotal phase 3 study. So that would be something that we could expect in 2023. But as I say, pending data. So we haven't sort of communicated anything. That's clearly a distinct possibility, but we need to wait and see what the data shows.
Great. And just lastly, I think in the interest of time, what can you say about the cash position of Herantis, specifically around the potential need for cash infusions to continue the development programs? Are there any details that you can give around that?
Yes, so I think what we've disclosed is that we have runway through to the beginning of the second half next year, end of the first half next year.
Okay. Great. I think that's all the time we have. So thank you very much, Craig, for the presentation. And thank you to all our listeners.
Thanks, everybody. Thank you.
And you're live.
Thank you. Good afternoon, everybody. I hope you're all safe and sound. My name is Benjamin Silverstone, and I am the equity analyst covering the exciting Icelandic-based and Copenhagen-listed company Össur here at ABG. Today, we have the pleasure, for the first time ever, of having Össur participate in our Introduce Investor Day. So without any further ado, I would like to give over the word to Össur's CFO, Sven Sorensen, who will so kindly to be here today and who will be presenting the company. Thank you so much, Sven, for being here today, and the word is all yours.
Thank you very much, Benjamin, and thanks to ABG for hosting us, and thanks to all of you on the line for your interest in Össur. I will take the next 15 plus minutes to go through our, let's say, an overview presentation of Össur, and then we can go into Q&A. So if we can please switch to the first slide. So Össur is a mid-sized global healthcare company operating in two sub-segments of the broader orthopedic market, or prosthetics and bracing and support, and I'll explain that on the next slide. The most of our business is in the, let's say, the well-funded, mature healthcare markets, meaning Canada, US, UK, France, Benelux, Germany, Scandinavian countries. This is where we generate 90% of our business. We are a technology company. We invest 5% of our sales in R&D every year. We have around 1,700 patents that relate to how medical devices are fitted to the external part of the body. We don't have anything that is invasive. We purely manufacture products that are, let's say, placed on the external part of the body. Since the company was listed in 1999, we have on average grown our sales 20% through a combination of external growth and organic growth for every year. And currently our EBITDA margin is around 22% for our last full financial year. As Benjamin mentioned, we're listed in Copenhagen, and our main shareholder is the William Demant Invest Foundation. So if we go to the next slide, please, to dive a little bit into more details with these two markets that we operate in, prosthetics and bracing and support. What you have here on the left-hand side of the picture is a description of the prosthetic side, which is over half of our sales. What we have, our product the products that we bring to market in this segments are basically all the components that are needed to build a prosthetic leg, and we segment these products by, on the one hand side, mechanical products, and then we have our bionic products. The mechanical products are today the majority of the business, while the bionic products are around little over 20% of our sales in prosthetics today. The bionics have some sort of sensor technology, some sort of artificial intelligence algorithms that learn how the user walks and adapts to each and every individual's walking style, which ultimately leads to a higher quality of life for the amputee. While the mechanical products are, mechanical. There's no sensors or no electronics or anything like that. And this remains the bulk of our business still in prosthetics, but there is an increasing trend towards bionics. So that's the prosthetic side of the business. The bracing and support side is a little less than half of our sales. Here we have products that cover a fairly wide range of indications, everything from small or minor injuries to or minor ligament pain to, let's say, more complex solutions like post-operative bracing or chronic solutions like osteoarthritis. And also, like in prosthetics, in bracing and support, we have a complete product range, if you will, or a one-stop shop for bracing solutions. Now, what is also important to mention here is that over 90% of the products that we sell are ultimately reimbursed by some sort of reimbursement system, whether government or private. What is not reimbursed is typically what we sell in markets where there is not a well-established reimbursement systems, or in most of our sales in emerging markets are so-called private pay sales, where there is still no reimbursement. If we go to the next slide, please, on the geographic setup. We are also, as Benjamin mentioned, we're headquartered in Iceland. The company was established here in 1971, so we turn 50 next year. Here in Iceland, we have R&D for prosthetics and some manufacturing of the, let's say, low volume, high-tech prosthesis. As I mentioned in the beginning, our markets are the main healthcare markets of the world. We have the US is our single biggest market. And as I mentioned earlier, the other 90% of our sales is in the mature, well-established Western world healthcare markets, while 10% of our sales is originated in emerging markets. In addition to manufacturing in Iceland, we also manufacture in Mexico and have some sourcing of manufacturing also from China. If we move on to the next slide, please, and look at the two markets that we compete in a little bit more detail. Starting with prosthetics, which we estimate to be a $1.3 to $1.4 billion market, where Össur has a market share of around 22 to 23% as the second largest player in this market, where Otto Bock, a German family-owned company, is the largest company market share-wise in prosthetics with around 35% share. Then the remainder of the field here are smaller companies that have a presence in fewer markets. And in most markets globally, you have Össur and Otto Bock as the leading players. We estimate the market growth here to be around 3 to 5%. Now, what drives growth in prosthetics is let's say at least where we generate 90% of our sales, we are servicing an amputee population that is rather stable in size. But what drives the value growth in the industry is that proportionately more and more of these amputees are getting access to better technology prosthesis like the bionics we talked about earlier, and I'll explain that in more detail on a later slide. Now, we go to market in prosthetics through orthopedic and prosthetic clinics. This is a fairly well-defined customer group. Our main, let's say, point of sale is the prosthetist, which is the specialist that is servicing the amputee. However, we also need to market our solutions to the payers and increasingly also to the end user, who is more and more influential in terms of deciding what type of prosthesis they prefer. So these were the highlights on the prosthetic market. For bracing and support, this is a bigger market, $2.7 to $3 billion. Our market share is we are among a group of 5 to 6 other companies that are sort of second in size to DJO Global, which is the biggest player in the bracing industry with about 20% global market share. What drives growth in bracing and support is a little bit different in prosthetics. The growth drivers here are these sort of classic healthcare growth drivers. The average user of a bracing product is typically an elderly person. So as we grow older, proportionately in the Western world, all else equal, there's more demand for bracing. Also, lifestyle-related topics such as increasing demand for active lifestyles. Also, obesity-related trends that leads to pressure on joints, that leads to demand for arthritis solutions, etc. So the volume, this is more a volume-driven market, volume growth-driven market. For some of the bracing products categories that are more simple in nature, we have some price erosion year over year to the tune of 1 to 2%. Now, the channel structure here, or go-to-market strategy, is again 2 O&P clinics, which are our core customers. These O&P clinics, they typically do both bracing and prosthetics. That is their core business. But on the bracing and support side, we also call on hospitals and orthopedic clinics in the US. So these few slides that I've gone through, this concludes, let's say, the descriptive part. If we look more forward, if you can go to the next slide, please. Our main themes when it comes to how we run the business, we are innovation, growth, and efficiency. If we go to the next slide, please. On the innovation side, which has always been at the core when it comes to how we grow the business and how we think about maturing and developing the business, is this technology, so-called technology trade-up. And this is a simple slide that explains the mechanics. If you look at the lower left side of the picture here, the wooden leg, this used to be the standard of care if you go back 30 years, and is actually in some markets still what is available to amputees. Now, the market today is mainly around mechanical solutions. This is our bread and butter business today. What we have here an example of a mechanical foot and sort of a typical price point where we sell to O&P clinics. Now, if you move to the upper right corner here, you see the bionics, some examples of the bionics, and what you also notice is that the price point is totally different. And the short story here is that the health economics around paying for bionics are solid, and this is our argument towards the payers, that for those individuals who use good prosthetic solutions, when you see someone using these products, they will walk like the rest of us that have 2 normal legs, meaning that they are able to have a more active lifestyle. They're less likely to have problems on the sound side, which come from using poor quality prosthesis, and they're much less likely to fall, which is one of the biggest cost items for the healthcare systems when amputees fall and injure themselves. So if you add all these things up, it is a good investment for the system to pay for bionics. And bionics are reimbursed in all of our major markets. But those who are eligible for bionics, that the criteria differs quite a bit between the different geographies. So our objective here is to continue to promote these health economics and fight for the adoption of bionics for the benefit of the user and the system as a whole. So this is a good example of our philosophy when it comes to innovation. We are creating medical devices that are good for the user and are efficient for those that ultimately pay for those solutions as well. And in the upper right corner here, you have a reference to what are our mind-controlled prosthetics. This is technology that we have been working on for some years and have demonstrated that this works, where in the sense that the amputee is sort of uses implanted sensors, and I mentioned in the beginning we don't have any invasive products. This is the only exception, but it's only at a very, very early stage, and these sensors are still going through FDA testing. But the next level of technology trade-up beyond the bionic solutions is when we have amputees using or controlling their prosthesis more through intuitive control or mind control. But again, this is technology where we expect the commercialization is still some years out there. But it's just to signal that there's still plenty of room to innovate and bring better technology to the existing amputees. If we go to the next slide, please, when it comes to other important growth themes, I want to highlight our geographic expansion strategy. Emerging markets, as I mentioned in the beginning, is about 10% of our sales. However, when it comes to the global amputee population, we estimate that there are around 750,000 amputees that come into the amputee population every year, of which over 500,000 are in emerging markets where we generate 10% of our sales today. So we have over the last few years been sort of establishing a presence in new markets, and we have aggressive plans of establishing our business in new markets over the next in the short to medium term, and this is one of our key growth drivers. Also, I want to highlight here acquisitions, which Össur has always been active on the acquisition front, where we have strived to find or to complete on acquisitions that strengthen our position in the market and our ability to execute our strategy. We have, during the recent years, been focused on acquiring clinics that are at the front end of our value chain, which positions us to further facilitate the technology trade-up and have the discussion with the payers around the health economics of using bionics. So acquisitions will continue to be a key growth theme for us going forward. And now, since we are running out of time, just to say a few words around financials. Here you have the 3 last years that we have reported our numbers, and what you see here is on the growth side a fairly stable mid-single-digit organic growth rate at the upper end of what we estimate the market growth rate to be, and in addition some sort of another on average 5 percentage points from growth from acquisitions. Our operating profit has been increasing step by step, where we expect going forward to generate a gradual improvement in our underlying margins, which are driven by product mix and scalability and efficiency initiatives. Ultimately, the business is a cash generative business, and we use this cash flow to make strategic acquisitions in addition to paying dividends and share buybacks. Obviously, through COVID, our financial performance has been impacted. We have, in our latest announcements, we have described how we are gradually getting back on track. And when we reported Q3, now we also commented that we see sales are largely on par with prior year as at current trading, at least in October. So I think, Benjamin, I think we're almost at the 20-minute mark here. So I think I'll pause here and we can move over to questions.
Thank you very much for this interesting presentation, Sven. To start off the Q&A section of this presentation, taking into consideration that there might be a few investors on this call who are new to the case or haven't learned a lot about the case so far, could you please elaborate a little bit on the parameters that you mentioned a bit about before, which allows you to grow significantly above the market growth, which is, estimated around 3 to 5%. So you do mention, your acquisition strategy, take tradable things, but could you perhaps just elaborate a little bit on what makes Össur stand out in regards to growing above market? Thank you.
Our let's say our prosthetics division has been the main growth driver in the business. If we look over the last 5 years, we've been growing in prosthetics between 6 and 8% in a market which we estimate to be growing 3 to 5. And there are 2 main reasons for this. One is our bionics strategy, where we have had a steady pipeline of bionic innovation, both bionic hands and knees and ankles. So this, if we go back to 2012, 13, bionics as a percentage of sales was something around 11-12%. It is today above 20%. So we see our bionics, which are growing sort of a double-digit, increasingly becoming a bigger share of the pie. So this is one important element. The other theme is what I touched on briefly, the emerging markets strategy. Ottobock is the leader in emerging markets, our main competitor. And we are gradually building a stronger presence in these markets, and this has been also a major contributor to our above average growth rate if we look at the last 2 years. So I would highlight these two elements. I also maybe just to mention as such, I mean, if you look at the dynamics in the prosthetics industry, where we have Össur and Ottobock, where I believe we have the advantage of scale around distribution, manufacturing, and also an ability to bring to our customers other things than selling them good prosthetic components. We have been sort of strengthening our service offering, including reimbursement support, and including also initiatives to help them, let's say, take out some of the traditional manufacturing activities that they perform on the clinical side and outsource them to us and a host of other similar solutions. So I think some of the industry dynamics favor the larger companies in the industry today.
Thank you very much, then.
Sure.
To also briefly touch upon what you mentioned in regards to your last quarter, and you spoke about how you're returning to a more normal level of profitability, which you had last year as well. As it did become evident during the last quarter that you now are sort of getting back to this profitability level and EBITDA margin levels, could you perhaps speak a little about how you're seeing this going right now? If there's been any changes, or if it's still going on the right track?
Yeah, so I think I'll sort of stick to the line of communication around Q3, where our message was that we were on the sales side, on average, continuing to see sort of a positive, let's say, trajectory from the let's call it the bottom in March, April during the first wave. So our sales are gradually getting back on track. And you're right also on let's say the profitability in Q3 was also very sort of much in line with prior year, so to say. And that is also what our communication has been, that we don't see COVID fundamentally impacting the profitability in the business, nor the demand side on a more or medium longer term basis, because the need for our products is still there. The amputee population is still there, and we look at ourselves as being so we're servicing this amputee population that continuously needs upgrades to their prosthesis and repairs and things like that. And it's also worth mentioning that most of our sales every year are sales that are ultimately going to existing amputees that have some sort of solution already. Probably in the Western world, it's probably 70 to 80% of the business with our customers, and therefore our business is sort of, if you call it, servicing existing amputees.
Thank you. So I think that gives a good understanding of the underlying business fundamentals here. Yeah. A quick question just in regards to the patients. As you mentioned, the long-term outlook really still looks solid. I mean, COVID-19 does not seem to have an impact on the long-term outlook. Could you just briefly walk us through the timeline of the patient from when they get an amputation to when they start actually using your products, and then this recurring business, as you mentioned?
Yes, exactly. So just for education, the reasons for amputations are in the Western world, it is where we generate most of our business. We estimate that 70% is related to, let's say, lifestyle-related issues that lead to diabetes, that lead to vascular complications in the lower part of the body that ultimately leads to amputation. That is 70% of all amputations. Then there's accidents, cancer, birth defects, that sort of provide the balance. Now, the way it works when an individual is amputated, this is done in a hospital setting by an orthopedic surgeon, and the patient will need, depending on the severity and the underlying condition of the patient, they will need from weeks up to months to recover and become ambulatory. Then these individuals are referred to an O&P clinic, which is our customer, where they are received by a prosthetist who will be their advisor and become often very connected to these individuals, because it is a very traumatic incident to lose a limb, and these prosthetists become very connected to the amputee and will work with them for a big part of their lives, and they will help and advise on selecting products, on advising, let's say, how to tackle reimbursement, and will often also sort of help the user just learn how to use the prosthetic. And then this individual will come back one to two times per year or more. For some parts of the prosthesis need an upgrade once or twice a year, while, for example, maybe the more or the bigger components like the knee joint or the ankle joint are maybe replaced on a 2 to 4 year cycle, also depending on reimbursement systems. So this is broadly how it works. And again, it is a bit different market by market, because the underlying reimbursement system is very different. Like I said earlier, those that are eligible for bionics, for example, is just different in the US than it is in Germany. In Germany, most people get it. It's just the prosthetist who simply, if it is his view that this individual will have a higher quality life using a bionic, then the system will pay. While in the US, which is just another example, there it is only those that are considered active individuals, those that can vary the speed of their walking and are typically the younger amputees. They will be eligible for. However, those that are elderly and less active, they will not be eligible for reimbursement of bionics. So this is just sort of a big picture how it works.
Thank you very much, Sven. Due to your time, we will unfortunately have to finish the presentation here.
Sure.
But I would like to thank you very much for taking the time to be here today. It was a pleasure. And thank you to everybody who participated on the call today. If you'd like to know more about this interesting company, I would like to highlight that we have an in-depth analysis of the company publicly available on the introduce.se platform, which was published on the 25th of October. So thank you so much for today, everybody, and I hope you all have a good day.
Thank you very much.
Thank you.
Have a nice day. Bye-bye.
Hello everyone, welcome to ABG's Investor Days. My name is Carl Bokvist, I'm an industrial analyst here at ABG. With us now we have the pleasure of hosting CTT Systems and CEO Torbjörn Johansson, who will at first give a presentation, and afterwards, if time permits, I will ask a few questions. So Torbjörn, thank you very much for joining us, and please, the floor is yours.
Yes, good afternoon all of you. We go straight into the presentation. We take page number 2. It is me, Torbjörn Johansson, CEO, that make this presentation. We take the next picture, picture number 3. As you all know, we work with humidity control in the aircraft for a better climate, both in the aircraft and in the sky. And we are developing and producing humidifiers and dehumidifiers. We take the next page, page number 4. It's not a long time ago since we published the third quarter report, but we can repeat very quickly. We had net sales of 38 million. It was down 54% towards last year. The EBIT margin was 17%. And we still had a negative cash flow. And of course, those figures are due to the COVID-19 situation in the aerospace. We take the next picture, it's page number 5. We have a forecast for the fourth quarter. It will also be a tough quarter. We expect to have sales somewhere between 35 and 45 million. And the larger interval is due to the low visibility for the moment. We take the next picture, page number 6. As I said, we have now made 2 quarters in the COVID-19 situation. And if we look, we have lost sales in 2 areas. The OEM sales to Airbus and Boeing, we are down with 57% compared to last year, and it is mainly due to COVID-19, but we have also stopped delivering the drying system to the 787. That has some effect also. We have a bigger drop in the aftermarket. We are down 68% compared to last year. So as you understand, it has been 2 tough quarters for CTT, but we have been able to stay with a decent margin in those quarters. I expect, as you saw on the forecast, that the next quarter, which we are in now, will be tough and perhaps even 1 or 2 quarters more. We take the next page. But anyhow, even if it's hard now, I see some light in the tunnel. This is a picture about the total number of flights in the world. And as you can see, the red line is the flights we had 19, and the blue one is the flights we had during 20. And you saw when the pandemic was at worst, we were down to 25-30% of the flights compared to last year. But now we are up to about 60% of the flights. It has been a little bit flat, the curve, the last month because of the second wave. But this is the overall flights. It means short haul, medium haul, and long haul. And we are more dependent on long haul, as you know. But there is also some lights in different areas of the world. In China, the domestic traffic is back to the same level as before the pandemic. And if we look at Russia, which is an important market for CTT, Pobeda, which is flying domestic, they even did fly 12% more flights during the third quarter this year compared to the last year. So it means there is signs that we are in the recovery phase. We take the next page, page number 8. And as you know, the most important part of our business is the aftermarket. And aftermarket in wide body, and especially on the 787 and 350 aircrafts. And we are in a lucky situation that our population is very young. it means most of our systems out flying are less than 5 years, and almost everyone is less than 10 years. So we have a population that will come back. It will not be parked. And you can also see on the left diagram that you see the mix of our type of humidifiers. You have flight deck blue, most of them is crew rest, but also some cabin. We take the next picture, picture number 9. And when we talk about the aftermarket, for us, the most important part of the aftermarket is the 787 aircraft. There we have our biggest population. And if you look at the right picture, the active fleet of 787, you know, now we are back to about 90% of the aircraft we had before the pandemic is back flying. It was down to less than 50% when it was as worst, but many of the 787s are flying. But what we don't have is, if you look at the left diagram, we are not back to full utilization of the aircrafts. If you look at the average 787 aircraft, it is now flying 44% of the flight hours we had before the pandemic. But we were down in June as low as 25%. So we have a recovery on the 787. And the figures are similar on the A350. And I think this is a little bit logical because the 787 and the 350, they are the most modern aircraft. So they will come back earlier in the air than the older and long-range aircraft. So it means that our system will be back earlier than the complete long-haul fleet is back. So we are lucky to be on the right type of aircraft. We take the next picture, and that is picture number 10. As you saw on the last page, we have a recovery, but I think the recovery will get quicker during 21, and that is because of the vaccine. With the vaccine that works, it seems like we have 2 or 3 of them on the way. I think people will start to fly again, and there will be a demand for flight. It will be a demand by business and leisure travel. So I think we can grow quicker in our aftermarket during 21 than we perhaps think now. Leisure travel on the long run, I think there is no indication that the global people will not travel in leisure in the future. I think we will bounce back. Perhaps it will take a little bit longer time for business travel, and perhaps business travel will be a little bit reduced compared to before COVID-19 because of the IT development. This meeting today is a typical example of that. Perhaps it works with IT, but for us, even if the business travel is not coming back 100%, we still have a lot of possibilities to grow. We take the next page, page number 11. If we look here at the pandemic and what it means for us, perhaps we could have some benefits regarding the humidifier market. I think it is more focus on air quality in the future. It will be more focus to fly safe and well, and not to be dried out. I think this air quality, air humidity discussion could help us in the long run to sell more humidifiers. On the dehumidifier side, I think we will have some help when the pandemic is over. It will be even more focus on sustainability, and sustainability is a thing that can drive the sales of dehumidifiers. The dehumidifier reduces fuel consumption and reduce the CO2 emission. And there is a lot of stakeholders that will put pressure on the airlines to be more green. We take the next page, page number 12. Stakeholders, that is perhaps the public, perhaps political and so on, they will really try to make the airlines more green, and the drying system could be a piece in this. Take the next picture. If we look at the humidifier on board, I think there is more and more discussions about the immune system. The immune system suffers from very dry environment for a long time. It is more and more discussions about how the virus is transported in the air. If the air is very dry, there is a tendency that the droplets can travel longer distances. It means you need to have a longer distance between people if it's very dry. So those discussions that we have due to COVID-19 will be positive for the humidification system in the long run. It will be less acceptable to dry out during long-haul flights. We take the next page. As you have seen, we have started a cooperation with Camfil. It's a world-class air quality company specialized in filters, and they are located with their development in Trosa, not far away from us in Nyköping. And the idea is that we should introduce some of the Camfil technology, filter technology, into our humidifiers to make the humidifiers more attractive. It means with the humidifier in the future, you could humidify the air, of course. You can take away VOCs on ground operations. Sometimes you get fume from the engines into the cabin. We can take away that with Camfil filters. And we can also take away ozone during cruise. That is the idea, to make our humidifiers more interesting for the airlines, and we would like to market ourselves a little bit more in air quality. We take the next page. For CTT, of course, we are down now to much lower sales than we were before the pandemic, and I see a lot of opportunities now that we can start to grow again. The most obvious thing is that the aftermarket will come back. We will get higher sales of consumables on both A350 and 787. We can grow our repair business. Commercial OEMs will take a little bit longer time to go back again. We have good opportunities in private jet and VIPs, and we also have opportunities in retrofit. We go a little bit more in detail on those different areas in the next pages. We take page number 16. The aftermarket will grow from humidification sales, from pad sales, that is very obvious, but we have a big fleet of 787 with drying system, and many of those aircraft are getting out of the warranty time, so I expect that our repair business will start to grow significantly 21, 22. If we look into OEM, of course, it will be lower amount now for 21 and 22. Airbus and Boeing will go down in building quantities per month during 22 and 21. They forecast to go up in production again in 23. To some extent, we can compensate this because the 777X will start to be delivered parts to, and also the MC-21. But it will not be enough during 21 to compensate for the lower production rates on 350 and 787. We had our first humidifier in the 777X flying because of the fourth test aircraft did fly in the fourth quarter. So that is really a milestone for us. We have now humidifiers flying on 380, 787, 350, and now also 777X. So on all long-range aircraft, more than. We look into the next segment where we can grow. It's, of course, the VIP market. We have a good penetration on big VIP aircrafts, and we are trying to improve, or we are improving our system on the A320 VIP together with Airbus. There is opportunities. Airbus will also make a VIP version of the newest Airbus aircraft, the A220, and I think we have good chances there also. But perhaps even more interesting is that we are delivering now the first systems for a business aircraft. We are in the delivery phase of 2 systems for the global 7,500 aircraft. That aircraft, those 2 aircrafts will be flying during next year. So this is the first time that CTT deliver into this class of aircraft. Those large cabin long-haul business jets, they are built in relatively high production rates. We expect that over the years now they will build 50 to 100 aircrafts, and they fly very long distance. And if you fly 10 to 15 hours in those aircraft, it gets extremely dry. So I think there is really a need for humidification in those aircraft. So it means that our deliveries to private jets, which will include both business jets and VIPs, has great opportunities to grow over the next years. If you look into the retrofit market, of course, that is a little bit tougher now. It's difficult to sell to the airlines when they are in that bad financial situation as they are now. But we still have interest. We have interest from airlines that want to invest in the drying system, and we see also interest in humidification. So even if it's very difficult in those environments, we see a potential here, and let's see what happens. If we look at dehumidification retrofit, I think the big chance we have here is really the green, the sustainability discussion. All the airlines will be under pressure when the pandemic is over. They will be more and more under pressure to be as sustainable as possible. It means for the airlines to save fuel. The drying system is a fuel-saving system. So we know, and especially in Northern Europe, there is a lot of discussions of what you can do in the aircrafts to reduce fuel consumption. Another retrofit opportunity which we are working with is to humidify the business class in the 787. As you know, there is about 1,000 787s out there flying. Most of them have humidifiers from us in cockpit and crew rest, and it would only need one more humidifier to also humidify the business class. When we developed those systems 2005 to 2010, business class humidification was not that far in development at that time. So Boeing decided to go with 787 without cabin humidification. But now, of course, cabin humidification is possible on both A350 and 777X. So why should we not be able to sell humidification here? The last picture, I think we have now 19 minutes, and I have 1 more minute. But the last picture, I think, is the most interesting picture. This is a picture when they did fly the longest range flight on the global 7,500. I don't know if it was 17 hours or if it was 15 hours. But in this very nice aircraft, it's really a nice business jet. There will be 2 of these aircraft type flying next year with CTT's humidification system on board. And believe it or not, those 2 aircraft will be equipped with 4 humidifiers and 1 dryer. So it means such an aircraft, you know, the average 787 aircraft has perhaps 2.4 humidifier. So those aircraft could have more will have more humidifiers than even a 787. So for us, we really break into a very interesting market. Okay, the last picture is question and answers. So please call. Do you have any questions?
Of course, Torbjörn. So let's start with one of the first opportunities that you mentioned that had to do with repairs. Just for us to get a feel for it, you said that you had around 2,000 dehumidifiers currently operating, so to say. And we know that you, in your annual reports, have illustrated the relationship between the initial point of sale and the value from your aftermarket revenue. So just to get an insight into how much revenue are we talking about from the repair sale, so to say? Is it more similar to the aftermarket price, or that you actually replace the entire unit so it would be equal to what you sell for in the OEM channel?
No, I think if you talk about those 2,000 dehumidifiers out there, that is the one on 787. Of course, if you get a failure in those units, you will repair them. So the repair business, we expect over the life of a dehumidifier that you will have the same revenue in repair as you have the initial sales. But this sale starts after the warranty time has gone, and the warranty time is 4 years. And normally a unit don't break the first 5 or 7 or 8 years. But we are coming in now in a phase where we think we will have more repairs on 787. So there will be revenue. It will not be the same good revenue as we have for a humidifier, because there we change more expensive parts every year. But it will be substantial over the next 5-10 years with repairs on the 787.
And you also mentioned that you are now actually running test flights on the 777X with the humidifier installed. So in your view, how long do you think it will take before we go from test flights to first commercial launch?
I think normally the 777X would have been delivered by the end of 21 or early 22. So I think it depends a little bit on the pandemic, but it's so much prestige in this project, so I think Boeing really would like to get delivery, and Emirates will like to start to fly this aircraft.
And of course you're talking a lot about different long-term opportunities across different aircraft models, but in the near term and the ongoing recovery, you mentioned in your last report that there was potentially a sort of inventory adjustment, that we could see aircraft actually returning into service, but your aftermarket revenues did not really follow that kind of similar development. So if possible, what have you seen in the near term? Do you still expect an uptake in your own aftermarket business in line with the recovery in aircraft?
This is a tricky question because it's the most important question about the next report. So I don't have any more comments than I had after the Q3 report. We are coming closer to the Q4 report, so I really don't want to comment on that in detail. But it's obvious because we have the recovery on the 787 and the 350, and it will continue, and I think the recovery will go quicker after you have started to use the vaccine. So independent when it will come during 21, but exactly how quick that happens and from which quarter it happens, I cannot and don't want to comment. You will see that in the report.
And final question before we run out of time here. Have you seen any new development in terms of either new competitors or customers that would like to renegotiate terms or anything like that? You have historically had a very, very strong position in this niche.
No, we have, as I know, we have still no competitor, and I think it's very obvious that there is lower risk for competition when we have bad times in the aerospace. So it is no change. Then the customers, of course, they are very, if we talk about Airbus and Boeing, they are very keen on keeping their supply chain. It's hard enough for the supply chain to manage these lower quantities. So it would be absolutely absolutely funny and not logical at all that they would start to negotiate new terms. The supply chain has problem enough with the lower quantities, so I don't expect any of those initiatives.
With that, Torbjörn and CTT, thank you very much. Thank you all of you who have been watching, and I wish you all a pleasant rest of the day. Thank you, Torbjörn.
Thank you very much.
Hello and welcome back to Investor Days with ABG. My name is Ofelia Aspemyr and I'm an analyst within the Industrials and Renewable team here at ABG. With us today we have Christian Berner, Tech Trade, and CEO Bo Söderqvist. That will start off with a presentation followed by a Q&A session. With that said, please go ahead.
Thank you. Next slide. My name is Bo Söderqvist, the CEO at Christian Berner Tech Trade, a technical trade company. And I start my presentation with a short film, Who Are We? So next slide.
People ask us what we do. Well, we don't write music like this. And we don't produce any musical instruments. But our acoustic solutions made this room sound great. And all that food you love. We did not make that either. But we developed processes for smart packaging, keeping it fresh and safe. The pulp for the tissue comes from the trees. We just provide technical solutions for a sustainable paper production. Planet Earth provided the water. But our UV system and filtration helps to keep it clean. And we did not build this comfortable bed. But our vibration dampening made that tram run a lot more quietly.
Okay, next. Most important for our company's success, I will say, are our employees with high technical skills and understanding of our customers' process. Next slide. Important areas for us are quiet environments, where we are leading in the Nordic market for higher demand in rail, light train, metro, and woodhouse production. Other important areas are cleaning drinking water without chemicals, and our own product, Zeta boilers for sustainable excess power to reduce CO2. Next, please. Market overview in turnover. Sweden about 500 million SEK, Norway and Finland about 90 million SEK, and Denmark about 30 million SEK. Next. Our business is divided in two business areas, process and environment and material technology. Next. Here we have process and environment. They are divided in 4 different product areas. They work 4 to 20 salespeople, depending how big the product area are. For example, process equipment, filter technology, etc. And we always met the customer as a specialist with technical understanding for our customers' process and demand, as I said before. Next. In material technology, we are divided in 3 different product areas: vibration, technical plastics, and bullerbekämparen. Bullerbekämparen we acquired last year in October. Next. A case in Norway with special pumps from Christian Berner AS to a customer, Clean Marine, to reduce sulfur. It was a really fun project in Norway last year. Next. Here is another, for us, really prestige project. The world's tallest wooden building receives vibration insulation from Christian Berner. Next. Quality products are the core of our offering, but we also add services to sell more complete solutions to our customers. For example, installation, training, consulting, services, etc. Next. We have about 100 suppliers and then more than 4,500 buying customers during last year. The largest suppliers stand for about 8% of our sales, and the largest customer, if I remove the large boiler project, stand for about 2% of our sales. So I will say we have a really good spread in risk, both at the supply side and also for the customer side. Next. We are everywhere. Here is our customer segments. And as I said, we are everywhere. So also here we have a really good spread of risk. Some of our larger customer segments for us are process industry, water treatment, and the food industry. Next. We have divided our sustainability work in 3 areas. All of them is important. Partner for sustainable value creation, attractive workplace, and a credible partner. Next. We have a vision to growth, both organic and through acquisitions. And you will see that later when I have a brief financial information later in the presentation. Next. I will say some trends in the market benefit our business. For example, the demand of increase on cleaning water, less noise, and reduced CO2. So these areas are growing by themselves. Next. Our acquisitions over the years, Empac OS and Alphatech Sweden AB will take over in October this year, Bullerbekämpare in October last year, and Sander Ingström 2018. We were listed at Nasdaq First North 2014 after 120 years as a family-owned company, and we changed list to the main market during 2017. Next. Brief financial information then. Next. Turnover and profit margin. You can see our financial objective is to the left here, revenue growth, EBITDA margin, equity ratio, return on equity, and dividend. There is, in average 5 years, we have green light on all our targets except EBITDA margin that we have worked really hard to develop, both to increase sales and through cost reduction. And you can also see 12 months rolling in turnover is a bit more than 700 million SEK here. Next. Third quarter in brief then. Net sales slightly increasing. And EBITDA margin was on a good level, 8.8% during the third quarter. But on the other hand, we have slightly reduced our order intake during the quarter. We also make, yeah, okay, we can take this. I just want to say here in the picture, at the general meeting in October, we also make a decision to make dividend of 0.6 SEK per share. Then we can take next. Here is our country-specific development during the years since we were listed 2014 at Nasdaq First North. And as I said, we changed list 2017 to the main market. So for us, it's small cap. Sweden on a stable level during the years, even if you can see slightly decrease during this year. Depend on the decrease in the project at Sandringeström. Norway with the right direction. They have been in the cellar during 2018, but they are now in the right direction. They have a really strong quarter, both the second and the third quarter this year. Finland stable, even if they are a bit further to our goals. And Denmark, they have delivered on a high level for a very long time, I will say. Next. Yeah, that was all I have to say. Thank you.
So, thank you for your presentation, Bo. You told us about the 9% EBITDA target that you have, and you also mentioned that you will have come by stronger sales, but also by cost savings. Do you have any further strategies that you are working with to reach this target?
Yes, of course we have, but we don't have communicated to the market. So of course we have activities, but for example, in the beginning of this year, there was a cost reduction program in Christian Berner AB, a Swedish company. And we can now see that in the figures, the cost will decrease.
Okay. And you have a broad customer segment here in the Nordics. Can you please elaborate further on which segment you estimate the largest potential within?
Yes, we have some big areas for us and also really important area. And I said it also during the presentation, but water treatment is a really important area for us. And also infrastructure, both for rail, metro, light rail, and also wood house production is a really important area for us. And then also we see really good market situation and demand for our electrical boilers from Sandringeström. So they have a really strong market and they have also a strong market in the future, as I see it.
Okay. You had a quite low order intake. The order intake was relatively weak in the latest. Which segments are behind the weakening, and how do you see the market situation, but also the demand within your respective segment?
I can say the biggest difference compared to the third quarter last year is the heating side in Sandringeström. They have really strong order intake during the third quarter last year, for example, to Belarus. So there was some larger investments postponed this year in gas and energy and also in the process plants. But in overall, the market situation and the underlying demand is relatively good, I will say. And in some areas, even strong. For example, material technology in vibration and also for water treatment.
Okay. And you have managed to keep the net debt relatively low. Can you please tell us about if you have any plans of M&A or acquisitions ahead, and in which area?
Yes, absolutely. The work is ongoing all the time, as I see it. And also, I see a lot of opportunities will also open up in the times we are in. So of course, we will add more acquisitions to Christian Berner Tech Read in the future. During this year, we have made two, for us, important acquisition in the food industry, Empac OS in Norway and Alphatech Sweden in Sweden. So important area, and also areas that we are looking for acquisition is in the water treatment, in the food, and also in the infrastructure business.
Okay. Yeah, thanks a lot, Bo, for your presentation and all your answers. We're really happy to have you here and hope to see more of you ahead. Thank you.
Thank you.
Are you guys ready? 3, 2, 1.
Hello everyone, My name is Axel Engebakken. I'm a tech analyst with ABG. So it's my pleasure to welcome you all to this conference call with Napatech. And together with me, I have the CEO, Ray Smets, and he will take us through an update of the business, and then we'll do a Q&A after that. So with that, Ray, I'll hand it over to you.
Thank you, Axel. And thank you to everybody that's viewing our webinar here. It's a pleasure to be involved in the ABG Investor Day presentation. I'm Ray Smets. I'm the CEO of Napatech. I am currently located in San Francisco. I was hoping to be in Copenhagen this week, but we all know there's a global pandemic going on. It's probably at this stage of the game, getting close to a vaccine, probably best not to push our limits here. So it's great we can do this via virtual presentations. I'm going to review with you a standard and somewhat specialized investor presentation. If we have existing investors, you may have seen some of these slides before. Obviously, I'll keep things simple for our new investors as well. My goal here today is to give you an idea about our business and how we're focusing our business, and what the opportunities look like for success for Napatech. So with that, let's jump into the presentation. Next slide, please. So by way of introduction, we're a Danish technology company. We've been in business since the early 2000s timeframe. We are focused on building something called a smart NIC. A smart NIC is like this device right here. They're small, and I'll tell you a little bit more about them in just a bit. But the business is very interesting for us because these have a very important part of the expansion of applications in the cloud and in data centers. So we'll talk about the validity of this in just a bit. What its purpose in life is to accelerate compute-intensive applications that run on servers. And pretty much the way the market is going, everything is running everything is an application that runs on a server. So we sit in a very, very important part of what we believe is a massive movement in the marketplace towards applications running on servers. We have been in business for quite some time. We have employees that have well over 10 years of experience in technology, building this technology with Napatech. In Copenhagen, we have a center of excellence around building software running on a specialized compute chip in here on the smart NIC called an FPGA. It's not easy to build this software. It takes a lot of expertise. It takes a lot of time, and we consider that to be a pretty important barrier to entry. That, along with some protections that we have with our technology in patents and patents pending, we believe that this technology has kind of a high barrier to entry, and we don't see the possibility of competitors jumping into this market very, very quickly with great success. So we think we're a little bit ahead of where our competition might be. The other thing that's rather interesting about this solution is it's really about the software that runs on the hardware, and we've been able to maintain very high gross margins in our business. I think you'll see that as we get into a little bit of the financials, but it's a highly leverageable business model. We're cash flow positive, we are profitable, and we also maintain very high gross margins, and that's kind of a unique thing about our business we'll talk a little bit more about. We are in a large and growing market. We can't serve 100% of the $2.3 billion programmable NIC market, but we're working to address as much of that market as possible and get as much growth out of that market as possible. And you can see on this slide that we address the needs of many different, very well-known brands globally. We're very proud of our customer list, and we do business with these customers on a regular basis, which I'll also share with you in just a bit. Next slide, please. So as I had mentioned, our focus of our business is around the deployment of these smart NIC cards that you see on the bottom of the screen. These are very high-performing hardware solutions that run software that allows customers to offload applications that run on servers to run on these little cards. So these are really specialized to run applications that are CPU hungry. The benefit of our solution is to make sure that the server runs more effectively and provides better high availability of applications that runs on those servers. All of our R&D is developed in Denmark. Our sales organization is global. We have a few marketing people that span across the European and the American continents. And And we believe that that's also a competitive advantage, that we don't outsource the development to other parties. All of our software that we develop, which is the core competency and the expertise of our business, is managed very, very effectively out of our Copenhagen development center. We do all of our contract manufacturing with a contract manufacturer based in the United States. We believe that is also an advantage. We can manage quality control and we can manage our cost structure very effectively using this specialized contract manufacturer, and we have a lot of scalability as we grow the business. And
I'm sorry to interrupt, but your sound just went off.
All right, somehow we lost the audio there. Sorry about that. Hopefully it didn't lose too much of the audio there. But the secret to success here is the software that runs on this hardware solution. And we're able to maintain prices for different types of hardware solutions between about $1,500 per unit to well over $11,000 per unit, depending on the solution that we're providing. Next slide, please. Every quarter we report how we're doing in the marketplace. We talk about the different types of customers that we do business with. We have two types of customers across our customer set. We have customers that are OEM customers. These are customers that design our solution into their product line and offer that solution to their end user customers. These are OEM customers like Cisco or like IBM or like Corville and other customers like that, where we basically work with these customers to design our solution into their product line, and we have a recurring long-term relationship with these types of customers. As you can see on the left-hand side of the bottom of the screen, these are the kinds of customers that buy products from us quarter over quarter. In fact, from the last quarterly IMS, these are the customers that purchased products from us every quarter over the last 3 quarters of the year. We also do business with end user customers. These are larger customers that deploy our solutions for particular projects, whether it's deploying certain types of open source applications or other initiatives that they need the horsepower within the server that our SmartNICs can provide. These end user customers can be quite large in size. Some customers are reflected here on this slide. Northrop Grumman, for example, in the Department of Defense space. Citibank or Bank of America, Morgan Stanley is often on this list as well in the financial space. We've had end user customer relationships with other financial and other companies such as Facebook, also Red Hat, and so many others in the end user market space. So the balance between those two types of customers is about 70 to 80% of our revenue comes from recurring relationships with OEM customers, and the other 20 to 30% of our revenue comes from end user customers buying the products that we offer on an as-needed basis. Next slide, please. So the problem is quite simple. Everything is moving towards an application running on a server. So everything that used to be built for hardware as a hardware solution is now becoming a software solution that runs as an application on top of a server. But the servers aren't getting any faster. They're not getting any more capable. The compute capability on the server basically is beginning to flatten out. And that's what you see on the black kind of arrow on this slide, that the standard compute platform is really becoming horizontally deployed. The goal for the people deploying those servers is to keep those costs as low as possible, but the processing requirements needed by applications isn't going down, it's going up. So the problem that exists within this particular part of the market is how do you get more horsepower over on your standard compute platform without increasing the cost of the standard compute platform? The solution is essentially by adding a SmartNIC. The SmartNIC basically fits into the server and basically provides the horsepower necessary to run the applications on those standard open servers. Next slide, please. So really at the end of the day, the goal here is that the SmartNICs are used to accelerate applications on the standard open servers. The benefit to the end user is they achieve faster application performance for business critical applications. They get significant capacity improvements from increased data throughput needed by these applications. It frees up many different aspects of the data center. You need less servers, you need less server CPUs, you need less floor space, you need less energy consumption. And that is the underpinnings of the improved TCO that customers get from deploying our SmartNICs within their standard open server environments in their data centers. We do business across many different sectors within the marketplace that can consume our product and are deploying in data centers. That's in the cybersecurity, monitoring, infrastructure, cloud and edge, mobile and financial sectors. We talked a little bit about some of those applications just a few moments ago by looking at some of the brands that buy our products. And at the end of the day, the use cases are varied. They use our solutions basically to accelerate applications that require a lot of compute, a lot of CPU horsepower. And those applications are used across network monitoring and cybersecurity primarily, but in many different application segments. Next slide, please. What's driving the market are megatrends. And we've heard about these megatrends from the industry analysts that are reporting on them. But basically, as I had mentioned, we see a massive movement of network architecture going from hardware designs to applications running on open servers, so a software-defined network architecture. So the catalyst for the market that we exist within is that networks are being built in very different ways today than they were 10 years ago. Networks are being built as a massive deployment of servers with applications that run on top of the servers. So the horizontal market that we address is every single server has multiple slots where SmartNICs can be deployed. And the goal here is to run more intensive compute applications on those standard open servers on top of these SmartNIC cards. So the NIC market is growing because the server market is expanding dramatically due to the mega trends that this market is addressing. So we have a very, very nice fit within a extremely large potential for growth in the markets. So next slide, please. Just to give you a sense for how we fit within the total market, if you look at the total NIC market, which is it's a very broad market. There's three kinds of NICs that are being developed. The basic NIC and the offload NICs are two categories of network interface cards that have been around for a number of years. Those are dominated by very, very large companies like Intel, Broadcom, and Mellanox, where they own the majority of the market share in the basic NIC and the offload NIC markets. But the newest part of the market is the programmable NIC market, and that is the market that we address. This is the market that maintains a much higher cost and higher gross margin, if you will, from the product that we provide, because it provides ultra high performance and functionality. So we tend to sit at the very high end of this market where NICs are being deployed that have a specialized requirement for running applications much, much faster. Therefore, we can command a much higher price point for our NICs. And really the special, if you would say this kind of specialty that's being provided in the programmable NIC market is around the word programmable. The basic NIC and the offload NIC markets are hardware. And they're pretty much the capability of those solutions are really hardware-based capabilities. The unique capabilities within the programmable NIC market is that everything is based on software. So our ability to develop features, functions, and meet the needs of the ever-changing market is all software-based rather than hardware-based. So we tend to focus a little bit on the actual physical hardware design of this solution, but the real secret to our success in getting into this market and growing is really around the software aspect of our business, and that is what we're most proud of. That is really the secret to the Napatech success. So we've been able to attain a top 10 position within this very large market. We're number 9. And you can see we sit amongst some very large brands within this particular market. And I'd like to dive in a little bit more deeply into the programmable NIC market on the next slide. So the slide I just showed you was for all of 2019. This is specifically for the data presented by industry analysts around Q2 itself. You can see in the programmable NIC market, we compete with the likes of Marvell and Broadcom, which are shown on the right-hand side of this pie chart. But it's worthy to note on the left-hand side of this pie chart, a very large player in this particular market noted here is Microsoft. Microsoft Azure has made a decision to deploy smart NICs within the Microsoft Azure domain. They have selected a solution that includes a chip that's on the board called an FPGA, which is the same chip that we use to develop our software, but they only use the product themselves. So they're included in the market, but they're actually self-build and self-consumer of this particular solution, but they are included in the market for market share tracking purposes. So they do not sell their solution to other customers. On the vendor side, the second half of this pie chart are vendors. These are companies who build their solutions for others to consume, like Napatech does. Napatech sits as the number 3 position of the vendor side of this particular market, with about 5.2% of that market behind Broadcom and Marvell. We have a solution that we focus on that is called an FPGA, which is a specialized super high performance chip that we build onto our hardware solution, and we build all of our software to run on that. And it gives us a special capability to provide specialized software capability to accelerate applications in the network and the cybersecurity domain. So we're very happy with the solution. The FPGA is the predominantly used microprocessor chip in this particular part of the market. And Napatech is the largest provider of software on the FPGA that sells to other customers on the vendor side of this market. So we're very happy with our position here. And the reason why we like to show this information is to demonstrate that we have a lot of room to grow. Next slide, please. So if we stack all of the 3 parts of the NIC market up, you can see the basic NIC is the blue box is here. The offload NIC is the green part of the market. The orange part of this bar chart is the programmable NIC market. And you can see currently in the last year, it was about 400 million of a 1.7 billion total market in 2019. If you just look at the orange box alone on this chart, it's intended to grow to about 2.4 billion of a 4.5 billion total market. It is the fastest growing part of the NIC market. It is the market that's addressing the need for the faster application compute needs. It also maintains a higher price point. That's why we're seeing a much faster growth rate as reported by industry analysts. That is the market that we're focused on. And once again, the intention of showing this is to demonstrate that we do have sufficient headroom for growth within this market. And we hope to address that with the solutions that we're building. Next slide, please. I'm not going to go through too much detail about our Q3 financials. There's a lot of information in the public domain about our Q3 results. But on the next slide, please, I just want to point out a few things about how we're doing in 2020. The company is performing quite well. It's nice to see as a public company at the size that we are a growing company with a significant growth rate. In Q3, we had a 22% growth rate over the prior year. We're profitable. We have gross margins of roughly 71 to 72%. We have positive free cash flow, and we have positive and growing EBITDA and EBITDAC. So our positive year to date so far, we have positive earnings. And this is a very good place for us to be. We promised, and we have built a leverageable business model, keeping our operating expenses in check, but growing the top line significantly, and that's generating some very positive results for the business. And next slide, please. The next couple of slides are really intended to show what the year-over-year growth rates look like for revenue and cash flow. And the next slide also presents a bit of the same kind of story for EBITDAC and overall earnings. So just to show that the performance of the business has been quite positive, and we continue to feel very confident about our business as we're going through Q4 and planning to go into 2021. The next slide, please. Just a quick note about our outlook. Our guidance for 2020 has been noted and published. We have plenty of information out in the open domain, public domain about this. We are feeling very confident about our ability to hit our guided ranges. These are all upped since the Q2 IMS, and we're very confident about our ability to achieve results within these ranges for the full year of 2020. So next slide, please. In summary, just to bring this to close within the 20-minute allotted time, we feel like Napatech provides a very interesting investment case for investors. Both existing and investors are buying in on a significant growth potential within a very important part of the overall server and application market. We're stable and we're growing. The company is doing quite well. We have stable employees, we have stable customers, we have a growing marketplace, and we have a lot of work we're doing to address that market and grow. We have positive revenue, positive cash flow, and positive earnings, and our expectation is we're going to keep it that way. The market potential is exciting. We're participating in a very technical way in a very interesting marketplace that can attract revenue from many different sources and customers globally. It's not impossible to be impacted by things like COVID, but the good news, COVID has been more of a positive than a negative for a company like us, and we think we have very exciting market potential. We're a super innovative solution. It's all about the software, and we're winning some very important customers around the world. So with that, Axel, I'll turn it back over to you and see if there's any questions I can address.
Yes, Ray, thank you so much for that presentation of the business. It was very insightful. So a few questions. So you have an extremely impressive customer list, just looking at the logos that you deliver products to. And you have products with an ASP of $1,000 and above, but still you're quite a small company with about 200 million Danish kroner in sales this year. So I'm just wondering about sort of the sales potential to existing customers over the coming years. Do you expect to see higher sales to existing customers, or are you sort of dependent on winning new logos? Because from my point of view, it looks like the potential based on the customer base you have in place seems to be really large. Can you talk about that, please?
Yeah, sure. It's a very good question, and you're right. We expect our existing customers to grow within their respective marketplaces. We don't run their channels to the market. We don't actually have a lot of intimacy with their end user marketplace. We're obviously building technology that gives them the potential to be more competitive within their respective markets. But based on our expectations within those respective markets, our strategy for growth really comes from two primary sources of growth. Existing customers, which we have a very close and intimate relationship with, which obviously delivers a lot of revenue to our business currently, to enrich the product line within those respective customers so that they can address their market more effectively. So every single OEM relationship we have, which is a rather intimate recurring relationship, we always look to do what we call land and expand. We land into one particular design win, and these companies tend to be quite large. We look for other ways to expand our position within their respective product lines. And once a company selects a SmartNIC, like Napatech SmartNIC, it's easier for them to select Napatech again. So we look to expand our position. But we don't just rely on our existing customers to grow. Of course, we're looking to expand our customer relationships beyond our existing customer base and add new customers to the list. The way we get new customers is through either direct sales or channel relationships that attract new end user customers and OEM customers. We are constantly building new designs for new customers to get new OEM customers, as well as sell solutions to end user customers, so we can grow our revenue by adding new customers as well. And just one other point to note, we're not selling the same product and hoping for success. We're actually expanding our product line. So our initial product line that we've been building over the last 10 or 15 years is what we call a packet capture product line. It sounds very technical in nature, but we've expanded the packet capture product line to go into 2 new areas of the market, so we can address a bigger piece of the pie. We feel very confident about our early success there, and we're hoping that that will add to the growth vector for us over the next couple of years.
Yes, thank you for that answer. And I will do a follow-up a question on the product roadmap, because I know that you have been investing in the area of virtualization solutions, and I think personally that this is a really exciting opportunity. And could you talk about sort of the timeline there? Could we expect some additional sort of positive contribution from that maybe during 2021, or is it longer time down the road, or could you give an update there?
Sure. We embarked on a new development initiative around 2 new product areas approaching about 2 years ago. We announced these intensive development efforts in Q4 of 2018, and this was an important direction for us because it takes a while for customers to actually consume new products like the SmartNIC. They have to design it into their solution. So we embarked on the development of 2 new areas of development. As Axel mentioned, one of them is in the virtualization domain. The virtualization solution, case in point, is intended to sell into larger scale network deployments where all of networks are being virtualized, moving from hardware architectures to software architectures. And when you virtualize network architectures, there's a role for a SmartNIC. The role that we have chosen to play in that space is to accelerate the switching components within these new virtualized network infrastructure deployments. And as you know, this part of the market tends to move very slowly initially and then moves very aggressively once all the standards are set and all of the architectures are cast in stone. And we're playing at the right time to address that market so that we can get growth in the long term. So we feel pretty good about the fact that we're in a couple of labs. We are currently working with some key customers. We would fully expect that those revenues would be beginning to emerge in the 2021 timeframe.
Okay, and I will sum up then the 2 former questions with one final question, because you seem to be positioned in a market where there are some exciting trends and catalysts emerging, which you touched upon, 5G, for example. You seem to have a product roadmap that will expand your product portfolio to existing customers. And you seem to already have a very good platform to sell your future solutions with the OEM base and customer relationships as well. So despite the fact that you have delivered solid financial performance year to date, when we look down sort of the road, it seems like the opportunity will be even better for the next few years. Does that mean that we could expect sort of financial growth to accelerate from the current level? What do you think about that?
Yeah, it's of course our expectations are that we'll see accelerated growth. We have published our aspirational growth model. We did this about a year ago. We intend to update that after we finish Q4, and we have a full year to review and cast our next 3-year aspirational growth model on. Our last growth aspirations demonstrated that over a 3-year period of time, we would see 20 to 30% growth in revenue. But we would maintain only about a 10% growth in operating expenses, and that our gross margins would be manageable and maintained at the 70% range, or maybe even slightly better than that, even over the 3-year period. So we feel pretty confident that the investments that we're making in the different areas of the marketplace in what is a growing market, growing much faster, by the way, than 20 to 30%, but we're addressing a part of that market that we believe that Napatech can address using our channels to the market, using the technology that we have to become relevant within that market. We currently have aspirations to do better than that, but we have to establish a realistic point of view on that. So we think 20-30% growth in revenue, 10% growth in OpEx, maintaining a profitable posture in the marketplace, and maintaining high gross margins is a realistic expectation for this business.
Very good. I think that was a very good wrap up from your side, and I think that with that I will thank you, Ray, for a very insightful update on the business, and I will also thank everyone who have participated and watched, and I will just leave the word with you for a final message to the participants.
Well, thank you, Axel, and I want to also thank you for your assistance here with today's webinar. Thank you to everybody for participating, and we look forward to providing more information if you have that interest level in Napatech. I hope you have a great day.
Thank you all.